some of the other proposals for whether companies get included or not have also become more strict. So the top one there, 2 years of profitability companies will need to be in the DAX. Now, this is important because it will affect members like Delivery Hero, who has yet to post 1 year of profitability. It's a little bit ironic because Delivery Hero was added into the DAX after Wirecard was pulled out. And this, of course, is in part a reaction to Wirecard lingering in the index for so long. Some of the other things they've decided, companies need to have a staffed audit committee. Now, this rule takes place March 2021, but for companies already in the DAX, they have until the year after to get that to comply. So this means companies like Merck, which currently do not have the staffed audit committee that the DAX is requiring, they certainly have time to put that in place. And Anna, just finally, one of the interesting proposals that was rejected was a ban on companies who deal with controversial weapons. The DAX really deciding here, Contigo, its operator, saying that a lot of participants raise the general question whether such criteria should play a part in the selection of DAX constituents. In other words, does it make sense to have ESG in a benchmark index? The final vote said no, that such things belong in a specifically ESG index. However, again, we need to emphasize the DAX here is taking other approaches, other requirements, such as needing 2 years of profitability to be in the index, Anna.
Danny, thank you very much. Danny Berger joining us there with the latest on the things that are changing about the DAX and its listing rules. Now, the official transition to a Joe Biden White House is finally underway. This is something that is pushing up risk assets this morning. Donald Trump says he's instructed his team to start the process after the U.S. agency in charge acknowledged Biden as the winner of the election. That's as Biden plans to nominate Janet Yellen as Treasury Secretary. She spoke about the need for fiscal stimulus at Bloomberg's New Economy Forum.
The notion that the Fed can do all that is required at this point to support the economy is just wrong. And the Fed is really pleading for fiscal relief. I believe it's essential.
Joining us now is our senior editor, Derek Wallbank. We were just listening there to Janet Yellen talking earlier this month about the need for fiscal stimulus, Derek. And some people are joining those dots and suggesting if she's at Treasury, that'll be easier to deliver. But she'll still have to be working with a Senate that has seemed hesitant and could still seem hesitant after January. We have to wait and see what January delivers.
Yeah, and I think you've set that up exactly right. And, Republicans look like they might keep control of the Senate. There's an outside chance that Democrats could force a tie that maybe Kamala Harris could break. But in either case, you're talking about a situation where Republicans are definitely going to have to, at the very least, be at the table. Democrats will not be operating with some sort of universal control of Washington that, they have error-proof margins and can kind of do whatever the heck they want to do. That's just not going to be the reality. So pretty much everything that you want to do if you're Joe Biden's administration has to start with the fundamental construct that Republicans need to be on board in some way, at least some of them.
And if it's certainty that markets like, Derek, then one bit of the jigsaw puzzle in terms of the handover seems to be slotting into place overnight, and that's adding to appetite for risk assets in this morning's session here in Asia. We are essentially seeing an acknowledgement from the White House that some sort of transition has to start to take place. This is quite significant.
Yeah, it really is significant, and I mean we've talked for a while, you and I, that Joe Biden is the apparent winner, and he was going to be president at the end of January, and all of that. But there really have been a lot of challenges that the Trump campaign has put forward, and they've really dragged their heels on the transition part of this. Look, I mean, even the acknowledgement from the GSA was couched in a lot of ways. Donald Trump is clearly not conceded, doesn't plan to concede anytime soon. So there's still, this process is still dragging on, and the transition is a bit later, but you do get some of that certainty. I think the other point of certainty that I would put forward, and it ties back to Yellen, is the fact that a lot of these names that you're seeing fleshing out the Biden administration are very, very well-known names. These are names that don't necessarily spook people. They're people that they understand, that are really viewed as competent above all. And I think that this idea that Biden sort of campaigned on a return to normalcy and is now fleshing out his administration with figures that may very well be able to carry that mission out because they've been in these situations before. They know what they're doing. And whether you agree with them or not, they sort of project this competent vibe, and I think that markets are responding to that.
Certainly, if many are in the mould of Janet Yellen, they're certainly well-known entities, aren't they, to market participants. Derek, thank you so much for your contribution this morning. Senior editor Derek Wallbank. Minutes away from the market open, some of the things we were just discussing there with Derek, lifting overall sentiment for risk assets. Up next, we'll dive into the individual stocks to watch, though, including Novartis, as the pharma giant plans to buy back up to $2.5 billion of shares. More on that next. This is Bloomberg.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
I'm certain that we will be able to bring our debt levels down and avoid what you could call a debt crisis because we're focused and we've been open enough by telling the nation that we have too much debt.
We're minutes away from the market open then here in Europe. 6 minutes, in fact. Let's get your stocks to watch this Tuesday morning. Danny Berger joins us with details. And let's start with the aviation sector then, Danny.
That's right. Well, airlines might be doing much better today, Anna, given that the UK government has proposed shortening the quarantine period from 14 days to 5 days. That is if people test negative for coronavirus within that fifth day or after. We also spoke to KLM CEO, who said that the vaccine is very positive news for the industry. Novartis also planning a buyback of $2.5 billion, saying its new pipeline of drugs will fuel sales, on track to deliver $2 billion in cost savings by year end and another $2 billion in the midterm. And if I can go back and correct what I thought would be a stock to watch, but it seems it will not be, as Delivery Hero. I mentioned before it might be excluded from the DAX because of that 2-year profitability requirement. Our very own Lucas Strobel pointed out to me that's for future members, not for current ones. So that won't apply. Anna?
OK, important clarification and correction. Thanks very much for that. Danny Berger with your stocks to watch. European equity markets set to open higher. This is Bloomberg.
Once it goes into this plant, it's heated up very quickly to 600 or so degrees. It basically carbonises it, turns it into a carbon-rich material. Obviously kills all of the pathogens.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
A minute to go until the start of cash equities trading. Here are your headlines. The transition begins. The formal switch to the administration of Joe Biden begins. Stock and futures climb. The dollar slides. The president-elect looks set to nominate Janet Yellen, a supporter of more fiscal spending, as his Treasury Secretary. If confirmed, she would be the first woman to hold the position. Plus, the DAX gets its biggest makeover since its inception, increasing the index to 40 members, but with tougher rules on reporting and profitability. Good morning, everybody. Welcome back to the programme then. Just coming up to 8 o'clock here in London, looking for the start of the European equity trading session, and futures certainly suggesting we will open to the upside. There are some political pieces falling into shape, or falling into place, it would seem, in the United States that mean that markets just have a little bit more certainty to play with. The transition process from President Trump to President-elect Biden seems to be getting underway, and the White House seems to be acknowledging the need to do that, and that seems to be fairly significant in the market's thinking. Also, consideration being given to who President-elect Biden is going to have around him. What kinds of people, what kind of Treasury Secretary, with what kind of attitude towards fiscal spending and concern around inequality. And certainly that is part of the conversation. What freedom the Democrats will have, though, given the makeup of the Senate, is another complicating factor. So European equity markets, with all of that in mind, getting underway, moving to the upside, up 0.8% on the Stock 600. The FTSE 100 up by around 1%. The CAC 40 opens up by more than 1%, as does the IBEX over in Spain. As we heard from our colleague Danny Berger earlier, we were looking for some key names in the pharmaceutical space, certainly around share buybacks in Switzerland, and for AstraZeneca as well, looking to see whether our reporting around severe COVID, whether that will move at all. The AstraZeneca share price, I can tell you that one is up by 1.8%. Novartis in Switzerland up by 1.4%. So that's a bit of a focus this morning. But the broad picture story is around US presidential transition. European markets opening higher. That is as the Biden transition gets formally underway. The president-elect is planning to nominate Janet Yellen as Treasury Secretary. She spoke about the need for fiscal stimulus at Bloomberg's New Economy Forum earlier this month.
The notion that the Fed can do all that is required at this point to support the economy is just wrong. And the Fed is really pleading for fiscal relief. I believe it's essential.
That was Janet Yellen, of course, making the important point that the Fed can't do everything. Ben Gutteridge, Invesco EMEA Director of Model Portfolio Services, joins us now. And Ben, what's interesting about hearing Janet Yellen make that point, of course, her experience at the Fed, leading the Fed. But now if she finds herself not using the Fed's tools, but using a totally different toolkit, if she finds herself at the Treasury and able to move policy in the fiscal direction, does that increase your expectation for what can be done, or what will be planned to be done, at least fiscally, in the US?
Well, it was a pretty emphatic statement and what a voice of authority on the subject. So I think at the margin, yes, it does encourage us that a meaningful stimulus package can be put together. But I say at the margin, clearly Janet Yellen's appointment doesn't alter the mathematics in Congress. And so Republican senators still likely to behave in keeping with their ideology and be a bit more obstructionist to a larger package. But at the margin, yeah, I think the market's right to cheer this news.
And what do you make of the need for it? I mean, we've talked about fiscal stimulus a lot. We talked about it a lot in the run-up to the election when everyone was talking about whether there'd be a blue wave. It seemed to be September's big theme, didn't it? And into October as well, whether we'd see that big wave. That was good for risk assets. It was negative for the dollar. But now we've got more data to play with. I wonder if the thinking is evolving. So US November PMIs coming through and for some people suggesting that there isn't quite the need for fiscal stimulus on the scale that maybe the Democrats have previously been talking about. Others disagree. What would your thinking be around some of the better data we see coming out of the US and how that changes the fiscal narrative?
Well, you're right. Some of the data does support the more hawkish elements in Congress, but I think the aggregate data and the forward-looking data does suggest stimulus, and quite a reasonable scale stimulus is still needed. I mean, you sort of look first to the COVID data, and it's really quite troubling in the US. Of course, we have great, fantastic vaccine news as we look into sort of spring and summer next year and what that can do for the economy. But between here and then, the US economy, US consumers likely to be really under some strain in the absence of any fiscal stimulus. So I don't think the need for a scale package, a reasonable sized package, has gone away, and which is why I think it's sort of good news that Janet Yellen is going to be campaigning so hard for it.
Do you think, Ben, that the US consumer looks challenged at this point, or will be challenged through the winter then? Is that going to be the piece of data that people rely on to assess what more needs to be done on the fiscal front?
Yeah, well, thanks for teeing me up on the consumer. I should have mentioned in my last answer, actually, as I said, the data is mixed. There's something for the hawks, but there's something for the doves in there as well. I mean, retail sales were pretty weak, pretty disappointing. We see the savings that have been accrued through the summer as a result of the CARES Act, the fiscal stimulus, that's going to start fading as that's sort of spent to maintain spending patterns and standard of living. And so the US consumer, faced with depleted savings, but also a more worrying societal rate of infection, I think is going to see consumer confidence dip, and that be reflected in some of the sort of retail leisure type data. So I think the consumer, not such a rosy outlook in the short term.
Yeah, so if that's the backdrop then, and this conversation is starting on the US, but thinking, I suppose, about your portfolio now then, Ben, if that's the backdrop, what does this mean for any pivot based around vaccine news away from technology, working from home stocks, and into value, travel, leisure, banking and other areas? Where do you stand on that debate at this point?
Well, I mean, that is the question to ask. I mean, there's some subtlety to the answer in that we are moving towards that reopening trade as we see the fantastic data from the vaccine and the platform that gives the economy to reopen and those beaten down sectors, in leisure and retail to perform. But offsetting that, we've talked about some of the growth challenges that lie ahead in the short term. And of course, the pandemic has really sort of cracked open, I think, some old spending habits and accelerated those secular trends towards, online purchases, e-commerce, the digitalization of everything. So the reopening of the economy wouldn't necessarily mean that we all sort of rush to the shops. Maybe we're a little bit more sort of a germaphobe about it. And also we will have enjoyed the luxury of online spending. So I think on balance, we still retain favour for the growth sectors, but at the margin, the move is towards those value beaten down sectors.
Ben, we'll get more of your thoughts on this very subject shortly. Ben Gutteridge, Invesco EMEA, Director of Model Portfolio Services. Ben stays with us. As I say, we'll get further thoughts from him with regards to how you position the portfolio at the moment, given the vaccine news flow. Coming up on the programme, IATA sets to work on an app that could streamline post-COVID travel. But just how is the industry going to fare until then? We discuss. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
The fact that we do have vaccines available within the near future is a very positive thing for the industry. Then we need to look what are the local rules and regulation and legislation country by country by country. And I think the vaccine will definitely help to restore confidence in travel. I think it's a bit premature now to say whether it should be mandatory on board of our flights or not.
Those comments then coming as IATA revealed that it is working on an app-based travel pass which will link passengers' test results and vaccinations to an electronic copy of their passports. Travellers will be able to present a QR code to border authorities, allowing for shorter quarantines. But of course, the vaccines need approval first. Ben Gutteridge, Invesco EMEA, Director of Model Portfolio Services, is still with us. This is just one example of how one part of the economy, a really beaten up part, the aviation sector, Ben, is trying to deal with this themselves, trying to put in place plans around vaccination. What are you doing with exposure to some of those most beaten up sectors then? We talked about this a little bit. Are you wholesale ready to get into leisure and travel stocks, or are you just adding a little bit of that around your other holdings?
Well, we are adding a little bit of it, if you like, recognising that some of these beaten down sectors actually don't need a tremendous amount of recovery in order to realise some of the value that lies within them. Clearly very cheap stocks that will need a catalyst. And of course, we have it loud and clear in the form of a vaccine. It's the degree to which those stocks can run, however, that gives us caution in relation to getting sort of full pedal to the floor in transitioning a portfolio across to those types of sectors, as we worry about perhaps some over-enthusiasm as to the speed to which an economy may return to sort of quote-unquote normal or past behaviours in terms of willingness of not just consumers, but of course businesses to sort of spend on travel and long-haul flights and such.
Mm. Yeah, we certainly had some cautious words from the chief scientist at the WHO early on in the programme, Ben, about how long we're going to have to live with this pandemic for. I noticed that you, as well as being talking about taking on some more exposure to leisure and retail stocks, you also like healthcare. And I think it's interesting because the better news we get on vaccines, the more people seem to pivot away from healthcare. And so the companies that are delivering these incredible achievements for humanity, maybe not rewarded. Or is the picture more complex than that? What is it about healthcare that you like?
Yeah, well, I mean, I guess the headline acts in relation to the vaccine, I think markets and investors would be sort of looking beyond that, wouldn't really necessarily be chasing those players, but would be looking through. Now, clearly, there's a great willingness to sort of spend and great need to spend in this sphere to, protect humanity. And the valuations clearly haven't got as stretched as they have in some other growth areas. And you think about technology, a sector we like, but clearly healthcare not as expensive as that sector. But in relation to the vaccine, clearly there is some concern, some regulatory concern about drug pricing. And, you may actually get a bit of a reprieve for this sector, not only because of the difficulties to pass policy in the US Congress, but of course what they've done in relation to the speed of delivery of the vaccine and the testing and also all associated sort of medical procedures in the face of this, wretched virus. So there's a bit of sort of goodwill, we would have thought, for the sector from a regulatory level. So there's good earnings growth, decent pricing, and not such a regulatory cloud that, keeps us enthused for the sector.
Mm. That's an interesting thought, isn't it, about the goodwill involved there, and certainly a share buyback from Novartis helping the sector today. Let me ask you about value stocks then, Ben. So when you want to get involved in value stocks, are you looking to the sort of poster child banks, or do you not think the yield curve is steep enough for that? Do you look to other parts of the value space to get involved?
Well, we'll have a sprinkle of everything because investing is difficult, and clearly there is upside to the banks. They're looking pretty cheap. The growth outlook outcomes could be far better than we're anticipating, which would encourage a steeper yield curve and be great for bank interest margins, less loan loss provisions. That'd be a great backdrop, or a very good backdrop for the banking sector. However, it's not quite in our core view that we do get a steeper yield curve. Even in the face of better growth outcomes, it appears as though the central banks are pretty committed to sort of anchoring interest rates, certainly long-term interest rates. And it's difficult for that interest margin story to really capture the imagination or the thought of investors or excite investors. Yes, there's other good news supporting banks, as I said, such as valuations, but it's hard, it's difficult to get overweight that sector given that backdrop. So given we are getting more excited about a reopening trade, it's more sort of industrials and, I guess a bit of sort of leisure and retail at the margin as well. But for banks, we're a little bit more cautious.
OK, so more industrials, a bit more cautious on banks. Where does that leave you on tech then? Because clearly that's been such a strong trade for 2020. Is it US tech that you favour, some of the lesser mentioned European names perhaps, or do you go to Asia and Chinese tech and thinking about the global regulation urge and where that's got to?
Well, I think we would go everywhere for our tech exposure, but you would predominantly lean into the US and thereafter Asia, some way behind then Europe. Clearly, we think these have been great beneficiaries of the lockdown trade. And as we look to the reopening tailwinds, of course, checkered to a degree, as I said, by sort of escalating COVID data and worries in the short term about the absence of the fiscal stimulus. So it's not a clear cut, it's not a slam dunk that tech takes a bath in the next few months, but clearly there are challenges. But beyond that, we look to the sort of secular growth story and the trends of consumers and businesses, and it still supports the tech sector. Of course, valuations are a concern, but in the absence of tighter monetary policy that really is some distance away, it's hard to see these valuations, coming under pressure. And indeed, they're sort of well supported. So we like the tech sector globally.
Thanks so much, Ben. Really good to speak to you. Ben Gutteridge, Invesco EMEA Director of Model Portfolio Services. Ben will be continuing his conversation with us on Bloomberg Radio at 9 a.m. UK time. So that's where I head straight after this programme. Let's get a Bloomberg Business Flash for you. Some of the top corporate stories that we're covering today at Bloomberg. Carsten Block of Muddy Waters says he believes Chinese live streaming company Joy is worth nothing. The short seller is accusing the firm of acting fraudulently, saying the majority of its revenue is fake. He's calling for stricter rules. The company, of course, has pushed back against his comments.
If we can't regulate them and they're ripping us off, and it's easy to find these case studies just, tick by tick where they're ripping us off, we need to delist, because otherwise this is a total joke. And what's the point of the market?
And as I say, Joy rejects the allegations. Last week it said it believes Muddy Waters' report contains numerous errors and that the short seller lacks an understanding of Chinese live streaming. The UK is considering banning the installation of Huawei's 5G technology as soon as next year. Bloomberg sources say that's to appease lawmakers pushing for tighter restrictions on the Chinese telecoms giants. We're told a ban on the parts could increase costs for BT and Vodafone and force them to speed up an overhaul of their networks. That is your Bloomberg Business Flash. Coming up on the programme, the transition begins. Joe Biden is formally designated the apparent winner of the US election, allowing preparations to move forward. This is Bloomberg.
Sony's PlayStation 5 went on sale Thursday, and the company hopes it'll become a long-term cash cow. It's a key test for the Japanese company amid the pandemic's gaming boom, and it goes head-to-head with Microsoft's new Xbox. Both consoles have seen solid pre-order sales. The previous console sold 113 million units.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Markets don't like uncertainty. They like certainty. They know what they're likely to get with Janet Yellen as Treasury Secretary.
Most important agenda for a Treasury Secretary now is the economic recovery, and she is an economic recovery specialist.
As Treasury Secretary, she has far less autonomy, for lack of a better word,
to control the narrative the way that she did at the Federal Reserve.
I'm hoping Janet Yellen takes a page from good Treasury secretaries like Jim Baker or Robert Rubin, even Alexander Hamilton, get a musical play named after her.
She would be inheriting this Treasury position at a really difficult time for anybody in that position. So we're far from over. These are sobering times for banks, for the markets generally, for individuals and corporations.
She's going to be much more subject to the political winds in Washington. And for all her esteemed accomplishments, I don't know that we know how well she can navigate those political waters, choppy as they may be.
The financial markets, banking, regulatory, these have never been her forte. Remember, she's a University of California, Berkeley trained labor economist. And I think that is where the greatest appeal is.
Those were some of our guests commenting on Joe Biden's decision to nominate former Fed Chair Janet Yellen as Treasury Secretary. Really fascinating comments there. She would be the first woman to hold the job if indeed it comes to pass. This comes as the official transition to a Joe Biden White House finally gets underway. Donald Trump says he's instructed his team to start the process after the U.S. agency in charge acknowledged Biden as the winner of the U.S. election. Joining us now is our senior economy reporter, Michelle Jamrisco, who can talk to us more about the pick of Janet Yellen for Treasury Secretary. How is Yellen going to be received by markets? How typical a choice is she for Treasury Secretary then, Michelle?
Yes, good morning. I would actually think that she's pretty atypical in a lot of ways, not just being the first woman in the post, if confirmed, but I often think of her not as a creature of Washington politics. It really strikes you when you meet her. I think of two A words that a lot of people have been using about her, and that is academic and apolitical. We know that she, of course, had a former professorship at UC Berkeley. She's a celebrated labor economist in her own right, aside from her work at the Fed, and really apolitical. I like how our international economy editor, Kathleen Hayes, put it earlier today, saying that Yellen isn't seen as pro or anti-bank, but always trying to ensure the health of the banks, which is a welcome message, I think, to markets, especially who are looking for more stability from policymaking these days. And here you have someone who has been through a crisis, who has navigated the aftermath of the global financial crisis from the U.S. side. So she's very familiar with the sorts of tools and things that need to get done. We do see, of course, some positive initial market reaction, and we're hearing voices from across the political spectrum. My inbox is full of economists, including some more on the right-leaning side, that appreciate this pick. And former Trump team member Gary Cohn has also welcomed it as a smart choice. And it's notable that she would be a rare Fed chief to assume the role. I think, we've had some who have come from the Fed. Timothy Geithner, of course, is one that was at the New York Fed. But previous to that, there are just two Fed chiefs in history who have served as Treasury Secretary also. So aside from her Fed chops, she's also been able to avoid some of these lines of criticism that some of her would-be predecessors have had on the job. I remember from reporting in Washington, there was some criticism around Hank Paulson for being too cozy, given his time at Goldman Sachs with the markets. And then Jack Lew, of course, under the Obama administration, was seen as lacking foreign policy experience. So that's certainly not a weakness of Janet Yellen's having been at the Fed.
Okay, she's still going to be busy, isn't she? What will the priorities be then in the administration? A lot's been made of the comments she's previously made around fiscal stimulus.
Yeah, of course. I mean, and that's the interesting part, too, is that, of course, she's been joining this chorus of central bankers and former central bankers across the world that are saying, we've done all this heavy lifting and fiscal policy has not done enough to kind of carry the load in this economic recovery. Certainly hear that on the U.S. side. And so now, President-elect Biden is now handing, Janet Yellen the power to make her mark on that issue, to be involved perhaps in negotiations on the Hill over further stimulus on the U.S. side. And another thing that we've mentioned, and we posted this on the Markets Live blog earlier today, is she's likely to get her hands dirty on some of these inequality issues. She talked often when she was head of the Fed about, lamenting that central bankers don't have that power to get at certain parts of the economy that are most vulnerable, that's really a fiscal policy thing. And now she will have that power. And so she might get involved in tax policy and regulation and the like. And that could provide some more excitement for markets in the future.
Yeah. It's a good story already, isn't it, Michelle? We heard one voice earlier on talking about the possibility of Yellen the musical. I wonder if Lin-Manuel Miranda is working on that one already. Certainly, such a CV. It's going to be interesting to watch. Senior economy reporter Michelle Jamrisco with the latest on Janet Yellen. Up next, bigger and stricter. The DAX is undergoing its biggest makeover since its inception. We will break down what is changing. That conversation coming up next. This is Bloomberg.
Well, the main instruments on board include a dual frequency radar altimeter. This is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements we can actually have the superb measurements that we expect of sea level rise, but also the waves. The significant wave height, which is the top 1/3 of the waves if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters, which is not negligible.
Chinese capital market, as you know, is nascent, is just developing, and so we think there's an opportunity to build out that. But that's not all. We're also focused on continuing to build our presence in the Greater Bay Area. It's been a good business for us.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures, and we did see some pressure on the futures. That is now being reversed.
Welcome back to the European Market Open. 30 minutes into Tuesday's trading session and things moving to the upside. A little bit more certainty politically in the US seems to be adding to that risk-on movement this morning. So the Stoxx 600 up 0.7%. The IBEX and the FTSE MIB make decent gains at the periphery. Both of those up by more than 1%. Let's get to the individual movers. Some of the stocks we've been keeping an eye on. IAG is an important one to track in the travel space. That stock up by more than 5%. England is cutting the quarantine period for arrivals from those countries it deems to be high risk, and so that is pushing that stock higher. H&M has been raised to buy at Goldman, and that stock is up by just shy of 4%. And keep an eye on Pets at Home. That stock down by 9%. The company is saying that it sees its full-year underlying pre-tax profit in line with the prior year, and perhaps when everybody you know is getting a dog, that is not enough. That is where we are on these movers then. Pets at Home, as I say, down by just shy of 9% this morning. Let's get a First Word News update. Some of the top stories that we're covering here at Bloomberg. Back to that story that I mentioned that is driving some of the momentum behind IAG. England's national lockdown ends next week, but Prime Minister Boris Johnson says it will be replaced by a tougher three-tier system of regional restrictions, which will last until the spring. Hairdressers and gyms will be able to reopen, but in areas under the tightest curbs, restaurants will be takeaway only. More details are due on Thursday. The surging coronavirus is stoking fears of a fresh downturn for the world economy. It's heaping pressure on governments and central banks to unlock even more support. Wall Street economists say it wouldn't take much for the US, Euro area and Japan to contract again, either this quarter or next. Joe Biden's transition team says the president-elect plans to name John Kerry as his climate czar. The former Secretary of State is a Washington veteran and helped broker the landmark Paris deal. He says climate change is an urgent national security threat. Global news, 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Let's focus on the German DAX. Germany's DAX benchmark is about to undergo its biggest overhaul since its inception in 1988. This morning, operator Contigo announced new rules for inclusion in the DAX. It will now be bigger and it will be stricter, tougher to get in then, Danny. Danny Berger joins us with the details. What changes are we going to see on the DAX, Danny?
Well, yes, it's going to be bigger. So specifically, it's going to 40 companies from 30, and the mid-cap index is going to be smaller, going to 50 companies from 60. Now, in terms of who gets included in the DAX, some of their new requirements include 2 years of profitability. This is going to start December 2020 for new entrants. So that means current members like Delivery Hero who aren't profitable are grandfathered in here. It also will require quarterly and annual audited statements. Most companies already report quarterly statements, but they're really just codifying this, saying that if companies don't report within 30 days, they can get kicked out of the benchmark. This is something crucial, swift exit for non-compliant companies. They also say that companies need to keep up with certain requirements, and some of those requirements are governance related, including staffed audit committees. But for companies who are in the DAX that don't currently have one, they do have until 2022 to do so. So there is a little bit of room to get compliant with the new rules that the DAX is now announcing. I should say they've also rejected one of their proposals to exclude companies that have exposure to controversial weapons. Contigo and Deutsche Börse saying that the participants really question whether such a requirement has a place in the German benchmark index, instead saying that they're really focusing these ESG efforts in their ESG specific indices, Anna.
Yeah, thanks. Danny, just let me take us on to another thought, which is around Wirecard and the role that this plays in the rethinking of the DAX. How much of this, do you think, is a reaction to what we saw at Wirecard and the embarrassment, I suppose, that goes with that?
I really do think that Wirecard was the spark here that caused them to implement these changes, because looking at the new requirements, a lot of it is if you don't meet the new requirements, there's a speedy exit from the index. And that was one of the issues with Wirecard. It had 2 years of alleged accounting issues. And then for 2 months when first, it still was in the DAX. The DAX didn't really have any means for excluding it from the index. So this will sort of give it the power when it does have these sorts of controversial companies or really an insolvent company. It will have the means to pull it out from the main index, Anna.
Danny, thanks very much. Danny Berger with the latest on the changes at the DAX. And the DAX may have decided incorporating ESG criteria on its constituents is a step too far for now. But the money is still flowing into the broader ESG sector. A new report from Octopus Group claims that institutional investors are set to double their allocations to renewable energy in the next 5 years. Let's bring in Chris Hullett, Octopus Group co-founder, who joins us now. Chris, really good to speak to you. So you've surveyed institutional investors and you've seen what they plan to do, double their allocation to renewables. I wonder, does this take into account the changing administration in the US? Is there room to allocate even more if we see a more favourable US administration in terms of climate policy?
Well, good morning, and thank you for having me on the programme. And I think you're absolutely right. This survey was actually carried out prior to the US election, and I think it's absolutely been a feature of the last few months. So people have been worried, what would the US approach to climate change be? I think the election of Biden and the appointment of John Kerry as the climate czar is a really good sign. One of the key issues that institutional investors have told us has been a bit of a blocker towards growth of renewables, has been the lack of collaboration and cooperation amongst governments. Governments have got a really important role to play in terms of setting the right kind of tone, setting the agenda for how sectors are meant to develop. And so I think we're going to see increased cooperation going forwards. The US is going to come to the table. It's going to play an active role in COP26 now. I think that's going to be really important as the UK in particular moves into a pivotal year with the G7 presidency, with COP26 now only about 11 months or so away. That global collaboration and cooperation is going to be so critical to crowding in the trillions of dollars of private sector capital that's going to be needed to really fund the global rollout of renewables over the next couple of decades.
And your research also picks up on another important dynamic to keep an eye on, Chris. You talk about how COVID has slowed the pace of divestments away from fossil fuels. That seems a little surprising, given that this year we've seen negative oil prices, which is not something that anybody thought was going to happen. We've seen real big cuts to dividends. What explains this slowdown in the pivot away from fossil fuels, do you think?
Yeah, it's a pretty slow effect so far. It's a fairly marginal change compared to the data from last year. I think there's a couple of features here. One is, I think, a little bit of an artifact in the data in the sense that many oil company shares have fallen so much over the past year that when you look at the impact that selling out of a position in one of the oil majors would have on your portfolio, the percentage impact this year will be smaller than last year. But the other factor at play here, I think, is that particularly in Europe, some of the oil companies have come out with their transition plans. We've seen businesses like BP announce pretty ambitious targets around migrating from hydrocarbons towards renewables. And so I think it's also the case that some investors that perhaps may have thought that they were going to be divesting from oil and gas stocks may be willing to give some of these names a second chance and stick with them on the belief that engagement with those companies is likely to lead to better outcomes than divestment. But the important thing that we've also seen, though, is that institutions are really... Sorry, go on, Anna.
I was just going to say, how do you cope with that change by oil companies then, Chris? How do you cope with that change by oil companies? You know, oil companies now, they're not oil anymore only, are they? They're big energy businesses. In some cases, they look more like utility companies. Just this morning, we heard from Shell signing a 15-year supply agreement with Dogger Bank UK wind farms. You know, some of these are energy businesses in a much broader sense. How do you, as investors in that kind of green energy, cope with this transition that we're seeing from big oil?
Well, we ourselves are big investors directly into solar and wind farms, but for many investors focused on quoted markets, absolutely the decision they've got to make is how do they interpret the transition that the oil and gas stocks are going through? I think for a business like Shell or BP, that migration is really difficult. They're talking about managing big debt loads, shareholders are expecting dividends, existing hydrocarbon assets that will need ongoing capex, while also finding the money to, as you say, migrate into areas like offshore wind. That's a really, I think, quite a difficult thing to juggle. It's going to take them many years, decades to achieve. The thing that we saw in our survey was for many investors, what they really want is also to be able to get direct exposure to renewable assets. And that, I think, is one of the choices investors make. How do they allocate? Do they choose to get it through businesses in the old economy that are repositioning, or would they prefer more direct investments? Topics like liquidity came up in our survey, issues like government cooperation and collaboration, and also energy price risk. And those are the sort of things that investors have on their minds when they think about the renewables sector.
And Chris, in a world of very low interest rates, investors are looking for returns in any way they can find them these days. And to what extent do investors see this renewables asset class, if we can call it that, as uncorrelated, as structurally on the move, rather than correlated to the cycles that we witness elsewhere? Does that work its way into their thinking?
It absolutely does. It's a feature that's been quoted by 86% of the people that we asked in our recent survey. And I think that's perhaps not surprising. So many asset classes have seen income levels dwindle, fixed income mostly yielding barely anything. So for many investors, the uncorrelated nature of returns from renewables is really important. The fact that these are cash flows that you can see visibility for years, decades into the future, the predictability of those cash flows, it's got a really important role to play. And those kind of mid to high single-digit return levels that you can generate from renewables, I think have been latched onto as being increasingly attractive. The other key aspect is that this is a sector that you can now invest into at real scale. 5-10 years ago, you couldn't. And so for investors looking at this asset class now, they can make meaningful contributions, meaningful allocations in a way that you just couldn't. Investors have told us that on average, they're looking to double their allocations over the next 5 years, something which I think is going to be an incredibly significant part of reallocation of global capital. The sums required are really staggering. It's going to take trillions of dollars, roughly equivalent to the entire market cap of the London Stock.
Chris, thanks very much. Thanks for joining us. Chris Hullett, Octopus Group co-founder. Thanks very much for bringing us your thoughts. 8:41 here in London, 9:41 in Paris and Berlin. Up next, the future of work. Has COVID-19 accelerated investment into automation, or have cash-strapped companies to put plans on hold? We'll discuss that next with the CEO of UK AI company Blue Prism. This is Bloomberg. Welcome back to the European Market Open. 44 minutes into the trading session, European stocks head higher. A little bit of political certainty in the US is helping drive them upwards. Now, the pandemic has fast-forwarded tech trends from online video conferencing to food delivery. But what about business investment and adoption of new technology? Has the pandemic been an accelerator for the robotics and artificial intelligence movements, or have cash-strapped firms put automation projects on hold? Let's speak to Jason Kingdon, the Blue Prism Group, a chairman and CEO whose business operates very much in this robotics and AI space. Jason, good morning to you. How resilient has the business been then? I suppose it could be sector dependent.
Yeah, very much sector dependent. And so, you know, if you take Blue Prism's digital workers, we operate across over 70 commercial sectors now. And for some of those sectors, you know, we've seen almost the cessation of doing business. So very, very dependent in terms of where people are operating. But I'd also say that, you know, the pandemic overall has slowed business down. People have got cautious. People are worried where the economy is going. And against that, you know, they're making judgments in terms of what investments they should make.
And what size of business, Jason, can benefit from this kind of automation, robotics and AI, the imitation game, as it's often sometimes referred to? How sizable, how much scale do you have to have as a business to benefit from this?
No, I mean, this is across the board. This is all sizes of business. And so, if you take Blue Prism's core product, it's a digital worker, and it's something that we try to get as close to a human worker as we possibly can. And, what that means is that it's an automation platform that's universal, will automate any task that a human is able to work. And it can be applied in all sorts of contexts. And so, the large consumers of it, I would say, as seeing this as an alternative to offshoring the kinds of tasks that they were putting across, halfway around the planet before. Now they see this technology as an alternative to that. And so, large scale users are on that kind of scale. But, small businesses too, they also use the technology.
I know that you have been working with a whole number of sectors, Jason, for many years, but healthcare very much in focus, of course, this year for understandable reasons. You volunteered a task force of software robots or digital workers to help allocate ICU beds, to distribute PPE and the like. Did you really get any take-up, or in the heart of a crisis, do those who manage healthcare not have the capacity to invest in that kind of technology?
No, well, I mean that's the at the core of the of this particular RPA movement. We're making this technology very accessible to business users. It's absolute kind of fundamental principle of it, so that a business user, just in the same way that you can work with a human colleague, you can work with this technology. That's the real idea of it. And absolutely, we got very much a take up, not just in healthcare sector, but also the financial support packages as well. So, the support loans that you saw, both UK, the US, delivered through digital workers, coordinating, operating across multiple systems in order to make those happen. And in the UK, we actually saw health trusts sharing trained digital workers. So they would set out a workflow that gets automated by a digital worker, and then they would then share that across trusts in terms of the way they can make use of it. So no, I think it was a big eye opener in fact, in terms of how flexible this technology is, how far it's come along, and really what a viable alternative is now to human beings.
And Jason, you're a listed business, you're AIM listed, of course. There's been a suggestion from one short seller, at least, that you've seen a deterioration in your performance. How do you defend yourself against that kind of reporting?
Well, I think, in the context of COVID, everyone's concerned about all businesses in terms of where they are and what they're doing. But, I think that with the results that we reported, 40% growth year on year, a business that's still investing, but, we burnt £3 million over the second half against a cash stockpile of over 135 million. We had 147% growth on our cloud platform of our digital workers. So, I think it's actually a very, very solid performance. And I think it's also, testimony to that. We just had an award from Deloitte for being in the top 150 high growth businesses in the US and in the top 50 for the UK. So I think it's a very, very strong performance against what, is undoubtedly the strangest business environment any of us have operated in.
Yes, strange is certainly the word. Jason, you automate then processes that take place in service industries, and you've made the argument in the past that these digital workers actually expand the economy, so not necessarily taking jobs away from humans who, let's face it, many of whom have been unemployed by the current crisis. You say they're economic agents in their own right, these software robots. How is that the case?
Because, as I say, we're trying to get these things as close to human worker as possible. And one of the aspects of that is that they use third-party applications. They use, third-party software, and they consume it. They consume it in exactly the same way that a user does. And so it means that more licenses are required, into the core databases. If the digital workers are expanding the work that they're doing, the kinds of products that they're shipping are as expanded because it's things that they're offering. And so effectively, it is like a new economic agent operating within the business. And I think this is one of the things that's actually overlooked with AI. It's a contributor. It makes things happen. It's an economic agent, and I think that's very different from technologies that we've seen in the past.
Interesting to speak to you this morning. Thanks for joining us. Jason Kingdon, the Blue Prism Group Chairman and CEO. Thanks very much for your time. Up next on the programme, how do markets price Janet Yellen going to the Treasury? That seems to be the market's expectation now. Based on our reporting, we will put that question to Market Live's Christine Aquino. That conversation next. This is Bloomberg.
Jawohl. Können Sie einmal noch ganz kurz zu uns kommen? Ganz kurz.
Davor stellen? Ja.
What is at the moment what we see as scaled up worldwide globally, beyond CureVac even, there will be enough capacity to really vaccinate the world, well, let's say until the end of next year.
We explore the trends, investments and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Welcome back to the European Market Open, 54 minutes into a trading session that's broadly positive, lifted by some political factors from the United States. Let's talk about those with Christine Aquino, who leads our Markets Live team in Europe. And it does seem the removal of some political uncertainty boosting sentiment. How long does that last then, Christine?
Well, if it lasts through the year end, Anna, I'm sure investors will be very happy about that. But we know that that never works out that way. But I think at the moment, markets are just really happy to enjoy this moment of certainty for as long as it lasts. As you say, we have removed a number of stumbling blocks potentially ahead for investors pertaining to the U.S. administration transition and, of course, the makeup of Biden's cabinet, and particularly the news that Janet Yellen will be appointed to the Treasury is being taken particularly positively in markets today.
Yeah, we're seeing some risk assets on the move as a result. Just briefly, the Janet Yellen move, what are you hearing on the Markets Live blog about that?
Yeah, I think the consensus is that it is positive in that it gives traders and investors certainty. She's an insider and she's an experienced hand, so that much is being taken positively. The question would be how she navigates the political aspect of the role, given that she's transitioning from central banking to a role that is probably more political in that sense. And so that would be interesting to watch.
What about, well, in fact, let's leave the conversation there, Christine. Thank you very much for joining us. Really good to get your thoughts. Christine Aquino running us through the markets thinking, equity markets pushing higher, risk assets pushing higher, and a bit more political certainty coming through from the US. That move for Janet Yellen to be appointed Treasury Secretary being greeted by markets with what seems to be quite a lot of enthusiasm, certainly a very known entity when it comes to being a market participant, to say the least. That is it for the European Market Open. Stay with Bloomberg Television. Up next, Bloomberg Surveillance. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need is surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Three weeks after the presidential election, Joe Biden is formally designated the winner. The transition process can begin. Stocks and futures climb. The dollar slides. From the Fed to the Treasury, Biden looks set to nominate Janet Yellen, a supporter of more fiscal spending, as his Treasury Secretary. She was the first female Fed chair. If confirmed, she'd be the first woman to head the Treasury. Plus, the DAX gets the biggest makeover since its inception, increasing the index to 40 members with tougher rules on reporting and profitability. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, straight to the markets, because we did have quite interesting and big political news over in the U.S. That started late last night, overnight. And first, we know that the transition is more on its way than it was just 24 hours ago. And you can see that global stocks are advancing on the back of that. Now, if you look at what stock markets are taking a positive, the General Services Administration acknowledged finally that Joe Biden was the apparent winner in the presidential election. And the move seems to, of course, reduce political uncertainty in the U.S., giving Biden and his team access to current agency officials, briefing books, some $6 million in funding and other resources. And the market seem to like that. So I'm looking at energy stocks leading the stock 600 here in Europe, travel companies, banks also notching gains in broad advances, haven assets weaker. And then we're getting some IFO figures. I'm looking forward to speaking to the president of the IFO Institute shortly. November German current assessment index is at 90, so that's a touch better than the estimate of 87.5 than we had. Clement Fust of IFO coming up in 15 minutes. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. England's national lockdown ends next week, but Prime Minister Boris Johnson says it will be replaced by a tougher three-tier system of regional restrictions, which will last until the spring. Hairdressers and gyms will be able to reopen, but in areas under the tightest curbs, restaurants will be takeaway only. More details are coming out this Thursday. Now, Bloomberg sources say President-elect Joe Biden plans to nominate Janet Yellen as Treasury Secretary. The former Fed chair would be the first woman to serve in the role. She's a candidate that's likely to find support from both Wall Street and progressives. No official comment from Biden's team yet. The surging coronavirus is stoking fears of a fresh downturn for the world economy. It's heaping pressure on governments and central banks to unlock even more support. Wall Street economists say it wouldn't take much for the US, Euro area or Japan to contract again, either this quarter or next. And global airline lobby IATA is working on a mobile app to help travelers demonstrate their COVID-free status. The travel pass will display test results alongside proof of inoculation. A trial program will begin with British Airways parent IAG this year before arriving on Apple and Android devices in 2021. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, the formal transition of power between President Trump and President-elect Biden has finally begun 3 weeks after the election. A key government department has now acknowledged that Biden is the apparent winner. Now, President Trump has called on his agencies to cooperate. Still, he says he'll continue to challenge the outcome of the election. Well, joining us now to talk about this is our senior editor, Derek Wallbank. Derek, what is the significance of the GSA finally acknowledging that Joe Biden is the apparent winner?
Well, the biggest significance, frankly, is that Biden and his team get access to security briefings. They can go ahead and start some of those conversations and learning some of the intelligence that they don't have as just members of the general public. So I think that's part of it. I think, there are some other benefits like having a .gov website. You can, start going through security clearance processes, things like that. One thing that usually would be a big deal, but it's probably a little bit overrated now, is some of that contact with Trump administration officials to sort of figure out what the Trump administration is doing. And the reason that's partially overrated here is that the Biden administration in large parts wants to do absolutely nothing that the Trump administration is doing. And so I'm not necessarily sure that they'll be too heartbroken that that's not going on quite so smoothly yet.
What do we know about the administration? So who's in, Joe Biden's cabinet? It seems a lot of familiar names that we know about already.
Yeah, well, that's true. And Biden started out with national security, and there you're talking about a lot of names that are sort of experienced old hands. John Kerry is a climate advisor. things like that. Anthony Blinken as Secretary of State, longtime Biden advisor. The name that's making a lot of waves now is Janet Yellen, who reportedly is going to be named the Treasury Secretary. Now, of course, I don't think that any Bloomberg viewer needs an introduction to Janet Yellen, but that's precisely the point. Biden campaigned in a lot of ways on this sort of return to normalcy, of this idea of putting experienced, stable hands, the suggestion that maybe politics could be boring again. And by putting in a name like Yellen, who you kind of know where she stands on a lot of different things, the Biden administration incoming is signaling both a little bit of stability, but also a little bit of predictability. And both of those things have been in somewhat short supply the last 4 years.
Derek, very quickly, I know we're expecting a couple of news on, the Pentagon and things like that. Is there anything that, is there any appointment that could be controversial, or what's the key appointment for Biden that's still to come?
Well, I think the key to controversiality lands with those Senate elections in Georgia, and realistically, when you are talking about these confirmations, generally people defer to the incoming president, but we've seen an absolute acrid partisanship in Washington over the last couple of months. Certainly this transition has not been easy, and it's taken Republicans a long time to even call Biden the apparent winner. So I think that if Chuck Schumer, the Democrat out of New York, is the majority leader, even if by the narrowest of possible tie-breaking margins, it's going to be a lot easier for Biden to get his people in. But right now, I'm not necessarily seeing a lot from the Biden folks pushing really, really controversial names. They seem to be really hewing towards a lot of mainline choices that would have bipartisan appeal.
Thank you so much, Derek Wellbank there, our senior editor. Now joining us this morning, Melanie Baker, to talk, of course, about the markets and the impact that these appointments have. She is senior economist, and it's a great pleasure, really, to speak to Melanie about all of the things that is going on as senior economist at Royal London Asset Management. Melanie, great to have you on the program. When you look at how the markets and the economy could fare because of these, cabinet picks, who's in Joe Biden's administration, what's your key takeaway? Are we going back to what we had, pre-President Trump, and is that only a positive for the economy?
I think, what we're seeing are appointments that have, that speak to competence. You're highly experienced people coming in, and I think from an economics perspective, when, after any election, when you're looking at new appointments to these sorts of roles, those are exactly the qualities you want. And with Janet Yellen, you're getting somebody who's a highly competent, highly experienced economic policymaker. Which is just reassuring, is exactly what's needed in the midst of crisis.
Melanie, what does she need to do? So the first thing, how will she get along with Mitch McConnell? Will we get the stimulus that the U.S. needs?
That's still a big question, right? So part of the blockage, it seemed before, in terms of getting a package through, didn't really seem to be coming from the White House. It seemed to be coming from Senate Republicans. So as has already been pointed out, a key here will be what happens to those Georgia runoffs, how the balance of power in the Senate shifts. But look, you've got someone coming in who's highly respected, who hopefully can work somewhat across party lines and get something done. But it's still important in the US that we do see fiscal support provided. There are a number of key provisions that roll off at the end of this year. And of course, we already saw the provisions of the CARES Act roll off. So there is a concern here. But, we saw a willingness from Senate Republicans before the election to pass something in terms of stimulus. So I'm hopeful we will see a package in the new year.
Melanie, when you look at some of the things that we could see from Yellen, how useful is it to have someone that was a central banker at this juncture in the economy actually take care of fiscal policy? Can that only be an asset?
I think what's important anyway, in times of economic crisis, that monetary policy and fiscal policy can work together. There's some coherence, some cooperation. There's good communication between the two areas. And hopefully, with the appointment of Janet Yellen, that will be the case in the US. So I think that aspect of things is important. I think what's also important is that she will have great respect for the independence of the Fed. So there's an ability to work together while respecting that independence, and that's a good combination.
Thank you so much, Melanie Baker there from Royal London Asset Management stays with us. Now, coming up, we'll talk a lot more about the transition to the economy. We'll also talk about vaccines and the Bloomberg COVID resilience rankings. The project looks at how the world's biggest economies have handled the pandemic. That discussion in about 30 minutes from now. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, breakthroughs in vaccine development mean an end to the pandemic is closer than ever. Pfizer has sought emergency use authorization after its trial success, while shots from Moderna and AstraZeneca appear to be effective in early results. But despite the positive news, world leaders caution the fight is far from over. So still with us, Melanie Baker from Royal London Asset Management. Melanie, I don't know whether you worry more about still scarring in the economy because maybe we don't return back to normal straight away, despite vaccines, in early 2021, or whether you worry more about something else. You worry about China, you worry about defaults, and the fact that in all this vaccine news, some of the underlying concerns there are getting lost.
Yeah, there are always plenty of worries, right? And that absolutely, the China risk was one that was around and prevalent kind of pre-crisis. We think that was a theme back then as well. But I think you're right. There's a lot of road to travel between now and when we actually get the vaccines. There is the potential still for some long-term economic damage to be inflicted. So it's still really important that policymakers continue to provide support in the period between now and when we get the vaccine. I think one of the long-term worries that I have is actually around the kind of debt build-up that we're seeing with companies. So firms that have built up a lot of debt. And when you get a heavy debt overhang, you'd expect that to make many companies reluctant to invest into the recovery. It could be one of those things that just holds us back more than expected.
Melanie, what would a policy mistake actually look like? Is it too much stimulus or not enough? So if there's too much stimulus and then enough people get vaccinated, are we going to see inflation shoot up?
That's a really good question. So in the near term, my worries are about not enough rather than too much. I think it's not so much too much, it's that stimulus is kept in place for far too long would be, I think, the way I'd look at it. So you're right, once we have vaccines, once the recovery is well in train, how long does it take before central bankers take their foot off the pedal, before we get some just rolling in even of the rhetoric? So that would be a concern, I think. But I still think we in terms of central bankers here, we've got. If we saw a return of inflation, if inflation really started to pick up, I wouldn't expect the major central banks of the world to just sit back and let that happen. So I think we'll get higher inflation in the medium term. I'm not convinced we'll.
And Melanie, what happens? I mean, even with medium inflation, do we have central banks thinking about normalizing?
We will do at some point, right? But it's a long way off. The clear messaging from central banks is that they're a very long way away from thinking about hiking rates. I think it may happen sooner than markets currently have priced. But this isn't a story for next year and possibly not even for the year after that.
All right, Melanie, thanks so much. Melanie Baker, they're senior economist at Royal London Asset Management, and we'll have plenty of mutations, 5-year, and what we're seeing in the U.S. Now, coming up, as Germany deals with the second wave of coronavirus infections, how are restrictions affecting Europe's biggest economy? We'll be talking to the president of the IFO Institute. He's Clement Fust, and he's up next. This is Bloomberg.
It is possible
we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get the latest on Europe's biggest economy. Yes, German business confidence. Well, German businesses are losing confidence in the outlook after a resurgence in coronavirus cases forced authorities to reintroduce restrictions. Now, an expectations gauge by the IFO Institute fell to 91.5 in November from 94.7 the previous month. That was a steeper drop than economists. Now, to talk about all of this is Clement Fust. He's the IFO president. Mr. Fust, as always, thank you so much for joining us. How are you expecting businesses to react for news of the vaccine? Are they going to really think that everything is going back to normal, or will there be a lingering feeling that we have to be cautious?
I think most businesses see this was good news. The vaccines are coming around, but they also think that this will take some time. So before that reaches the economy, before the vaccines are distributed to a sufficient number of people, this process may take months. And the business outlook in the IFO index refers to the next 6 months. And here it looks like most companies are saying, well, the vaccine is going to help, but later.
When you look at current expectations about extra restrictions being put in place, what are businesses telling you, Mr. Fust, about what they want? Do they want a longer-term plan to understand exactly what it will look like in spring, or are they okay with the step-by-step process?
They would certainly like a longer-term plan. Some also say we would like to see a longer-term strategy, at least. It seems like the political strategy is one tailored to the next 4 weeks, but it's not a long-term strategy. At the same time, most businesses are aware that there is a lot of uncertainty about the pandemic. So as long as we don't know how this develops, it's inevitable that adjustments will be made. So my impression is that businesses are more or less resigned to the fact that this uncertainty, these measures that are coming in that are lifted again, this uncertainty is going to stay for some time.
How much of a vaccine boost will Germany and Europe get? Could if we get the right vaccines and we're able to vaccinate enough people, does it mean that we see an economy that fully recovers in 2021?
It's not going to be an economy that fully recovers in 2021, but the recovery will certainly become broader than it is today. And what's important is that there is really light at the end of the tunnel. We don't know, will the vaccine be available widely enough and distributed enough in the summer, or will it be more next year's winter? But I suppose the hope is that we will not have a third wave in the winter of 21-22. I think that's the key message. And I would say the recovery will be there in 2022. That is, we will reach pre-pandemic output levels in 2022, but unfortunately not in 2021. The recession is just too deep.
Private consumption, I think we're looking at some of the numbers. We're crunching some of the numbers in the newsroom. And private consumption was rising some 10.8%, I think, in the 3 months through to September. What are you expecting in the Christmas period?
So private consumption is going to be, will continue to be recovering. Of course, there are some sectors where people cannot spend. In hotels and restaurants, people cannot travel, and this is holding back spending. People spend more on other things. That's clearly visible. So parts of retail, do-it-yourself, retail, these things are working quite well, but other parts of retail and restaurants aren't working. And the result is that consumer spending is going down or is lower than before the pandemic, but not because people don't have money. It's because they can't spend it.
Thank you so much for joining us today. Clemens Fuß there, the IFO president, with, of course, great insight into what German businesses will and won't do over the next couple of months. Now, coming up, we'll talk a lot more about Janet Yellen. We understand that she's the pick of Joe Biden to be Treasury Secretary. We'll discuss what it means for stimulus. We'll also discuss the path of the world's biggest economy. The markets seem to like what they're, knowing so far. So this is what they're focused on, not only on the Janet Yellen appointment, and I'm seeing a lot of praise, of course, on Twitter by people that have worked with her. As Eric Wallbank has said, she's no stranger to Bloomberg viewers, but it's very clear that stock markets globally trending higher also after the GSA acknowledged that Biden is now the apparent winner of the presidential election in the U.S. So markets calm. This is Bloomberg.
It is important for each side to understand the sensitivities of the other.
Former U.S. Secretary of State Henry Kissinger said the incoming Biden administration should move quickly to restore lines of communication with China that frayed during the Trump years, or risk a crisis that could escalate into military conflict.
Unless there is some basis for some cooperative action, the world will slide into a catastrophe comparable to World War I, with a technology that is even more difficult to control than the technology of the period then.
There's a lot of concern in Hong Kong, and you can see the way actions, reactions, and further anxieties arise. I hope we can settle down to a new normal.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
The notion that the Fed can do all that is required at this point to support the economy is just wrong. And the Fed is really pleading for fiscal relief. I believe it's essential.
Well, that was a former Fed chair, Janet Yellen, speaking about the need for more stimulus last week at the Bloomberg New Economy Forum. She's president-elect Biden's pick for Treasury. That's according to our sources. Now, it's a move which signals he plans to act aggressively to revive the world's biggest economy. With Yellen in charge, Biden's Treasury Department will likely be prepared to meet the Fed's policy of lower for longer interest rates with expansionary government spending. Well, I'm very pleased to be joined by someone who worked closely with Janet Yellen at the Federal Reserve during the global financial crisis. Joining us now is Randy Kroesner, former Fed governor and professor of economics at the University of Chicago Booth School here in London. Randy, as always, thank you so much for coming on, especially coming on to talk about Janet Yellen, who you've known for many, many years, and I think you met over 3 decades ago. What will she be like as Treasury Secretary?
I think she'll be a very effective Treasury Secretary. She's obviously someone who knows Washington policy pretty well. Chair of the Council of Economic Advisors, chair of the Fed, and now Secretary of Treasury. So I think she's been very good at trying to build relationships across the aisle in Congress, and I think she has a very good focus on really trying to get things done.
How difficult? I mean, it does seem, Randy, like we're at a juncture, right? It's lower for longer. You have concern about exactly what monetary policy can do. How much coordination could she actually do with the Fed? Like, how does it work? Is this going to be a new tandem force that we'll be, reckoning with?
It's a very natural combination because she and Jay know each other very well. I think she and Jay are very much on the same page when it comes to monetary policy, of keeping monetary policy accommodative through this challenging time. And exactly as the quotation that you had from Janet said, she understands that monetary policy is super powerful in certain realms, but it is by no means all powerful. It provides a foundation for recovery, but unless you have appropriate health policy and fiscal policy, you're not going to be able to have a sustained recovery. And I think she's going to understand that well and be able to articulate that well, both within the administration and to Congress.
Because of the secular stagnation environment and these complex and new ways of working between monetary and fiscal policy, what should be her number one priority right now, Randy?
Well, I think monetary policy is, from her perspective, in a very good place. So I think what she needs to do is thinking about building the coalition for the kind of programs that she thinks is most appropriate for sustaining recovery. And so for parts of that is making sure that households are provided support during the transition, making sure that there's a really solid environment for investment, and so not punishing companies for making profits, but trying to make sure that they're encouraged to make investments to build productivity, to make sure that then leads to higher wages, which is the standard way that things have worked. So I think there's a very clear program, and I think that's what she will focus on.
Randy, so what kind of stimulus do we need? What kind is it? Is it size? Will she be able to get that with Republicans, or is it actually whatever is signed where they'll spend it?
So I think it's much more about where to spend it than how much to spend. I mean, we spent 15% of GDP, $3 trillion in the U.S. In March, April, and I think that was important as a sort of a shock absorber. And but now we really have to pivot policy to thinking about the foundation for growth and what is next. So thinking about not just support packages, but also how do you retrain workers from hospitality and transportation sectors to go in more technology sectors? How do you encourage investment in an uncertain environment? And I think those really need to be the priorities that I think both sides can agree on. So it's not about just how much that, like, well, if we do $2 trillion, everything will be fine. $1 trillion is not enough. It's really what do you spend it on, and how do you get that as a foundation for recovery?
Randy, if we're really 4 or 5 months from a vaccine that a large majority of the population can have, what does it mean for inflation? Is there a danger that suddenly the economy picks up and we're not ready for it?
So I think in some sense, the Fed can only hope that they're in that kind of difficult situation, because the Fed has been undershooting its inflation target since it announced it in 2012. It has now adopted the average inflation targeting policy, which says since we've been running below, we'll be happy to run above for a bit. So I think they'd like to get to 2% or even a little bit above. And then they can deal with those issues. I mean, I would really love to see that the economy turns out to be stronger than I expect that it is, and that we're faced with a little bit more inflation problem rather than a stagnation problem. But it is something to be concerned about. But at this point, making sure we get to that good situation, I think, is more important than worrying now about the possibility that inflation might get a little bit high in 6 months.
Randy, do we need to start worrying about debt now, or is that a problem that we don't even talk about it for at least 18 months?
Well, I think it gets back to what we were talking about before. It's what have you spent the money on, and is it going to be something that'll help to improve productivity in the economy and get the economy growing faster? And so it's just like with a company. If a company takes on debt and doesn't spend the money very wisely, it doesn't do so well, and not so good for the people who bought those bonds. But if it's a company that's investing and that money is being used for new investments that are going to produce growth and help the analogy, the economy to grow faster, I think that's really the key. So if we can focus on policies that are going to revive growth and revive jobs and really get us to transition to this new post-COVID economy, then I think we can deal with the debt issues. If it's just spending for spending's sake, then that's a real problem.
Thank you so much for joining us today with, of course, some great insight to working with Janet Yellen for so many years. Randy Kroesner, their former Fed governor. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. President Donald Trump is backing the start of a transition, despite saying he'll continue to fight the election results. A key U.S. agency is now recognizing Joe Biden as the apparent winner of the election. That triggers the formal transition process, giving Biden and his team access to government officials and $6 million in funding. Now, according to local media, Israeli Prime Minister Benjamin Netanyahu secretly flew to Saudi Arabia to meet with Crown Prince Mohammed bin Salman and U.S. Secretary of State Mike Pompeo. It's a major breakthrough between the two nations that have no official ties. A Saudi official is denying the meeting did take place, and Netanyahu is refusing to comment. And Elon Musk is now the second richest person in the world. He's overtaken Bill Gates with a net worth of $130 billion. $100 billion is from this year alone. He rose through the ranks, has largely been driven by Tesla, whose market value is nearly $500 billion. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, Danone has cut up to 2,000 jobs, including a quarter of positions at its global headquarters. That's as the world's biggest yogurt maker attempts to save €1 billion and revive profitability. Well, the chief executive, Emmanuel Faber, spoke to Bloomberg earlier this morning.
The COVID pandemic has exacerbated a number of trends in the food sector. And the biggest of them is certainly the question of local. Sovereign governments are talking about local food sovereignty. The multinational environment is talking about the resilience of food systems as being funded on local, and consumers are going local. So for decades, we had these global category P&Ls, and they've been great doing that. But I think we've been probably hit by some of the trends in the COVID, and some of that has got to do with the structural weaknesses that we didn't address. So we have decided to pivot, indeed, as you just said, to geographies with one powerful unit of Danone entities, one and one only in each country, instead of 3 or 4 going to verticals. which will download the local decisions for capital expenditure, for brand development, for innovation, much closer to the market than we did before. Because we produce locally. Most of what we actually produce is consumed. 90% of our volumes are consumed locally, but we still think more too global. And so that's essentially what we're doing, which will pivot the roles of our central functions and therefore reduce their size, hence the savings that we expect from that plan.
Emmanuel, yesterday you admitted misuse of resources, and analysts are skeptical about this plan. One saying, we've been here with Ford Danone. We're not sure if this will really make a difference. How are you going to convince the market that this plan will actually work and you will be able to stem those structural changes?
Well, I think that's not a statement that's made, based on facts. The only significant global program that we had is a very important one that we did 3 years ago called Protein, that was about saving 1 billion euros out of our indirect spend. But that doesn't change anyway the way we work and how much, today we still have 5 instances to decide on most of our CapEx routine decision making. Tomorrow we will have 2. A brand like Activia still have 4 instances for discussion. Tomorrow we will have only 2. And so it's really about the savings on the way we work, which wasn't the case before. This is a big change and the only big change of organization this company has ever made. And the other thing is that we're creating in parallel an end-to-end integrated value chain system that will also extract several hundred millions of euros out of efficiencies cross-category in the countries that we weren't able to attack while we were in the silos of categories.
Emmanuel, these are huge ambitions. The market is perhaps a little bit short of breath and short of time for you to execute. How much time do you give yourself to fully execute this gargantuan task?
Yes, well, it's not gargantuous. I think it's well planned and it will be well executed. I have absolutely no doubt on that. We've set teams apart to execute that plan and to deliver on the business in the same time, in parallel. We expect to start that in the early part of next year, with a full completion in the course of 2022, the first benefits of which will be in the second half of next year already, which means that we've said that we would return to profitable growth as soon as the second half of next year.
Well, that was the Danone Chief Executive, Emmanuel Faber. Now, coming up with the end of 2020 insights, which economies have handled the coronavirus pandemic well and which have handled it badly. It's not only, of course, backward-looking, but we'll look ahead to the next 6 months and who will do a great job with the Global COVID Resilience Ranking. We'll also talk about the vaccine. The results next. This is Bloomberg.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
we can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Yes, we have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
It's not a silver bullet. What we need surveillance to be stronger.
The next 6 months in the Northern Hemisphere will be very tough.
It might be a little bit accelerated, but I don't think that is going to be a game changer.
In practice, it is dealt with by each country largely autonomously. But its long-term solution has to be on some global basis.
I would very much hesitate to declare victory now because the fight is far from over.
Global business and political leaders are on vaccines and the path ahead. Now, let's talk about COVID-19. With little more than a month left of 2020, which economies have done best in tackling the worst public health crisis in a generation? Bloomberg has crunched the numbers to determine where the pandemic has been handled most effectively and with the least amount of disruption to business and society. Well, joining us now to discuss all of this is Bloomberg's Global COVID Resilience Rankings, Rachel Chang. Rachel, thank you so much for putting this all together and then coming on TV to talk about it. So first, how have you actually constructed this new ranking? So I think Rachel is having a couple of technical difficulties, but I do have the main takeaways from the top performers right here. I don't know if Rachel is with us. Otherwise, we'll try and call her back to give a better, more of an understanding of exactly what's behind this research. The top performers, of course, no surprise, number 1, New Zealand, number 2, Japan, and number 3, Taiwan. Rachel, can you hear me? I think we've lost Rachel, so we'll get that connection back up. But in the meantime, let's look at the markets, and then we'll get back to all of this great work done by our Bloomberg team to try and figure out also if access to vaccines and the right vaccines means that some of these countries will be on a better footing even into 2021. Now, stocks are definitely rallying. The dollar seeing a bit of weakness. First of all, it's the start, of course, of the U.S. President-elect Joe Biden's formal transition. If you look at dollar, it's extending its decline to the lowest since 2018. Stock markets globally trending higher after the General Services Administration acknowledged that Biden is the apparent winner of the presidential election, and the move reduces political uncertainty in the U.S. This is Bloomberg.
really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
All right, we were talking to you about the Bloomberg Global COVID Resilience Ranking, so let's get straight to our Rachel Chang, who put this together. So, Rachel, first of all, I was asking you, how has this been constructed, this new ranking?
Hi, yes, that's right. We've spent months on this new ranking, and what we really wanted to look at was indicators that could give a holistic view of what the situation is like in different countries right now, 1 year, almost a year into COVID-19. So not only do we have the usual cases, fatalities, mortality rate, we've also looked at access to phase 3 vaccines. We've looked at lockdown strictness. We looked at the effectiveness of healthcare systems. And the overall idea is to show where are the places that's the best and worst to be right now in the COVID era.
So do top performers in the past, and I know you have, Taiwan at number 3, you have New Zealand at number 1. Does it automatically make the top performers also for next year because of, early deals with vaccine makers?
Right. So what we've seen is that access to vaccines indicator is going to become increasingly important. And this is, I think, the most obvious in the example of the U.S., where I think the administration of Donald Trump basically said, it wasn't going to really put effort into controlling the virus. It was completely focused on finding vaccines. And that has initially looks like it might pay off with the mRNA vaccines moving very quickly towards approval. So we can see that the U.S. is positioned very well. It has the most vaccine orders in the world. And as those approvals start to come through in the next few weeks, that's going to feed through quite quickly into what we see in terms of cases and fatalities, and could really bring about quite a big change in the ranking.
Rachel, how did Western European countries fare?
So, unfortunately, Western European countries, by and large, are in the bottom half of the ranking. We know very well that major countries, France, Italy, the UK, they have struggled a lot. They've struggled, especially in the last few months, with a second wave that has erased the gains from the earlier lockdowns, and in fact has been worse than before. We've seen that they've had to reimpose lockdowns that they said they didn't want to. But the fact is that it's not true that it may be a cultural or regional thing, because we do see that the Nordic, the Scandinavian European countries are ranked very highly. We have 3 Nordic countries in the top 10, and a very effective method that they used was border control. Although these countries are in the same passport-free Schengen area, they did not let outsiders into their countries for pretty much the whole year, whereas what we did see in the Western European countries is that summer vacations, crisscrossing the continent, reignited the situation that we see now.
Thanks so much, Rachel Chang there joining us this morning. Now, Germany's DAX benchmark is about to undergo its biggest overhaul since its inception in 1988. This morning, operator Contingo announced new rules for inclusion in the DAX. It will now be bigger and membership rules more strict. Well, joining us to discuss all of this is our Danny Berger. So, Danny, good morning. What changes are we now going to see from the DAX?
Francine, well, in terms of getting bigger, the DAX is now going to have 10 more members. It'll be the DAX 40 instead of the DAX 30. The MDAX, the mid-cap index, is going to shrink, so that will be 50 members versus 60. So these changes are going to happen next year, September 2021. New requirements as well for those included in the DAX. Companies that are going to be included from now on must have 2 years of profitability. So that means current entrants like Delivery Hero more or less are still in the index, even though they don't have yearly profits, but they're getting grandfathered in. Other things, they need audited statements, both quarterly and annual. But the important thing here is if they don't meet those requirements, they have a speedy exit. They need to post them within 30 days or else they get kicked out of the DAX. I should also mention that one of the proposals that was rejected by this 4-week review was to exclude companies with exposure to controversial weapons. The operator here saying that in its comments it got, in the feedback it got, there's really a question to whether such sort of ESG requirements have any place in the benchmark index. It said that it really committed to these various ESG parameters on things like the DAX ESG 50 index, but otherwise the current benchmark not going to include that controversial weapons ban, Francine.
Danny, very quickly, how much of this looks like to be a reaction to Wirecard?
Certainly most of it does. Part of what they're doing, trying to allow companies to speedily exit the DAX should they not meet these requirements, is sort of a nod to what happened with Wirecard. For 2 months, it was insolvent and stayed in the DAX. So this gives the DAX a reason to pull those companies out, Francine.
Danny, thank you so much. Our Danny Berger there with the very latest, of course, on the DAX. Now, we'll have plenty more on the market. So Bloomberg surveillance continues. Tom Keene joins me out of New York. I know we'll look at the transition. Finally, it's starting to happen for Joe Biden. And we'll also look at his administration, some of the cabinet picks. We'll speak extensively about Janet Yellen. This is Bloomberg.
In our interconnected world, if people in low and middle income countries miss out on vaccines, the virus will continue to spread and the economic recovery globally will be delayed. Equitable access is in the national interest of each and every country.
But this also means if we have a vaccine, we should have a common approach to give a fair share to everyone so that the most vulnerable groups, the frontline workers and the healthcare workers, for example, are the ones who get the vaccine first.
We're donating another $70 million to fight COVID-19. $50 million of that will be for buying vaccine doses for low-income countries, and another $20 million will be for researching even further and new vaccines altogether.
Il nous faut nous assurer que les conditions réglementaires et politiques sont toutes réunies pour un accès le plus large et rapide possible à ces produits, tout en respectant les standards internationaux de qualité. C'est pourquoi la France propose que puisse être rapidement adoptée une charte d'ACTA qui réaffirme ces grands principes. Partager la connaissance, soutenir les systèmes de santé, avoir des produits rapidement accessibles et abordables.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF. 3 weeks after the presidential election, Joe Biden is formally designated the winner. The transition process can begin. Stocks and futures climb. The dollar slides. From the Fed to the Treasury, Biden looks set to nominate Janet Yellen, a supporter of more fiscal spending, as his Treasury Secretary. She was the first female Fed chair. If confirmed, she'd be the first woman to head the Treasury. Plus, the DAX gets the biggest makeover since its inception, increasing the index to 40 members with tougher rules on reporting and profitability. Good morning, everyone. This is Bloomberg Surveillance. Happy Tuesday. I'm Francine Lack in London, Tom Keene in New York. Tom, the markets are, pretty quiet at the moment. They're actually, I guess, sighing with relief that they got through, for the moment, not only a Treasury Secretary pick, which we're still waiting confirmation of, but multiple sources have said it's Janet Yellen. But they're also sighing because there was, for the first time in 3 weeks, acknowledgement of the transition. With the GSA, we're all now experts in U.S. administration, with the transition process starting to kick in.
Well, yeah, not only the good news, but really, I think, Francine, just as much that there was no bad news today, and that gives a lift to equities, some other adjustments in the markets. Jeffrey Curry will join us from Goldman Sachs, which is wonderful. But futures up 27. We'll talk about the data in a moment. But yes, Chair Yellen, front and center here on this historic moment for our politics.
Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom, President Trump is finally calling on his agencies to cooperate in the formal transition process with Joe Biden. That follows weeks of inaction. The General Services Administration made it official with its acknowledgement that Biden was the apparent winner of the election. Still, President Trump says he'll contest the outcome of the vote. Joe Biden has turned to former Fed Chair Janet Yellen to be his Treasury Secretary. If she's confirmed, Yellen would become the first woman in the job. She's pushed for additional fiscal spending to help the economy get through the pandemic. Yellen's likely to win support from both Wall Street and Democratic Party progressives. Meanwhile, a Michigan board has voted to certify the election's results. That practically ensures Joe Biden's victory over President Trump in the state. Only a possible Republican recount stands in the way of assuring that Biden will win Michigan's 16 electoral votes. The Trump campaign says it will keep challenging the results. And British Prime Minister Boris Johnson has confirmed that England's national lockdown will end next week. It will be replaced by a tougher system of regional restrictions designed to last until spring. Rules may be relaxed in time for Christmas. Johnson says that if all goes well, the vast majority of people who need a coronavirus vaccine will get one by April. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. In the equity market's a nice move here. I want to make clear on intraday futures, we did get the Dow 30,000 for one cup of, not even a cup of coffee, a little quick espresso shot. But for the most part, we're buttressed up right against tradable highs on SPX and on Dow. 3602 on SPX futures up 27 points. Dow up 29,821. And the VIX really cooperates off of yesterday's enthusiasms, 22.20. We'll see you to a 21 handle there in a bit. Bonds don't play. The FX market, we've got continued persistency of weak dollar is how I'd put it. Yen Beck's up 104.24. That's about all I've got right now. Francine?
Yeah, Tom, I have a very similar data check to yours. Energy stocks leading the Stoxx 600 index higher in Europe. Travel companies, banks also notching gains in this broad advance. Again, stock markets globally are trending higher after the GSA acknowledged Biden as the apparent winner of the presidential election. And the move just reduces this political uncertainty in the U.S. And it's just, pushing that good mood feeling out there in the markets. Dollar edging lower with treasuries. Crude oil, I've said it, it's advancing, Tom.
Very good. Usually we just bring in these what we call SOTs or videos, but they need a little explanation as we get to Michael McKee and his wonderful perspective. On October 19th, it was just another interview with Chair Yellen. It was on a project of hers. That was great. I, of course, was completely rude and brought up Treasury. And even worse, I just sort of went along through the motions. Yellen picked up the baton and directly addressed the fiscal policy of this nation. She brought that up in the interview versus us really bringing it forward. Here is a fired up Janet Yellen.
We need support for the economy, both for monetary and fiscal policy. And monetary policy has already done a huge amount. Fiscal policy response in the United States has been extremely impressive, but actually it's much larger, the fiscal support, than what was done after the 2008-9 financial crisis. But the fiscal support has now lapsed. It is not their objective ever to directly try to help the federal government finance its budget deficit.
Very good. Chair Yellen there, we believe will be heading towards Treasury. Michael McKee with us now with just tons of experience on this now. You know, Michael, I go back and I look at Albert Gallatin, and maybe I look at, you know, a few other bright people that have taken the job. But other than that, she's the smartest woman in the room as well. In crisis, what will she do as Secretary of Treasury?
Well, it's going to be interesting to see how well she gets along with Congress. If there's one area in which she hasn't done the same sort of thing as Jay Powell, it's in liaising with members of Congress from both parties. We don't yet know who's going to run the Senate. And so that will be very important in terms of what they will be able to get done going forward. She should be easily confirmed. She's been confirmed 3 times. But in terms of a stimulus package, that's an open question yet. However, the important thing, I think, to most people is that she's very familiar on Wall Street. And as Biden said last Thursday, his choice is someone who I think will be accepted by all elements of the Democratic Party, from the progressives to the moderate coalitions. And she's got a history of serving under Democratic administrations, and with her background in labor economics, known for her advocacy of lower for longer interest rates to drive down the unemployment rate as far as possible. And so I think she'll be quite popular in the beginning.
We know Jack Lew, folks, of recent vintage, who, of course, came out of the trenches of Massachusetts politics in terms of that congressional mandate. Michael McKee, is there a theory of Yellen? Is she a kind of economist?
She's a labor market economist who would lean, she's definitely a Keynesian, but she leans towards the idea of doing as much as you can to bring down the unemployment rate as opposed to controlling inflation. Not that she likes inflation, but she felt that something had changed in the economy. And there's a famous line from her in 2012 when she argued for QE3 and against those worried about costs of failing to reduce the unemployment rate as aggressively as we can. She set the stage for what the Fed has been doing. Actually, under her, the unemployment rate got down to 4.1%, much lower than people thought it would, much lower than what the Fed thought the NAIRU was, and it continued under Jay Powell. But she was the one who really pushed the policy of let the economy go and see how low we can get unemployment.
Together, and how new and complex will that be?
Well, it will be interesting to see if they adopt anything new. What a lot of people are saying now is that because of her experience at the Fed, she understands the importance of the Fed's lending programs that Treasury Secretary Steven Mnuchin is eliminating, and that she would move quickly to try to put things like that back in place. Now, where the Treasury helps the Fed with lending programs going forward. What they do after that is kind of an open question. The Fed, at this which would be basically the only thing they can do, lower for longer, they probably will go along because that's the economic situation they find themselves in.
Right, but Mike, could we see more coordination between the two, or is it just too soon to tell?
Well, I'm not sure how much more coordination there can be in the sense that they have worked very closely together so far. You go back to the Treasury-Fed Accord during World War II, the Treasury basically agreed to keep interest rates pinned at a low level in order to fund the war effort. And I suppose you could formalize something like that, although Fed officials are concerned about the idea that you wander too far into fiscal territory. They'd like to stay in their lane as much as possible. But that doesn't mean they won't do what Treasury wants in keeping rates low because the economy calls for it.
Michael McKee, thank you so much. I'm sure we'll hear from you through the day on Bloomberg Radio and Bloomberg Television. Our international economics and Janet Yellen correspondent. Coming up, Jeffrey Curry, Goldman Sachs. Let me give you the framework for that. Brent crude within target of 47, 46.53, West Texas 43.
Yet.
We need the fiscal stimulus, and we need it relatively quickly because I can see where the second wave's coming. You can see consumer spending beginning to get impacted.
Health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Bloomberg Surveillance. Good morning, everyone. Francine Lacroix in London. I'm Tom Keene in New York. Lots going on. We're going to get to Turkish lira in a bit. It is centered tendency off the weakness and then the huge advance, and it's really come back abruptly this morning. 7.95 right now in Turkish lira. We'll do that in a bit. Right now, Jeffrey Curry with us with Goldman Sachs, our head of commodities research. Jeff, let's start with first principles. Oil up. Why?
Well, for one, when we look at the demand picture with the lockdowns in Europe, the impact on oil demand and economic activity is not nearly as severe as what we saw back in the spring. So that's one positive factor. But the other positive factor is people are looking out into the second half of next year, and they see a much tighter market. And whether we're talking oil or any of the commodities, every single one of these commodity markets, with the exception of wheat today, is in a deficit. So you have to ask yourself what happens when you get a normalization in economic growth if these markets are already in a deficit. And that's what really creates the upside and why every single one of these markets have been moving higher over the last several weeks.
Jeff Curry, let's vamp off the great Daniel Yergin and call it the prize. President Biden has to deal with the prize as well. Does the election fold into oil dynamics, or rather, I should say, in which way does it?
Well, you've got two aspects of that. Two of them are, in terms of looking at the impact that regulation is going to have on the oil market, it's very positive. The other one is a lot of people think that the environmental policy is negative to oil. Yeah, it may be 10 years down the road, but initially it creates a lot of stimulus with it'll benefit oil demand as opposed to hurt it. And then the Chinese are buying all sorts of commodities because they think that Biden is going to be much softer on the trade war. The negative is there's a higher probability of Iran coming back online. But I want to emphasize that's embedded in our forecast, and our target for the end of next year is $65 a barrel.
But Jeff, good morning. So what's your base case in terms of how energy policy under a Biden administration actually changes?
Well, obviously the biggest moving factor is an Iranian deal. That is the one that I think most people in the energy markets have their eye on. The other is that you end up with, modestly tighter regulations around emissions with methane and other regulations on the sector. I think the big one that everybody's focused on in energy policy is Iran. But I want to emphasize we have it embedded in our forecast, and we still have deficit market second half of this next year and going into 2022.
So, Jeff, do you also have embedded in your forecast a vaccine that could be rolled out to enough of the population worldwide by the first quarter of 2021 where we actually go back to normal?
Yeah, and I want to emphasize that vaccine is really a tactical catalyst for upside into 2021. Again, I want to just say it again. Every single one of these markets, whether it's the agriculture, metals, or energy, is in a deficit with the exception of wheat today, which means what happens when you get that tactical improvement in normalization into the economy, you get the upside. But I think more importantly is that the pandemic itself is a structural catalyst, which we think that V-shaped recovery next year is going to be the beginning of a structural bull market in commodities.
Well, I mean, this is really important, Jeff. I don't have the chart in front of me, but it's just a blended Bloomberg commodity index. It's really buttressed right up against resistance. Is the Goldman Sachs call that we finally get a legit turn towards some form of optimism in commodity and a lift in blended prices?
Yeah, absolutely. I think there are three themes that we're focused on. The first is we have policy-driven demand, something we haven't seen in a long time. If you think about, the financial crisis, you needed policy aimed at financial stability. The COVID crisis is one of social need, and so policies aimed at social need, which impacts lower-income households, where you see, more cyclical activity and, much more commodity-intensive growth. So you think about following the financial crisis, policy was aimed at creating a wealth effect. The wealth effect benefits high-income households. They don't consume a lot of commodities. There's not a lot of them in numbers. And when you look at policy directed at social need, it's much more commodity-intensive, and it impacts a lot larger numbers. So that's policy-driven demand is one. The other big theme is we call it the revenge of the old economy. It means strong returns in new economy, sucking all the capital out of the old economy, structural impediments to supply. That's why these markets are in a deficit. The third theme is reflation. A weak dollar, as we know, just reinforces higher commodity prices. So, our conviction on commodities moving higher, I want to emphasize soybeans, corn, copper, a lot of these markets are already moving a lot higher today.
Jeff, what are you expecting from OPEC next week? What will they do?
Now, our base case is a rollover of, the current production cuts. We don't see, the increase in supply coming until April. I do want to say that, there's a little bit of uncertainty around it right now with comments out of the UAE. But I want to emphasize they've gone back and said they're committed to OPEC. It's not in their interest to start a price war at this point right now. So we think it's going to be a rollover, and they'll extend that production increase until April of next year. I want to emphasize, due to the structural declines in supply, the increases in demand next year, that we still have Saudi going to 9.5 in April of next year, going to 10.5 in first quarter of 2022. So there's room for OPEC to bring that supply back online, which, everybody in OPEC is going to get to share in increased market share going into the second half of next year with the vaccine on one side and structural declines in supply on the other.
Jeff, thank you so much. Jeff Curry there at Goldman Sachs stays with us. Now, coming up in the next hour, we'll be talking a lot more about Janet Yellen with Jason Furman. He's Harvard professor and former chairman of the Council of Economic Advisors during the Obama administration. That's coming up in about 30 minutes from now, 6:30 a.m. in New York, 11:30 a.m. in London. And this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
I'm certain that we will be able to bring our debt levels down and avoid what you could call a debt crisis because we're focused and we've been open enough by telling the nation that we have too much debt.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Rishika Gupta with your Bloomberg Business Flash. BlackRock is betting on the future of personalized index investing. The world's biggest asset manager agreed to buy Aperio, a creator of tailored index strategies that are popular with the rich. The price, a little over $1 billion in cash. Aperio is owned by private equity firm Golden Gate Capital and Aperio employees. Goldman Sachs is planning a European stock trading platform in Paris. The aim is to make sure clients can still buy and sell shares, even if there is no post-Brexit agreement to allow dealing in London. Goldman has asked French authorities for permission to start in January.
And it's a major shift in a fight that has fractured the American auto industry. General Motors will withdraw from the legal battle between the Trump administration and California. GM had backed the administration's attack on the state's ability to set tougher emissions rules. GM now says its goal of speeding adoption of electric vehicles is aligned with Joe Biden's support of cleaner cars. And that's your latest Bloomberg Business Flash. Tom, Francine.
Where to go? Thank you so much. Now, the Tesla chief executive, Elon Musk, giving a keynote on tackling the next generation of batteries. Now, this is at the European Conference on Batteries, Tom, something that maybe was a non-event even 3-4 years ago. Now, really, the future of some of these companies depend on what kind of batteries they'll get. So you can see, as most of us, this is a virtual event with Elon Musk giving his thoughts on batteries, and we'll have plenty more on that when he breaks news or gives us an insight into how our battery storage will be different. We'll bring you that. In the meantime, this is what the markets is looking at. So the market's figuring out exactly what the U.S. administration will bring. Let's actually listen in to Elon Musk right now.
And, as I said, a lot of processes where we have to quite radically improve the cycle time, and where we have to redesign machinery for continuous flow operation. I've said this publicly on many occasions that designing the prototype of really of any advanced technology is I think relatively easy, and then scaling up to high volume production is very hard.
Well, the main instruments on board include a dual frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements we can actually have the superb measurements that we expect of sea level rise, but also the waves, the significant wave height, which is the top 1/3 of the waves if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters, which is not negligible.
I am David Weston, Bloomberg Television.
Solar
Focus. Mr. Musk up 59% per year annualized on Tesla. It is an S&P 500 stock. Many people a number of quarters ago suggesting the death of Tesla. Certainly into 2021, that has not happened whatsoever. A battery conference in Europe speaking on climate, on ESG, which Francine very quickly brings us to the moment at hand in the United States.
Right, Tom, and this was yesterday with Joe Biden picking John Kerry, of course, the author of the Paris Accord, as his special envoy for climate. Does that mean that we'll see peak oil sooner than expected? I'm not sure, so I'll ask Jeff Curry of Goldman Sachs. He's still with us. Jeff, thank you so much for sticking around. We have, someone who's, of course, very well respected, someone who knows the ins and outs in Washington and world leaders in John Kerry. What will he do for renewables? What will he do for climate change? And does it change your view on when we'll see peak oil?
It doesn't change our view on when we'll see peak oil, but it does change our view on the amount of stimulus and potential investment that we can see near term. In fact, I like to point out that we're likely to see so much stimulus around environmental policy, whether it's renewables, battery technologies, alternative energy sources, over the course of the next 5 to 10 years, that it's likely to lead to more oil demand, at least near term, before you start to see it taper off with energy transition off into the future. Now, I like to point out that our base case, bottoms up, is that we need to spend $2 trillion per year to deal with climate change on a global basis. Between the U.S. and what's going on in Europe and China, we think this year the number will be closer to around $500 billion. But this is significant. This is on par with the capital intensity that we saw during the BRICS boom in the 2000s. In fact, we would argue when you look at copper demand and metals demand over the course of the next 3 to 5 years, it's actually going to be bigger under the current environment than it was under China back in the 2000s. So this is significant in that $500 billion. And if you get a blue sweep out of Georgia, that number goes up tremendously, aided by the Biden administration. So I think near term, the focus is, this is real. It's big. It's going to benefit commodities, particularly metal. And I think it going in the right direction in terms of dealing with climate change. Dealing with the whole question of peak oil demand, there's a lot of politics that need to be dealt with to get to that point further out. So, that's 2030, 2035 or beyond. I think the near-term focus is really, this is a big stimulus to global economy, and it deals with a big social problem. It goes back to that point I was saying before. Policies focused on social need, climate change is one of those social needs.
Yeah. Jeff, are the Chinese ready for, the end of peak oil? Are they ready to transition?
You look at the 5-year plan that they put out recently, and it's really focused on green investment, like it is in Europe and like it is in the U.S. So they're making the investments. The low-hanging fruit is on the power generation side, where you do, renewables and to be able to replace coal. The real difficult one is on transportation. The technologies around EVs, they're difficult. They're going to strain metal markets. I like to point out between Tesla and Apple, they represent 50% of the world's lithium market. So just imagine if we try to really expand it, it starts to really stress some of these commodity markets. Here's a stat I like to throw out. Last year, the world produced 95 million internal combustion engines. We only produced somewhere around 1.5 million EVs. Most of those were PHEVs, the plug-in hybrids. The BEVs were relatively small. So we got a long ways to go. There's a lot of stress that can be put on the metals markets.
Jeff, I'm fascinated with your thoughts here. ESG is so in, and we see that with the presidential envoy for climate in the former Secretary of State, John Kerry. Jeff Curry, it's all about price incentives. Let's go back to your Chicago microeconomics. Is the price theory there to effort climate change? Is the price theory there to execute ESG?
Absolutely not, with the exception of, some of the low-hanging fruit in the renewables. Goes back to that point. The renewables, the power generation side, coal is one of the most expensive things on your board. We can replace that with renewables and gassing massive strides on the environment. The problem, it goes back to that point, is the EVs. And they're able to make them cost-effective by giving subsidies and other types of tax breaks, which creates problems further down the road. And so that's why we think it needs to be a mix of new technologies and some of the existing technologies going forward. I hate to get to your point about, getting the right price signal. What we need is a carbon market. We don't have a carbon market right now on a global basis. There's one in Europe. But
Jeff, this is really important, folks. As usual, Dr. Curry absolutely nails this. Jeff, do you see any ability to structure an auction-based or law-based carbon market? I don't see it out there. Where is it?
What we need is the two largest emitters in the world, the United States and China, to get together, create common standards around how they're going to deal with this problem, much like they did with acid rain back in the late 70s and early 80s. In fact, I like to emphasize the acid rain experience, they've taken the sulfur out of the system, is a casebook study of successful environmental policy that dealt with a global international problem, and there is no more acid rain. So we know how to do it. We're just not doing it.
Jeff Curry, as usual, just killing it. Jeffrey Curry with Goldman Sachs, our global head of commodities research, a very important discussion there on some of the theories of the incentives underlying climate change. In New York City with our First Word News, here's Ritika Gupta.
Thanks, Tom. The formal transition of power between Donald Trump and Joe Biden has finally begun. The General Services Administration has acknowledged that Biden was the apparent winner of the presidential election, and President Trump has called on his agencies to cooperate. Still, the president says he'll continue to challenge the outcome of the election. Joe Biden may have found a Treasury Secretary nominee who can appeal to both bankers and liberals. Wall Street is likely to support former Fed Chair Janet Yellen because they feared a more provocative pick like Senator Elizabeth Warren. And progressives were concerned that Biden would pick someone too friendly to the big banks. If confirmed, Yellen would be the first female Treasury Secretary. Senator Dianne Feinstein will step down as the top Democrat on the Senate Judiciary Committee. Feinstein is 87. She's been criticized from both the right and the left over how she dealt with President Trump's judicial nominees. Illinois Senator Dick Durbin says he will seek to replace Feinstein as the ranking Democrat on the committee. And Bloomberg has crunched the numbers to determine the best and worst places to be in the coronavirus era. We looked at where the virus has been handled most effectively with the least amount of disruption. Our COVID-19 resilience ranking has New Zealand as the best place, followed by Japan, Taiwan, South Korea and Finland. The bottom 5 include the Czech Republic, Belgium, Peru, Argentina and Mexico. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Ritika, thank you so much. Now, coming up next, we'll talk a lot more about ESG in the markets. We'll be talking to Lori Heinel, State Street Global Advisors Deputy Global Chief Investment Officer. This is Bloomberg.
Chinese capital market, as you know, is nascent, is just developing, and so we think there's an opportunity to build out that. But that's not all. We're also focused on continuing to build our presence in the Greater Bay Area. It's been a good business for us.
She's obviously someone who knows Washington policy pretty well. Chair of the Council of Economic Advisors, chair of the Fed, and now Secretary of Treasury.
I'm hoping Janet Yellen takes a page from good Treasury secretaries like Jim Baker or Robert Rubin, even Alexander Hamilton, get a musical play named after her.
She would be inheriting this Treasury position at a really difficult time for anybody in that position. So we're far from over. These are sobering times for banks, for the markets generally, for individuals and corporations.
She's going to be much more subject to the political winds in Washington. And for all her esteemed accomplishments, I don't know that we know how well she can navigate those political waters, choppy as they may be.
The financial markets, banking, regulatory, these have never been her forte. Remember, she's a University of California, Berkeley trained labor economist. And I think that is where the greatest appeal is.
Strategists and economists are weighing in on Joe Biden's pick for Treasury Secretary Janet Yellen. Now, joining us to talk about the markets is Lori Heinl, State Street Global Advisors Deputy Global Chief Investment Officer. Lori, great to have you on the program. Is all the good news now priced into the markets?
Well, certainly a lot of good news is priced in the market. The fact that we've got promising developments on the vaccine front, the fact that it looks as though we're going to get out of this kind of gridlock in Washington in terms of a transition plan. You now have at least progress on that front. So overall, I think that there are a lot of things that are looking much more bright than they were just a few weeks ago.
What makes you uneasy? Is it, is there a sudden shoot up of inflation, and could we look at a monetary policy mistake, or what are markets not focusing on right now that they should be?
Well, certainly there are still a lot of push and pull factors. So the fact that we've got promising news on the vaccine front is really great, but we still have a period before we will get mass distribution of that vaccine, whichever one actually becomes available. And so we do still believe that there's a need for some sort of a shorter term fiscal stimulus in the U.S. in particular to kind of get us over the remaining part of that hump. Then we probably set ourselves up for a pretty strong rebound in the first half of 2021. Certainly, there's still a lot of pent-up demand. If we do start to see opening of markets globally around the world, that will all be quite constructive. We're much more worried about what happens after that. So the back end of 2021 could be a little bit more precarious.
Lori, good morning. Tom Keene in New York. I want to talk to you, Lori, about the religion at Tepper at Carnegie Mellon, which is it's all about measuring the certitude, the uncertainty out there. And, of course, in the back end of the equation, that's the Greek letter epsilon. When you have a Biden presidency, does the politics and the certitude of Joe Biden, does that diminish the epsilon? Does that diminish the uncertainty? So up we go.
Well, I think it's a little naive to say that all the uncertainty is all of a sudden just dissipated, because think about the sort of longer term structural trends. I mean, if you look at the potential growth rate of the U.S., the potential growth rate of the globe, it was always a little bit less going forward than it was, over the last several decades. So I think what people are most focused on right now is let's get out of this pandemic, which created a massive contraction around the globe of a magnitude that we had really never seen before, certainly not in the modern era. So let's get beyond that. We now do have, if not certainty in Washington, perhaps the basis of some sort of a collaboration. There is, space for the two sides to come together, whether it's related to shorter-term fiscal stimulus or related to other things that might be related to infrastructure spending that can help boost long-term prospects for the U.S. But we're hardly in a place where all of a sudden we can just go to the moon. That's just not where we are today.
Lori, what's so important here, I would suggest, is we underestimate how corporations adapt to pandemic. It's State Street, where you've got such a broad mandate. Do you just assume that we're underestimating the ability of the corporate world to adapt to the shock and to come out of it and continue to adapt into 2022 and 2023?
Well, it's not just the corporate world, right? It's the corporate world, it's the government world, it's the policy world, it's the consumer world, right? There's been, I think what has been remarkable when we look back a decade from now and focus on what happened during 2020, I think we'll be all amazed at the rapidity of the response, right? Whether it was the monetary policy that got us away from that kind of liquidity crisis, which could have been incredibly damaging back in the spring, whether it was, the fast shutdowns, but then the reopening, which certainly did lead to a rebound in the third quarter. And then ultimately consumers' adaptive nature, that our ability to, think differently about how we conduct our lives and our businesses. So I think there's going to be a lot to learn from the adaptive nature of humans.
But going forward, Laura, what exactly is needed in Janet Yellen? So what kind of policy mix to deal with the secular stagnation do we need?
Well, again, I think the short-term focus is going to be get us over this remaining hump. So if you buy into the narrative that the vaccine finally puts us back at least where we were a little over a year ago or about a year ago, then really the issue is how do you do the least damage possible in the short term? So perhaps a stimulus, and this we think sets us up for more likely to get some sort of a stimulus in the near term. There is then the longer term, which is we ultimately need economic recovery. We ultimately need, governments not to have to provide that stimulus. We ultimately need businesses to get back into play. And again, the vaccination and other, pandemic alleviation helps us to get to that place. Then we start to worry about things like what's the debt overhang and how is that going to influence things like interest rates and inflation. But that's not a narrative that we're particularly worried about, at least for the first part of 2021.
Lori Heinel, thank you so much. And we will continue with Ms. Heinel with State Street Global Advisors. Coming up within this equity market, we'll talk to Lori Heinel about bonds here in a moment. But Jonathan Golub joins us at Credit Suisse with really quite the year forward note. Looking forward to that. John Golub in the 7 o'clock hour. Futures up 27. Dow futures up exactly 300 points. This is Bloomberg.
Once it goes into this plant, it's heated up very quickly to 600 or so degrees. It basically carbonises it, turns it into a carbon-rich material. Obviously kills all of the pathogens.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Good morning, everyone. Futures up 27. Dow futures continue to advance up 308, 29,854. And the Dow, the VIX, I don't have much action yet, but 22.07, showing 2 days in a row some actually good response. We're thrilled to bring in Lori Heinel with State Street Global Advisors, Deputy Global CIO. Of course, we're working with Rick Lakai as he considers ESG as well. Lori, we haven't talked about bonds, which comes down to trying to figure out the risk-free rate at the zero bound. How do you do that so that you get to an intelligent asset allocation?
Well, certainly right now, bonds still play their role in a portfolio. And we've seen that when we have had sharp sell-offs, we do see bond rallies. So while they may not dampen the volatility from equities the way that they once did when the handles were a little higher, they still do offer some protection. So we think it's important to have bonds. We're roughly neutral from a 60-40 sort of strategic allocation basis. We're pretty much neutral on bonds versus stocks right now.
Lori, when you look at some of the concerns with China, and there were a couple of defaults that actually got people thinking about what it meant for the future, are we too optimistic about the trajectory of China from here on?
Well, China's one of the few economies that will grow this year. So while maybe the longer term remains quite a challenge for them, there certainly are opportunities there. And if you look at, just going back to bonds, the combination of, pretty attractive opportunities there, coupled with potential for some currency appreciation, we've actually liked select EM more broadly, and also China bonds in particular. So again, it's a bit of more of a relative value trade. So these are sort of exposures that we've been trading around a bit over the last several months. But at the moment, there are some, we think, interesting opportunities there in China, both from a growth perspective as well as in fixed income.
Lori, do havens change in 2021? If you look at the way havens have done so far, how different will they look like?
Well, look, there are a variety of ways to think about that. I mean, certainly from a kind of U.S. dollar flight to quality standpoint, we do think that the dollar is in a bit of a secular decline. So while we may see periodic rallies there, we, at the margin, don't think that will be as strong a haven as in the past. We think gold, though, still has some merit. I mean, again, in a world of low interest rates, there's not a lot of opportunity cost to holding gold. Gold is a great diversifier, both at the extreme ends of inflation and deflation. So those are areas that we think are important. And we think that the yen continues to be a place where there could be some stability, and you'll see a bit of a flight to quality there. But as you note, none of these things has exactly the same profile that it once had.
Well, this is really, really important, Lauren. I mean, it's away from what State Street does, perhaps, but this search right now for hedging proxies to replace bonds. I don't buy it for a minute. I don't think it's in Fibonacci. Can you find a proxy for bonds to do constructive hedging with bond yields so low?
Well, there are a number of things that help, right? So for a long time, the other meme was let's look for income replacement through equities. And so I think part of the question is, what's the proxy that you're looking for? Because if you're looking for income replacement, you still can find that in places like REITs or utility stocks or other places. But if you're looking for, true uncorrelated returns versus equities, a part of it is what's the backdrop that's driving equities, right? Because if you do get a sell-off because, economic activity is contracting, then we do think that bonds step in and provide that kind of buffer. But if you get a sell-off because, valuations are extended, you're getting a rotation, you're seeing the market sort of shift in terms of leadership, then bonds may not have the same buffering property. So a lot of it is, what are you trying to get out of that hedging property?
Laura, you have a great vision on what we actually do with our money. Are we way undervested internationally?
Well, yes, certainly it would seem that would be the case. And yet I will say that we still favor U.S. stocks in the equity land. What has been happening is over the last several months, we've gradually reduced our underweight positions to other non-U.S. equities, in part because we do think that the currency appreciation will be there, at least from a dollar-based perspective. But we still think that the U.S. has some sort of wind at its back, including not least the sector makeup. I mean, there are a lot of sort of growth-oriented industries that are more highly represented in U.S. stocks.
Lori, very quickly, we have a question which is basically, does Yellen, Treasury Secretary, finally bring inflation because of fiscal stimulus? And what does it mean for your outlook for bonds? Are you underweight?
So we don't think that the inflation problem is a next year problem. Inflation is a process. It has to build both through a combination of demand, price action, ultimately expectations for inflation. And right now, we don't see that as being anything that sort of threatens the markets for the 2021 period. Past that, though, the combination of all this massive stimulus, very high debt loads, et cetera, those could be inflationary things, but we don't think that that's the problem in 2021.
Lori, thank you so much. Greatly appreciate it. Lori Heinel, State Street Global Advisors. Much more coming up. Chris Marangi in the next hour on where to place equity money. We do this. Dow futures up 317 points. This is Bloomberg. Good morning.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This morning, Biden picks Yellen to confront our growing debt and deficit. There is slack in the job economy, so Biden picks Yellen to confront the inequalities of two Americas. Does she become Secretary of the Treasury with an America in recession? Stocks, they lift, the dollar fragile, gold ever weaker. And over the river and through the airport terminal this week, we travel amid pandemic. Good morning, everyone. Bloomberg surveillance from New York, from London. Francine Lacroix and Tom Keene. What's a travel story in the United Kingdom, Francine? Is Heathrow, like, empty?
Heathrow is empty, but actually, if you look at travel stocks today, Tom, they're kind of on a tear. Now, we did hear from the UK government about relaxing the rules come December 2nd. So at the moment, the UK is in lockdown. December 2nd, we're going to have, we're going to go back to the tiering system. But crucially, Tom, from December 15th, travel rules from and to the UK will change because you can travel, come back, and instead of quarantining or isolate yourself for 14 days, you can take a test after 5 days privately, and you can go about your business. So that's a real game changer for the travel industry today.
Seems like it's every nation for itself, not only on travel, but just on working with the virus, and critically, I know in much of the United States, on hospitalizations as well. With our first word news in New York, here's Ritika Gupta.
Morning, Tom, Francine. President Trump is finally calling on his agencies to cooperate in the formal transition process with Joe Biden. That follows weeks of inaction. The General Services Administration made it official with its acknowledgement that Biden was the apparent winner of the election. Still, President Trump says he'll contest the outcome of the vote. Joe Biden has turned to former Fed Chair Janet Yellen to be his Treasury Secretary. If she's confirmed, Yellen would become the first woman in the job. She's pushed for additional fiscal spending to help the economy get through the pandemic. Yellen's likely to win support from both Wall Street and the Democratic Party progressives. Meanwhile, a Michigan board has voted to certify the election's results. That practically ensures Joe Biden's victory over President Trump in the state. Only a possible Republican recount stands in the way of assuring that Biden will win Michigan's 16 electoral votes. The Trump campaign says it will keep challenging the results. And British Prime Minister Boris Johnson has confirmed that England's national lockdown will end next week. It will be replaced by a tougher system of regional restrictions designed to last until spring. Rules may be relaxed in time for Christmas. Johnson says that if all goes well, the vast majority of people who need a coronavirus vaccine will get one by April. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
Ritika, thanks so much. Interesting data today. And of course, leading it in equity lift. Futures up 29, 3604. Can't believe I'm saying that. SPX, I'm only doing this for Faro. 3604 on Standard & Poor's 500. Dow 29,864. Advancing in the last hour, up 320 points. The VIX doesn't give me a 21 yet, but we're right there. 22.03 on the VIX. Bonds don't play. I'm going to ignore bonds. Oil, thank you, Jeff Curry of Goldman Sachs, $46.56 on Brent crude. The dollar market, persistent weak dollar as well. I need to see some action there. Turkish lira weakening out, getting near an 8 level. Francine?
Yes, investors are cheering the start of U.S. President Biden's formal transition. The dollar is extending gains to the lowest since 2018. We talked a bit about travel stocks. Energy stocks are leading the Stoxx 600 here in Europe higher. Travel companies, banks also notching up gains in this broad advance. And overall, there seems to be less uncertainty in the U.S. election. That's something that a lot of markets are applauding. And then I'm also looking at, some of the good news on a COVID-19 vaccine. Reports that Janet Yellen could be named as the next Treasury, giving investors more confidence to pile on risk, Tom.
It's going to be interesting to say the least. I'm typing up a banner here to drive the story forward, which is what we like to do at Surveillance. We really like to do that with Kevin Cirilli, our chief Washington correspondent. Kevin, let me get out front of the announcements here. Vice President Biden, the president-elect, has a set of wonderful candidates for Department of Defense. I think, Kevin, you were on the short list to be acting Secretary of Defense here along with the rest of Washington over the last 2 years. Michelle Flourney seems to be the favored. Like Janet Yellen as Secretary of Treasury, are we going to see a woman as Secretary of Defense?
Look, I think in terms of getting out front and where the story is headed, whether it's her or whether it's someone else, I think the announcements that have trickled out over the past 72 hours, one, represent a policy return to the Obama years in terms of the centrist view of intelligence and diplomatic officials. This comes at a time in which Republicans and Democrats, but also Republicans, have questioned the current administration's strategy in terms of their relationship with the diplomatic and intelligence community, not at the top level, but also at the rank and file level. And that has sent signals all around the world. And so these names, and even the teams that come with these names, really do represent a career official type of strategy for those departments. Secondly, it's diversity. And I do want to talk about this. There are diversity in these picks and several historic picks in terms of the diversity glass ceiling shattering that were announced.
Oh, there's no question about that. Yeah. Kevin, if we get the picks, which are maybe what we'll call younger Obama, to invent a phrase, are we going to re-prosecute the debates of the past? I mean, obviously, Libya, Benghazi is one of them, but there's like 14 other debates you know better than me. Are we just setting ourselves up for a prosecution of events of years ago?
It's a really good question. I think that what you're going to see in terms of what's been going on with the litigation with regards to the elections might actually be issues that Chairman Lindsey Graham takes up. He's already said that this should be looked at, or Chairman Ron Johnson in the Senate, Republican-controlled Senate. Typically, as our audience knows, investigations at the congressional level do not carry the same clout as the judicial sector, and it's a lot of, for lack of a better word, cable news type of fodder in terms of the congressional investigation front. Secondly, is what I would note is that someone like Tony Blinken at the State Department, I don't think that he faces significant hurdles in terms of getting confirmed. Obviously, Janet Yellen, I don't think she sees any significant hurdles in terms of getting confirmed, simply because I remember back in 2013 covering her confirmation hearings in Dirksen with regards to the progressives that were really stepping in there in the Obama administration, and progressives got on board to confirm Janet Yellen, and I would anticipate that they'll do that again based upon conversations I had for Treasury Secretary.
Kevin, what will the president tweet about today?
I mean, maybe the turkey pardons. I don't know. I mean, look, I think, last evening with the GSA announcement in terms of the transition, he's tweeted over the past 12 hours that he does not believe that that's going to stop his court angles from continuing. But as I've said, based upon my reporting, the agencies and whatnot have been continuing to prepare their transition binders and to move forward. Yesterday, additional Republicans, including Senator Rob Portman, a Republican of Ohio, joining Lisa Murkowski, Susan Collins, Mitt Romney, Pat Toomey, and I know I'm forgetting one on that list of Republicans, calling for the transitions. Oh, Kevin Kramer of North Dakota, a staunch Republican ally, calling for the transition process to continue. And these are Republican senators.
Are we going to have a lot more coming out? Or actually, now that he's kind of acknowledged that, there should be a transition, Kevin, do we not care so much anymore about, what the president tweets?
I think in terms of what you've noted, I mean, look, peaceful transition of power is a hallmark of American democracy. And so that in and of itself, I think, is from a tradition and a sombering tradition, is something that is deeply connected to American history. And so from that vantage point, this is unprecedented. Secondly, I've talked with many Republicans who believe that that any outgoing administration should be able to pursue legal cases fully to the extent of the judicial system. So that's also at stake.
Kevin, we usually don't do the gossip here, but it does fold into the Bloomberg world and someone we've talked to many times.
Everybody gossips around Thanksgiving.
No, I know they do. But seriously, I guess yesterday, maybe the day before, Mr. Trump took a call from Steve Schwartzman. I mean, I can just see it. Steve Schwartzman on line 2. Did Steve Schwartzman affect this transition?
Well, look, I think as Hans Nichols over at Axios broke that story, and I think that he pointed out, is that there have been prominent members of the business community who have really been pressuring the administration to get on board in terms of this. But I would go one step beyond that. The Business Roundtable working even weeks before that with the Biden transition team. And look, the business community has really been taking a more stoic approach to this and communicating with regards to all around the world. Israeli Prime Minister Benjamin Netanyahu also acknowledging the victory as well.
Yeah, really interesting. Kevin, thanks for a terrific brief. Kevin Surley, our chief Washington correspondent here. These are exciting times. We'll drive forward that discussion, qualified on Janet Yellen, qualified on the Biden administration and their approach to the debt, the deficit, and policy. Jason Furman of Harvard. This is Bloomberg. Good morning.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
She's obviously someone who knows Washington policy pretty well. Chair of the Council of Economic Advisors, chair of the Fed, and now Secretary of Treasury.
I'm hoping Janet Yellen takes a page from good Treasury secretaries like Jim Baker or Robert Rubin, even Alexander Hamilton, get a musical play named after her.
She would be inheriting this Treasury position at a really difficult time for anybody in that position. So we're far from over. These are sobering times for banks, for the markets generally, for individuals and corporations.
She's going to be much more subject to the political winds in Washington. And for all her esteemed accomplishments, I don't know that we know how well she can navigate those political waters, choppy as they may be.
The financial markets, banking, regulatory, these have never been her forte. Remember, she's a University of California, Berkeley trained labor economist. And I think that is where the greatest appeal is.
Governor Krosner there with important comments on Chair Yellen. Jason Furman scheduled to join us here in a bit, and that'll be an important moment to get perspective on Chair Yellen as Secretary of Treasury. Right now in the markets with futures up 317 points, 29,863. SPX up a good 30 points, 3605. Stocks to the moon. Christopher Morangi, Gabelli Funds, Co-Chief Investment Officer. Chris, I'm going to suggest you and Mario have had a spectacular 6 weeks. Am I right that the kind of Gabelli stocks are the ones that are advancing right now?
Yeah, absolutely. Value and small cap has made a pretty stunning comeback in these last few weeks since the election, and we'd expect that to continue.
Well, come on, you got to give me a longer answer than that. I mean, you expect them to continue. Where is the second leg? Is it in small cap? Is it in international? Is it in selected sectors that you and Mario beat to death?
Well, it's probably in all the above. Obviously we had a lot of companies, cyclical companies uniquely impacted by COVID that are still down, still lagging the broader indices this year. And as we get further clarity on the political picture and the COVID picture, we'd expect them to recover. While we might see a second leg down in the economy, the market's going to look through that to a more sustainable recovery sometime in 2021.
Chris, is all the good news now priced into the markets?
I don't think so. It depends stock by stock. Certainly the market caught on early to this fundamental shift in the way we work and play, entertain ourselves. And so a lot of the COVID stay-at-home names like Netflix and Zoom and big companies like Google and Amazon have done quite well. And I think most of that good news has been priced into the market. But I think the market took a little bit more of a cautious approach to some of the travel and leisure companies, banks and oil. Mario's called them the bottle stocks: banks, oil, travel, and leisure. And as we get a clearer picture of what the trajectory for reopening looks like, we got more confidence to price those more normally.
What does inflation trade, reflation trade actually mean for some of these equities?
It's a good question. We've been talking about inflation for the better part of the last decade, and just haven't seen it, obviously. But I think given the orgy of fiscal and monetary stimulus that's happened and is likely to come, in addition to significant pent-up demand, which is likely to exhibit itself in the coming years, we're probably in the best position to actually see some inflation that we have been in a long time. So, again, that certainly helps companies, helps equities, helps companies with pricing power, and those are many of the companies that we're very focused on.
Chris, I got 8 ways to go here. And I guess I got to go back to Mario's great affection and your path-breaking work. I think of Gordon Crawford folks at American Funds Capital Group is sort of the same angle. On wisdom on media, part of the media thing is to get a big 5-year, 10-year view. Do you guys have a 5-year view on media, or is it every streaming service for itself?
Well, media certainly has, it was one of the first sectors to be dramatically impacted by this explosion in new ways of doing things. So it's hard to take a 5-year view on a lot of these.
Yeah.
I think certainly one of our core views has been that connectivity is king. I've talked about on this program the broadband hedge. That is, no matter what service you use, no matter what content you consume, you need broadband to do so. And in most of the U.S., at least, that's provided by the cable companies. The companies formerly known as cable companies, now known as broadband infrastructure companies. And so that's been a successful investment for us. We think none of that really changes in the next 5 years. Obviously, we're always looking for changes in regulation, but don't think that will be meaningful. As far as on the media side, the content side, this is a great time to be a consumer of content. There's plenty of it, and the question is, how do you organize it? And with so much content, and there are emerging players who are doing that. Including Amazon, which is building a very formidable channel store for itself.
Chris, I look at the distribution. Comcast is one example, Spectrum and the others that we know in the Northeast. Fine. 10 other names I don't know. Aren't we cable cutting? Or are you saying they will still win away from cable with broadband?
Yeah, that's been exactly the play over the last several years. That is, a customer taking video from cable or satellite the cable companies are making 40 cents on the dollar, whereas with a broadband customer, they're making close to 80, 90 cents on the dollar, depending on how you count. So, those broadband customers are much more profitable, and the cable company would much rather sell you faster speeds than sell you a bigger video package.
Chris, thank you so much. This has been really good. Chris Morangi with us with Gabelli here what a good point to have Chris on. Dow futures up 29, SPX futures up 29, Dow futures up 312. Comcast has been a terrible investment. Cable TV is going to die. 17.8% per year for the last 10 years. I mean, that's the reality as well. Let's see now. The dollar weaker right now. Cass Sunstein coming up with Bloomberg Opinion, of course, with Harvard, one of my books of the year a number of years ago on impeachment. Cass Sunstein right now on the events forward in Washington. This is Bloomberg. Good morning.
What is at the moment what we see as scaled up worldwide, globally, beyond CureVac even, there will be enough capacity to really vaccinate the world, well, let's say until the end of next year.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. BlackRock is betting on the future of personalized index investing. The world's biggest asset manager agreed to buy Aperio, a creator of tailored index strategies that are popular with the rich. The price, a little over $1 billion in cash. Aperio is owned by private equity firm Golden Gate Capital and Aperio employees. Goldman Sachs is planning a European stock trading platform in Paris. The aim is to make sure clients can still buy and sell shares, even if there is no post-Brexit agreement to allow dealing in London. Goldman has asked French authorities for permission to start in January. And it's a major shift in a fight that has fractured the American auto industry. General Motors will withdraw from the legal battle between the Trump administration and California. GM had backed the administration's attack on the state's ability to set tougher emissions rules. GM now says its goal of speeding adoption of electric vehicles is aligned with Joe Biden's support of cleaner cars. And that's your latest Bloomberg Business Flash. Francine?
Thank you so much, Ritika. Now, we're just getting a little bit of breaking news on the vaccine. We understand that the EU Commissioner and the President of the Commission, Mrs. van der Leyen, will announce an agreement with Moderna on the possible supply of the COVID-19 vaccine. And we also understand that the deal with Moderna, if it's confirmed, but we understand through multiple sources that it should be confirmed, would mark the Commission's 6th such accord with drug companies. Again, we're expecting Ursula von der Leyen to talk about this accord a little bit later on at 12:45 p.m. in Brussels. That's in 20 minutes from now. In the meantime, global stocks advancing for a second day. Investors cheering the start of U.S. President-elect Joe Biden's formal transition and the prospect for more economic stimulus. Haven assets broadly weaker. Bitcoin actually extending its searing rally, surpassing 19,000 for the first time since 2017. So Tom and I will talk a little bit more about Bitcoin going forward. But really, it's the travel companies that are notching up gains. EasyJet, our International Consolidated Airlines Group also, both rising after England planned to cut its quarantine period for arrivals from high-risk countries. So we'll have plenty more on some of the travel industries, what it's been grappling with, and of course, Janet Yellen at Treasury in the U.S. Coming up next, Jason Furman, Harvard professor and former chairman of the Council of Economic Advisors during the Obama administration. We'll talk to him about Janet Yellen. We'll talk to him about stimulus. This is Bloomberg.
Jawohl. Können Sie einmal noch ganz kurz zu uns kommen? Ganz kurz.
Davor stellen? Ja.
This is a market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We need support for the economy, both for monetary and fiscal policy. And monetary policy has already done a huge amount. Fiscal policy response in the United States has been extremely impressive, but actually it's much larger, the fiscal support, than what was done after the 2008-9 financial crisis. But the fiscal support has now lapsed. It is not their objective ever to directly try to help the federal government finance its budget deficit, and that would be a very dangerous kind of support to provide. But I do expect, I think asset purchases have worked. They're holding down longer-term rates, and I expect there to be ongoing purchases, but probably not geared to the federal deficit.
Chair Yellen, and let me make clear here, and I rarely say this about the videos that we show, but she was beyond fired up and razor sharp in that interview of October 19th. When the news broke yesterday afternoon, members of the entourage called me and I said, get Jason Furman. Why do I do this? Because without question, he was the best looking guy in his dorm, even with Matt Damon hanging around, but far more because of his economics and Furman's pedigree and heritage of policy and discussing of policy. Dr. Furman joins us now teaching Ec 10 at Harvard. And long ago and far away, Jason, you had to sit across a desk nervous with the fiery Yellen, I believe, at the Council of Advisors. What was it like being in a room doing economic or treasury work with Janet Yellen?
Yeah, so my very second job in economics was at the Council of Economic Advisors working for Janet Yellen, and she was amazing. She came in from the central bank. She'd been a governor at the Fed, obviously a great grasp of macroeconomics. She leapt right in on the issues we were dealing with. One of the biggest ones was climate change. She mastered the topic and was a driving force in that as well.
Many would say that Secretary Mnuchin, with a very different background, really found himself with this pandemic. His voice changed, his act changed. It was a new Secretary Mnuchin. How would you expect the economist to deal with politicians looking for FaceTime on the evening news? How's she going to deal with a junior Republican from Arkansas or the senior senator from Montana?
Janet is somebody who speaks clearly, speaks plainly, and it's clear she's motivated by sincerity. So, her mode is more substantive persuasion rather than, going out for a drink with a senator. And I've seen that work with a lot of people. Now, some people don't want to be persuaded. Some people don't want to be engaged on substance. I don't know that a beer would bring those people around either.
Jason, what exactly, do people not understand about what Janet Yellen can do? How big can the stimulus package be? Will she be able to reach across the aisle and get it done?
My hope is that it gets done in the next month so that is not on the desk of the next president. That's not on the desk of the next Treasury Secretary. But, where she could be important is if it hasn't gotten done, being clear about both the economic importance of it, but also allaying some of the concerns about the fiscal impact. She understands we're in a time of low interest rates, that we need to change the way we think about both monetary and fiscal policy in this era of low interest rates. That's something that not all policymakers and even fewer members of Congress have caught on to. It's absolutely critical to everything, and she'll be at the center of it.
So, Jason, what would a policy mistake actually look like?
I mean, on the stimulus, a policy mistake would look like not doing one. And, it's going to take a compromise. And so you can't say, I propose this, I'm only going to do this. Democrats are going to have to move to get something done. I think Republicans are going to have to move to get something done. Sometimes that takes an adult to say, you wanted X, 1/2 X is a whole lot better than 0. Even if politically it doesn't look great, let's do it for the sake of the economy. So I think adults that are focused on economic outcomes can help, negotiation and compromise, see what's good and what's important.
Jason, will we see panels to save Social Security, panels to save this, panels to save that? Is there going to be a bigger, broader picture out there to study intractable challenges 5 and 10 years out?
Yeah, Tom, we have to get through the challenge that is 1 day, 1 month, and 1 year out, which is we're still in a deep recession. But yeah, Social Security solvency date is a little bit more than a decade in the future. And I think that's an important conversation to start now. I think we should do it more with revenue than with spending, personally. But, start the discussion now. Absolutely.
Yeah. Jason, David from EC10 at Harvard emails in and says, ask Professor Furman if he's going to go serve in the administration. Cut to the chase. You can announce it here. What are you going to be doing for Chair Yellen or someone else under President Biden?
This spring, I'll be teaching F10B and look forward to having him in class here at Harvard.
Very good. And a tough grader. There's loads of C grades. It's an appalling structure that Furman has. It's like worse than Roach at Yale. To be honest, folks, Roach is the toughest grader in the Ivy League, and Furman's taking him out with loads of C minuses. Jason.
No, we welcome all students.
They all get A's. Okay, that's another story. Jason Furman, when we look at the policy there, we go back to, say, Heilbronner and the debt in the deficit, to Pete Peterson, to Paul Tsongas and others. How out of whack is our debt and deficit right now?
It's not very, Tom. You don't want to compare your debt to where your GDP is right now. You can pay your debt off over time. Interest rates are lower. That means the debt accumulates more slowly. That means the present value of GDP is higher. And, on that basis, our debt is actually small. Just look at what we're paying in interest on the debt. It's low and it's falling over the next few years.
Jason, where does, if we get a stimulus in the U.S., where does it need to be spent? We sometimes forget that, and the market is certainly very buoyant about the fact that it's familiar faces that are now in the administration, that we go to, what happened before President Trump. But it was before President Trump that people actually wanted a change. 70 million people in the U.S. still voted to have, Trump and his policies. How does the new administration bring people together, bring people closer on an economic level?
Yeah, part of it is getting the economy going in a better direction. And that's providing immediate relief to households, for example, through unemployment insurance, relief for states, and most importantly, money for things like scaling up testing. But then there's what the president-elect calls building back better. This isn't just pointing the economy in a better direction in 2021. It's building on infrastructure, green energy transformation, investments in children, child care, preschool. There's a whole ambitious agenda. You're not going to be able to get that entire agenda done, but you have to figure out how to get as much as it possible. And I think that they'll have a bit of a tailwind from a stronger economy in 2021, which will help with other parts of the agenda, I expect.
How much of a green agenda will actually be a shock to a lot of people? It's, jobs lost, and you create new jobs for which you need training. What can the government in the U.S. do to make that transition smoother and with less pain?
Yeah, ultimately the right answer here is a carbon tax. Give the money back from the carbon tax directly to people. You can make the majority of people better off in that transaction. In the interim, there's a set of things like, for example, putting electric vehicle charging stations so that we can shift people over to electric vehicles. That in some ways is, could even be a net job positive. Hardening our infrastructure to deal with climate change, more investment in wind and renewables. The price of coal needs to go up a lot. The use of coal needs to go down a lot. I think it'll be harder to do that part of the agenda in the next year or two, given Senator McConnell. But there's a lot of other parts of the agenda.
I mean, Jason, that's a good place to go here. And it's a little bit off the remit today, but let's go there right now. We have an envoy for climate in John Kerry. Folks, I did a panel with Secretary Kerry in Davos, and I can't convey how astute he is on the numbers at hand. The mother of all debates, Jason Furman, as you identify, is some form of price on carbon, some form of auction of emissions. Are we anywhere near that?
We're nowhere near it until all of a sudden we're there.
Agreed.
I think of something like gay marriage, where it was inconceivable, 1 year and a year later, it was the law of the land in the United States and around a lot of the world. Things change quickly. It's such a rational solution. You can give people the money. You can reduce a lot of regulations. I think a number of companies will find that appealing. Have this one simple thing instead of all these complicated rules. I think border adjustment will help. As some countries do it, they'll border adjust against others. That will push the others into it. Okay, but Jason,
cut to the chase. How is it going to harm a Republican hydrocarbon America?
Coal is the big issue. It would be a big price increase in coal. It would be a big reduction in coal. Coal is concentrated in a few states. You need to do something for those states. You need to do something for those workers. It's going to help natural gas over a decade or two as people shift from coal to natural gas. Actually doesn't have a whole big impact on oil, at least up front. But it's something in the United States. You're talking about 2 or 3 states that you really need to do a lot for to make it work. But most of the hydrocarbon economy actually isn't affected in the next 2 decades.
This has been great. Jason Furman, thank you so much for the brief. Please call us first when you figure out what you're going to be doing after the spring term of EC 10.
EC 10A next fall.
Yeah, do that, please. Jason Furman, thank you so much, of course, with Harvard. In New York City with our First Word News, here's Ritika Gupta.
Thanks, Tom. The formal transition of power between Donald Trump and Joe Biden has finally begun. The General Services Administration has acknowledged that Biden was the apparent winner of the presidential election, and President Trump has called on his agencies to cooperate. Still, the president says he'll continue to challenge the outcome of the election. Joe Biden may have found a Treasury Secretary nominee who can appeal to both bankers and liberals. Wall Street is likely to support former Fed Chair Janet Yellen because they fear a more provocative pick like Senator Elizabeth Warren. And progressives were concerned that Biden would pick someone too friendly to the big banks. If confirmed, Yellen would be the first female Treasury Secretary. Senator Dianne Feinstein will step down as the top Democrat on the Senate Judiciary Committee. Feinstein is 87. She's been criticized from both the right and the left over how she dealt with President Trump's judicial nominees. Illinois Senator Dick Durbin says he will seek to replace Feinstein as the ranking Democrat on the committee. And Bloomberg's learned the UK may ban the installation of Huawei Technologies' 5G equipment as soon as next year. That's to appease lawmakers pushing for tighter restrictions on the Chinese telecom gear maker. The US has urged allies to exclude Huawei on the grounds of its closeness to the Chinese government is an unacceptable security risk. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg, Tom.
Hey, Ritika, thanks so much. Under construction, 57th Street and 5th Avenue, Tiffany's. And, of course, they're going to be under construction with a presumed merger here with the French. Tiffany's out with a very nice beat. What I noticed is, one, gross margins do 200 basis points better than expected. That gets my attention. And also a single headline off the Bloomberg sales in mainland China. They continue to grow. And there's an adverb, dramatically, so maybe light. Tiffany's been elevated here, but lots of noise there around the LVMH transaction. Coming up on the pandemic, a good update from Amesh Adalja of Johns Hopkins Center for Health Security. Stay with us. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Yes, we have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
It's not a silver bullet. What we need is surveillance to be stronger.
The next 6 months in the Northern Hemisphere will be very tough.
It might be a little bit accelerated, but I don't think that is going to be a game changer.
In practice, it is dealt with by each country largely autonomously. But its long-term solution has to be on some global basis.
I would very much hesitate to declare victory now because the fight is far from over.
Terrific mathematics out there on this pandemic. Bloomberg has put together a resilience index, and it is really something to see the countries that have their act together and the countries that do not. No surprise, really, with the names for those that have been following this. But New Zealand, and so much of this is almost a geographic removal. And yet Asia does better. Great to talk to the former Prime Minister of Finland, Mr. Butts, the other day as well. And then those that are challenged here, and I do want to make a point that so much of resilience is based off case analysis, which even our Sam Fazili says is a little bit shaky. I look much more at death dynamics, and hospitalizations, of course, have come front and center here in the last number of days. Amesh Adalja joins us now with Johns Hopkins Center of Health Security. Thrilled that he could be with us today. We talk about resilience, Dr. Adalja. Resilience comes from policy. Which nation seems to be most supple, most malleable at reacting to this pandemic and initiating constructive policy?
I would say that has to go to Taiwan and South Korea. These countries have been able to do, they were able to do in March and February what we can't do even in the United States now in November. And they were able to meet cases as they came because they had a robust policy of trying to interdict very early and being very proactive versus reactive. And they sprang into action very early. South Korea and the U.S. had their first cases on the same day. And just look at the difference in the trajectory because they put in a policy of testing, tracing, and isolating, something we still sadly cannot do in many parts of this country. And we're facing the consequences of that now as we enter these cold months where this virus's transmission is accelerating.
Amish, I want to talk about the vaccines in a second, but first, is there a danger that poorer countries just won't have access to the vaccine, to any vaccine, quick enough?
I do think that's going to be the issue, and it's always the issue during an infectious disease emergency, where you find a disparity between the developed world and the developing world. And we saw that with 2009 H1N1. We still see it with vaccines like measles and polio. So this is going to be a major issue. One of the issues is also the fact that one of the vaccines, the Pfizer vaccine, requires an extreme cold chain, which is going to be hard to keep intact when you're talking about the developing world where electricity may be spotty and we have difficulty even with refrigeration. So I do think that this is going to be a longer endeavor when you're talking about the world. The developed world may mid-2021 have enough of their population vaccinated to have COVID-19 cease to be a public health problem. But it is going to be a challenge for many other parts of the world. And that's what the Bill and Melinda Gates, that's what the COVAX consortium, all of these other entities are trying to assure won't happen. But I do think it's going to be hard going for many of those countries.
Dr. Adalja, how much, are we focusing too much on these vaccines and the fact that a lot of these vaccines are coming even quicker than expected and not focusing enough on hospital capacity, especially in the U.S.? How critical is hospital access right now?
For the next several months, hospital capacity in the U.S. and around the world is going to be the major factor because these vaccines are going to be coming, but they're not going to be available in big enough quantities to make a dent on all of the patients that are already hospitalized. There's around 80,000 Americans hospitalized now. That's something that we have to get through, and it's going to only continue as we go through the Thanksgiving holidays and we see that expected surge that's going to occur.
Right.
So this is something we have to think of these vaccines as lights at the end of the tunnel, but we still have a lot of tunnel to go, and a lot of people are going to die between now and the vaccines, and a lot of hospitals are going to be worrying about capacity long before the vaccine starts hitting the arms of Americans.
Dr. Adalja, would you get on an airplane this Thanksgiving holiday?
It's not actually the airplane itself that's the danger because everybody is masked there and they've got a lot of mitigation. It's what you do when you get to your destination. That's the problem. It's not the conveyance by the airplane. It's what you do when you get there. Just like in the summer, it wasn't the airplane that got you to Myrtle Beach that got you in trouble. It's what you did once you got into Myrtle Beach. So it's the mixing of people that happens when people travel at their destination. That's the issue. I think the airlines have done a good job at keeping the air travel component safe. It's just what people do when they get to get where they're going.
Dr. Adalja, thank you so much. An update from Johns Hopkins here as we go into the holiday week, I should say. Of course, more there are. Terrific virus update, really quite good. She is the lieutenant governor of the Empire State, but Kathy Hochul is much more than that. She has a terrific perspective, not in the big urban areas, but the sprawl of any given state, including her, Western New York. In the 7 o'clock hour, Kathy Hochul. Stay with us. Futures up 28. This is Bloomberg.
deal.
Also prospect for more economic its quarantine period for arrivals from high-risk countries. Now, haven assets broadly weaker. Bitcoin, though, extending its searing really varied from 25,000 to even 300,000 by the end of the next year. So take with a very big pinch of salt. Coming up, more Bloomberg surveillance.
It's important for each side.
During the Trump years, or
that it's even more difficult.
There's a lot of concern in Hong Kong, and you can see the way actions, reactions, and further anxieties arise. I hope we can settle down to a new normal.
Nightmare scenario for markets would be if the unemployment rate in November will begin to go higher.
Even before the pandemic, we had a lot of frailties.
Equity volatility and equity uncertainty still remains elevated.
I think we will weather the storm, and I do hope
than Ferro. Tuesday morning, equities positive 0.7%. Tom Keene, Janet Yellen widely reported to be America's next Treasury Secretary.
Good conversations. I think Bloomberg really out front in this story. Talking to Jason Furman, who was across from Chair Yellen years ago at the chairman of Council Economic Advisors, but many other voices as well, John. It's going to be fascinating to see what she does in a
twice.
Well, we'll see here, and there's many other announcements to come. I'm frankly, John, Department of Defense, after the chaos we've seen over the last number of weeks. So that'll be an important announcement as well. But, John, there's many, many others. And the backdrop here is maybe the clearing of uncertainty. And look where the markets are moving.
3,600 on the S&P 500. I know Dow. What is it, Tom? Dow what? 30?
Yeah, Dow's over 10,000, John. 29,831. The Dow is up 64% off the March bottom on a
Janet Yellen will do. And I will say, just Rich Clarida, ECB's Philip Lane, IMF's Kristalina Georgieva. They're speaking on a panel at the IMF about how to create a framework in a low-yield world, very much what the Fed and all central banks are concerned. People pushing back with the expectation of more growth ahead. Just ticking up, still very low. And at 1 p.m., President-elect Joe Biden and his Vice President Harris are going to be announcing key national security and foreign policy posts.
No, I don't want to say anything.
Sort of really interesting session off the back of the positive vaccine news. That a really decent, solid US PMI. Euro dollar out to 118. 170, 119 briefly, then we turned lower. The dollar pretty choppy, but I've got to say this morning the trend is clear. It's a weaker dollar story. In a bond market, yields up by not even a basis point to 0.8586. %. Commodities, there's a % or so over the last month. The title of your research, sir. What is normal these days?
Well, first of all, we're trying to And at that point in time, you're looking at not an economy that's bouncing off the bottom with this discussion of cyclicals and low quality stocks. You're looking at an economy that's probably growing GDP in the low to mid threes, which will be very good, but actually slowing because we're moving towards a mid-cycle kind of environment already. Going to be the easiest to put back to work.
John, let me go to what you do best. And folks, Golub's reports are exceptionally dense with ratios and margins and all that. Or even elevate?
Yeah, Tom. I mean, if you actually look historically, and I know we're getting really in the weeds, and I don't know if that's a surprise. It's pretty much what typically happens.
Jonathan, I know that one of your sectors steepening of that yield curve.
Well, I think there's a half dozen. I think there's a half dozen things that are really working to get released in the second quarter. Because my third point is that a valuation perspective relative to the way they normally trade, the two cheapest sectors are financials and healthcare. So you have all of those things working for you, even if you didn't get any yield curve steepness. Now, if you don't have at least a flat to steeper yield curve, the trade's not going to work. But even 15 basis points of steepening over the next 12 months, along with those other positives, is probably all you need for it to be a leading sector.
John, we've got to talk about the regulatory backdrop as well. So much discussions about Chair Yellen, monetary policy, fiscal policy. The last act of the Fed under Chair Yellen wasn't a monetary policy decision. It was a decision to stick the boot in to Wells Fargo. John, do you have a call for next year, your base case on regulation around this administration?
It's a good question, and we need to hear more from regulators. I will tell you the question that we're getting about Janet Yellen in the Treasury role is, what is she going to do to monetary policy, and is she going to do more QE? And the questions are kind of bizarre because they're really questions as if she was being appointed to another term as Fed chair, not as Treasury secretary. Her role is going to be different. I would assume that there's going to be some real respect for her thinking on those issues, given the role she's been in. But she doesn't control that, and she's going to. It'll be very interesting to see which levers she looks to push.
John, what is your call on the banks, on the financials?
Yeah, we're overweight financials. We have a very strange sector call, or at least historically strange. We think that next year is going to end up being another tech and growth year. So we're overweight what we call tech plus, but we're also overweight financials. And it's that we think the financials are in a much healthier position, or a much more advantageous position as compared to energy, materials, industrials, traditional cyclicals that do really well as the economy is reaccelerating. We think banks are going to do better because, as I mentioned before, yield curve likely steeper, loan losses coming in less, regulatory backdrop we think will be reasonable.
John, great to catch up with you, sir. Really enjoying the research through the year, and especially over the last couple of weeks. Enjoy Thanksgiving if we don't catch up. Jonathan Golub there at Credit Suisse. Thank you, sir. This equity market up 20.
John, what I'm seeing from Credit Suisse, as he said, is tech and banks. And I mean, it's way away from the conventional one-way call on cyclicals, materials, and the rest of it as well. The one-way call Malum and Fidesz, I think it's it's amazing.
consensus view is at this point for next. Banks are still the driver of these things, and there's no let up from the Fed in purchasing bonds. And
juicy yields. And I just wonder, Patrick, what do you do with that debt now? Do you just sit and hold it? Do you sell it? You were talking about funding, using the winners as a funding source to go and buy something elsewhere. What do you do with the credit you bought back in March?
Yeah, we haven't sold it yet, and we were buying bonds that were yielding 4.5%, 5.5% for investment-grade debts, and their yield. Capital. I think that's really why we see the euphoria right now of chasing cyclical assets. Those are the only things that aren't trading at extreme all-time highs almost. So it's not necessarily a healthy dynamic, but it is a dynamic that central banks and
is there with that important question.
What's happening right now is you got yield in March by buying corporate bonds. You can get yield right now on some cyclical equities. The banks all of a sudden are going to start paying dividends again next year. So you aren't getting a yield. You're not getting a real return on corporate debt. If that's your objective, which many investors really put their capital at risk to grow purchasing power, you do have to take more risk to do that now.
Patrick, great to catch up. Patrick Armstrong there of Florimi Wealth. Thank you. Tom, that's the story, isn't it? And if we keep this sort of surface level, if you manage to get it in there right now, or you could just sit on it. And that's the decision that people like Patrick have got to make. And I say it's a high-class decision because for the people who got it really right, they were the people that bought credit at the lows in March.
What do you do when you're in cash? It's a four-step process. It's not out of bonds into oil like what Lisa did with 2 oil drums in her living room. What was that, a year ago? She was brilliant on that.
North of $5 trillion at one point, I think. Well, I was going to say, how much
let's say you got a barbell on institutional money and you got your risk out 10 years, 20. Lisa's got 50 year. You need the cash on the other side to barbell it.
So, John, what are you going to buy with it as an influencer? What should people be using their cash on? Yeah, exactly.
I don't think I should be recommending trades for anyone out there. on new makeup lines. I'm not sure anyone's going to want to go in that direction.
Skinny ties.
Maybe they will.
You know,
I mean, Tom and I used to talk about the line outside Glossier down. When we talk
With the First Word News, I'm Rishika Gupta. President-elect Biden reportedly will name Michelle Flournoy to be Secretary of Defense and to help the economy get made it official with its acknowledgement. Boris Johnson has confirmed that England's national lockdown will end next week. It will be replaced by a tougher system of regional restrictions designed to last until spring. Rules
We have some good news.
You can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need is we need surveillance to be stronger. We need public health measures because you have no other way at the beginning. This is your best weapon, and you need to use.
I do believe a targeted fiscal stimulus is going to be in order. To really begin a more
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
If you get vaccinated, it's clear that the vaccine is safe and has an effectiveness of 100%, irrespective of the dosing. So that's incredibly important to remember. And of course, we will have that discussion with the FDA as well.
That was Ruud Dobber there, the AstraZeneca Biopharmaceuticals Business Unit President, speaking to Bloomberg in the last 24 hours from London and New York this morning. Good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Here's the Tuesday morning price action. We add to the gains of Monday. Every single Monday so far seems to be a vaccine-related story.
Tuesday,
and the
John.
good news is the story's positive. I'm saying that was Monday. Up 0.2.
Interesting day. I thought it'd be a little sleepier, and I'm wrong. Futures up 30. The VIX now under 22. That's a big deal, 21.97 on the VIX. We've been looking at the pandemic, and we look at it now under the gauze of Thanksgiving and travel. Yesterday, I believe, the biggest day for TSA since March. Mercedes Carnathon joins us at Northwestern and has wonderful academics and actual data of what we do. Let's call it medical epidemiology. We're thrilled she could join us this morning. Mercedes, would you fly this week?
You know, I have to say, I was very tempted to wish that I could be somewhere a little warmer than Chicago right now, but I think that it's really not safe. And what concerns me are the crowds and the number of people at the airport and what I would be bringing from Illinois, which currently is a high-burden state for coronavirus, to my loved ones in other cities. And I'm not willing to take that chance personally.
Mercedes, could we have had Thanksgiving with our families if there had been better testing, if it had been more available and faster to return?
You know, I think testing is a huge part of it because it does tell us who is infected. But if only those individuals with symptoms or a direct exposure present themselves for testing, we still don't know what's going on with asymptomatic transmission. And that's really the wild card here. So testing wasn't going to do the trick on its own. That needed to be combined with everyone adhering with the recommendations to stay 6 feet apart, socially distance, wash hands, so that we could just drive down transmission to a level where we can get around and see one another.
Mercedes, the hope has come all the way off the back of the vaccine news of the last month. And I just wonder, Professor, from your standpoint, how quickly things can normalise and the vaccinations can ramp up to the extent we need it to pull back on these restrictions. Do you have a time frame?
In the first quarter of next year, starting then following other vulnerable populations. So there is what we hope
vaccine. I love the idea I've seen in articles. How hard is it? It's like the cable TV last mile thing. How hard is it to get the vaccination to my sore left arm?
You know, there are a number of steps that have to happen in order for it to reach individuals, starting with the capacity for the vaccine vaccines to be stored safely. As that region, appointments need to be scheduled, eligibility about the vaccine is the also
making sure you can disclose that you have been vaccinated to get yourself back into a public forum.
be able to overcome the, American feeling of I can be responsible for myself in order to require vaccination in any setting.
Well, Professor,
To happen, but what really does need to happen is that we use this as an example of how badly things can go when all we think about is my liberties and me, and not our neighbor and our collective society. We have, in effect, prolonged the damage from this pandemic by this slipshod approach.
I think that's the challenge, Tom, as we work our way out of this. What are the lessons and what do we do next time? And let's hope there isn't a next time.
John, the first one is everybody's talking about COVID this, COVID that. We've had 3 or 4 COVID events. Do we get to a pan-COVID vaccine out there somewhere? And on the civil liberties, it's simple. There's going to be a lot of vaccine pressure.
frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements we can actually have the superb measurements that we expect of sea level rise, but also the waves, the significant wave height, which is the top 1/3 of the waves if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters, which is not negligible.
Our generation's biggest problem.
Outperformance on the small caps, up 1.4% on the Russell. The Nasdaq is where the underperformance is. Once again, we advanced just 1/3 of 1%. So steeper. But here's the picture I want to take. At a June 2018 high, crude WTI, a post-pandemic shock high at 43.51, up a little more than 1%. And
moving gold with a really difficult chart. 1809 the ounce of gold bugs in massive retreat here. The theories over to policy. No one has done the movement of theory over accessible. He is a former governor of the Federal Reserve System.
Well, in terms of the ability for monetary policy to do its job, and also particularly in the environment we're in now, where interest rates are near zero and monetary policy is less effective as a result, fiscal policy Janet has emphasized that although right now we need very expansionary fiscal policy, we have to worry about the long run budget balance. And that's something that
Massachusetts to Mr. Wall Street?
in this case, in Treasury, if they're really good at understanding policy, that's not always the case. That she was also then a president of the Federal Reserve Bank in San Francisco, which is when I interacted with her quite a bit because I was a governor at the time, and we used to meet periodically. Actually, before every FOMC meeting, we'd always have a meeting, either at lunch or dinner together. And also, she was the chairperson of the Council of Economic Advisors. She really understands policy. She's been involved in that world now, really very, very seriously at the top levels for 20 years. And she knows her stuff. And she's also not a partisan type person. Jen and I have some different political highly qualified to do that.
The focus right now, Rick, is on how closely she'll work with the Federal Reserve, and quite clearly everyone says very closely. For you, how close is too close? So
too close is when the Treasury tries to dictate to the and so in that sense, critical because monetary and fiscal policy do interact. On the other hand, what you don't want is where the Federal Reserve independence is challenged. Now, that's not going to happen under a Biden administration. Trump was really awful on this. That his criticisms of Jay were just brutal, mean, calling him loco, saying Jay's an idiot, and so forth. That's done. Biden understands what was done during the Obama administration, but also before that, that the Fed works best and the economy works best when the Fed is independent of day-to-day interference by the politicians. That will continue. Janet is somebody who strongly believes in the independence of the Fed. She's not somebody who try to dictate to Jay Powell. Instead, what you'll have is cooperation, which is exactly what's needed.
Although you'd have to say, Rick, in the back end of 2018, the president might have had a point when it came to judging and feeling out the market a little bit. We can put that to one side and maybe touch on that another.
Which then can actually cause problems. So pushing the Federal Reserve to do expansionary policy can lead to a rise in inflation expectations, which would be very damaging. So the way you talk, it's not just what you do, but the way you talk and the pressure you put can actually be very damaging. And in fact, most presidents before Trump, particularly since the Clinton administration, have understood that it's, including George W. Bush, understood that leaving the Fed alone actually helps promote a good, strong economy. But that doesn't mean that the Fed is always right. They do make mistakes. And with a crystal ball, we could always do better. But the key point is let them do their job. They've got a job to do, their technical people to do it. Janet fully understands that.
Rick, when it comes to making policy at the Federal Reserve, those decisions are grounded in economics. When it comes to making policy in the Treasury, it's economics and it's politics too. And I just wonder, Rick, when you start to think about trade, if you have a position on trade in the Federal Reserve, is your position on trade exactly the same when you are running the Treasury?
I think Janet certainly is going to be pro free trade in an appropriate way. And particularly, very important is if somebody's not playing by the rules, you want to be able to deal with them, but you don't then abuse your allies in that process. So if you really want to deal effectively with China, you don't slap crazy tariffs on the Europeans, which is what's been done under Trump. And this has been very damaging to our ability to actually get a more even-handed trading situation that will be beneficial to the U.S. and particularly with China. So I don't think that the positions, it's very true.
Domestic level, there is a question of how she is willing to run the economy hot in tandem with the based on what we know and based on her comments.
So I think the answer is they haven't, and I think there's good reasons not to. Janet's very, very good on this. I had a lot of interaction with Janet when I was the governor at the Federal Reserve. Both of us were strong advocates of controlling inflation and inflation targeting, and that Janet gets that. The key issue is that right now we're in a very different environment. It's actually a remarkable environment for somebody who's been a professor for now over 40 years and a monetary economist, which is the big problem of central banks is not that inflation is too high, it's too low. And so at this particular environment, it makes sense to pursue expansionary policy, both monetary and fiscal. Which could be beneficial, but has not there. So the issue here is not that they should worry about too high inflation, but the markets need to be afraid of Janet on this.
Rick, come back soon. Always great to catch up, sir. Frederick Miskin there, the former Federal Reserve Board Governor. Thank you, sir. Thank you very much. Tom, do you remember that? Feels like a lifetime ago. Back end of 2018, when the president called Jay Powell a golfer, a powerful golfer who couldn't putt. That feels like forever ago.
I need to be careful what I say, but no, I guess I can't.
When have you ever been careful about what you say?
I'm being very careful about what I say right now. I will say that the President of the United States has been very active tweeting this morning, mostly having to do with Fox TV and some of Fox's more conservative competitors.
What did they do with Tom Keane in the last 10 minutes?
Or they get better, that's according to the International Air Transport Association. The trade group estimates that airlines will lose almost $39 billion. administration has acknowledged that Biden was the apparent outcome of the election. Bloomberg has crunched the numbers to determine the best and worst places $28 billion. He passed Bill Gates and now trails only Jeff Bezos.
From Bloomberg Television around the world.
Won't take the vaccine.
We remain concerned about vaccine.
Where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
She's a University of California, Berkeley trained
Morning. Good morning. On what a Janet Yellen Treasury is going to look like if indeed we end up, Tom, with a Janet Yellen Treasury in the years to come.
We will see. John Farrell, good luck with that. Right now, the market's up 30. Dow futures up 324, and the VIX is Cass Sunstein is at Harvard Law. You know I loved his book Impeachment, which never once mentioned book of 2020.
Out. The book that is out, Too Much Information, is about signal versus noise, meaning there's just so much variability. So if doctors are asked, do you have COVID-19? One doctor will say yes, another doctor will say, I don't think so. If you ask one grader whether the paper gets an A, the grader will say yes, and another will say no, it's a B minus. That's the kind of noise that we're worried about, and it's a source of pervasive unfairness in the criminal justice system, in the welfare system, with permits and licenses. It's also a source
and disagree with Mr. Trump would say he majored in certitude. It was he knew what he was talking about. How do we escape our
name, a learned hand? Was this a prank by his because you can be sure that you're right, as you know, Democrats and Republicans often are, but they're sure. But things go sour if they're too sure that they're right. So there should always be a voice in a democratic society saying, you know what? In your head, you become calmer, nicer, and that savage part of the human spirit kind of dissipates.
This makes sense, and at the same time, you're walking a fine line. Filters on President Trump's tweets, as well as other certain information that's been disseminated. How do you walk this line? How do you create a filter that is fair and gives the impression of fairness to people looking for independent?
Nurses, it may be doctors, it might be patients, it might be people who want to build things, and they are being hammered by paperwork requirements. This is especially bad in a period of COVID-19. So that's not a free speech issue. It's an issue of imposing burdens, which are often like walls between the American people and things that they have a right to. The second thing is disclosure of information. that's mandatory. So if you get a medicine, it might have 7 pages of side effects information, which you'll never read. Or if you get a mortgage, you might be drowning in stuff. Or if you buy a product at the grocery store, there might be a ton of things there which are so complicated in terms of information mandates that you're not going to benefit from them. So information mandates is a second thing, which is often excessive and often kind of clueless, and that is not a free speech issue.
Well,
then there's a third thing, which is, Twitter and Facebook having warnings and disclosures as part of their product. That's actually technically not a free speech issue. In fact, technically not, because Twitter and Facebook aren't governed by the First Amendment because they're not government. And that's how our Constitution was set up. Mm-hmm. And itself a big positive in terms of freedom, that a private social media outlet doesn't have to worry about the things the government has to worry about. Now, having said that, there are free speech issues in the non-technical sense that it's completely fair to discuss that private actors often raise.
Cass Sunstein, thank you so much. Just can't say enough about too much information, and to come next year with Professor Kahneman of Princeton Noyes as well. Cass Sunstein at Harvard Law. Lisa, we've got to go back to the equity markets, which is just remarkable. The VIX now under 22 solid, 21.94. That'll be really interesting to watch. I mean, Lisa, we are so far across the reach of this pandemic from the almost the delinkage of this crisis with what we see within the equity markets. I can honestly say I've never seen it.
Yeah, the near term versus the long term, right? The near term looks pretty bleak. The long term, people are pricing in that we're all fine and good and taking airplane rides to Moldova to get oil or whatever it was. What were you getting the other day? Sea salt? Where you're really into salt, right? You're going to take a trip to Europe just for the salt. Look, honestly, I think that the conviction that people have that we're heading toward brighter days is what's pervading the markets. The question is, how big will the bumps be and how much scarring will there be from those? And that really is the uncertainty going forward.
And what we learned today, clearly, folks, is the idea of rotation and the many different arguments, the nuances of rotation, including Gina Martin Adams at Bloomberg Intelligence. And I do have to mention John Golub, with a very different view at Credit Suisse as well. Again, futures up 29, Dow futures up 316. The level on the Dow, 29,863. And some tangible dollar weakness. And I don't want to write home about it, but nevertheless, tangible dollar weakness this morning. And taking the headline, wow, can we get a 1,700 print on gold? 1,800 down $30. On the airlines, Mr. DeJuniak, the 11 o'clock hour. This is Bloomberg.
Once it goes into this plant, it's heated up very quickly to 600 or so degrees. It basically carbonizes it, turns it into a carbon-rich material. Obviously kills all of the pathogens.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From New York and London, for our audience worldwide, good morning, good morning. The countdown to the Open starts right now, 30 minutes away from the opening bell, with futures advancing 30 points on the S&P. We begin with the big issue, the transition formally beginning. The GSA acknowledging Joe Biden, the apparent winner of the U.S. election, granting the president-elect access to federal agencies, intelligence briefings, and $6 million in funding. President Donald Trump calling on his agencies to cooperate, tweeting the following: "I'm recommending Emily and her team do what needs to be done with regards to initial protocols, and have told my team to do the same." The Biden cabinet already taking shape, preparing another round of appointees today, following a slew of nominations Monday. Wall Street focusing on one in particular. Former Fed Chair Janet Yellen, widely reported to be America's next Treasury Secretary.
In a way, the markets are sitting thinking Washington policy pretty well.
She will have great respect for the independence of the Fed.
She's been very
We know how well she can navigate those political waters, choppy as they may be.
She'll be a very effective Treasury Secretary.
I'm hoping Janet Yellen takes a page from good Treasury secretaries.
The United States would be reestablished very quickly under a Yellen Treasury Department.
Let's bring in the Bloomberg team. Bloomberg's Kevin Cirilli and Sonali Basak. Kevin, I want to begin with you, sir. Do we just assume that if this goes ahead, she gets confirmed?
Yes, look, I think based upon the conversations that I've had over the past couple of weeks here in Washington, Jonathan, there's no question that former Fed Chair Janet Yellen, who, mind you, was able to get confirmed already through a Senate approval process when she was named to the Federal Reserve in 2013, is likely going to face that as well in the Republican-controlled Senate. She had really strong bipartisan relationships when she was overseeing the central bank in terms of that dynamic. And so it's fascinating because flashback to 2013 when the nation was emerging from the 2008 financial collapse and issues that came up during her confirmation hearings pertaining to too big to fail, audit the Fed, remember that? I would anticipate some of that is going to come up, but largely the focus of her confirmation hearing will likely be for senators having an opportunity to ask about other parts of the job that we don't know where the former Fed chair stands on, pertaining to sanctions, pertaining to tariffs, pertaining to international risk and international terrorism. Because remember, the Treasury Department also oversees that, as well as CFIUS. And so all of that I would anticipate is going to come up. And just a quick note, just in terms of the Biden transition, they are anticipated to announce further picks today. But here in Washington, D.C., the names that were announced yesterday and as well the names that are expected to be announced today are a return to sorts, not just to the Obama administration, but a return to the familiarity of how diplomacy is conducted geopolitically. And that's based upon conversations with not just Democrats, but also Republicans. Jonathan.
That's part of the dollar weakness story as well in the market. Kevin, great to catch up, sir, as always. Kevin Cirilli down in D.C. Another busy one for Kevin ahead of the Thanksgiving holidays. Wanted to catch up with Bloomberg's Sonali Basak as well. Sonali, because I think it's really, really important. The last act over at the Fed from Chair Yellen was not a monetary policy decision. On the way out the door, it was to stick the boot into Wells Fargo. What are you hearing?
That's exactly right. So her approach to the big banks over a longer period of time in conjunction with the other regulatory agencies. And by the way, John, not just the banks, but the non-banks, the shadow banking system that many people have been concerned about from March until now will be a main question. But over the last 24 hours, Kevin made a very good point here. What my sources have been wondering about is how she will react in the medium term and the longer term to Biden's economic policy. So that is is alternative energy sources, that is the infrastructure plan, but then in the even longer term, how she will behave as a world economic leader in relation to G20, G7, IMF, World Bank, and restoring a lot of these global relationships that the U.S. has had, in addition to how she will treat sanctions, which has been an increasing function of the Treasury Department and of big concern to the banks.
Sonali, before we let you go, a story crossed the Bloomberg about 4 or 5 minutes ago on Deutsche Bank and work from home. I imagine the interest in this story for our audience is going to be sky high to the moon through the rest of today. What are they saying?
So Deutsche Bank is now saying that they may have more people more permanently work from home. It's not surprising from Deutsche Bank, only because they were earlier on than the other banks to say, OK, more people can work from home more permanently in this second wave of this crisis. Plus, they are cutting costs and reducing a lot of their real estate footprint. But as you know, John, for Wall Street, what a move. This is not something most banks are very comfortable with, this idea from working at home. They want people to come back into the office.
I don't know many people that still want to work from home even twice a week that work in the financial industry right now. Sonali, it's great to catch up. As always, Sonali Basak, thank you. Back on topic, Jim Bianco of Bianco Research questioning the market's optimism surrounding Biden's Treasury pick, writing the following. Risk markets are celebrating Yellen in a way that suggests she's heading both the Fed and the Treasury. They're celebrating an easy money Treasury secretary, but technically the Treasury doesn't set monetary policy and it's supposed to not influence it. Jim joins us now for more. Jim, your early take, please, on what's about to develop, possibly in the next 24 hours and maybe even the next coming years.
Yeah, Janet Yellen has not been appointed as the Federal Reserve chairman. That seems to be the mistake that everybody is making right now. I saw your interview about 20 minutes ago with Rich Mishkin, and I couldn't tell if he was promoting her for Federal Reserve chairman or for Treasury secretary. Those are two very different jobs. Her skill set is well qualified to be a Federal Reserve chairman. As a diplomat, as a chief economic negotiator, if that's what the Biden administration wants, her skill set is not Christine Lagarde's skill set when it comes to negotiating things like budgets or sanctions or tariffs or talking with other international world leaders. Now, she may grow into the job, but it's a big unknown right now. I think all Wall Street sees is easy money and that they're happy with this idea of easy money. So over the short term, they're going to celebrate this. But over the long term, there's going to be a lot of questions as to where she fits in that spectrum.
Well, I think more importantly, Jim, it also means that they recognise that we can't have a premature declaration of success like we did last time around, both on the monetary policy side and I think as well on the fiscal policy side. Does that strike you as a little bit more constructive, the fact that someone who has been conditioned by the previous cycle, that knows they probably should have ran it a little bit hotter, is now in a seat where maybe she can dictate policy on the other side of things?
Yeah, you would hope so. I know, and it comes down to a big question is the Treasury Secretary is an important part of the economic voice of the incoming Biden administration, but she's not the only voice as well, too. There is going to be some internal negotiation within the Biden administration is what exactly do they want her to do? What exactly do they want from the economy? And is everybody within the Biden administration on exactly the same page with Janet Yellen? And then will she go out and sell it as if it's part of her own policy? We'll have to watch and see if that actually happens.
Jim, I've got to say, a bit of a blind spot for me is the international outlook from the Treasury Secretary, if it is indeed Janet Yellen. We know a lot about the monetary policy story. We know a lot about the fiscal policy story. You can just read through the transcripts, the different interviews she's done over the years on that front. Jim, we've just had a drip feed of her views on trade, and I wonder how those views develop when you sit in a more political seat and you start to face the likes of China and Europe and elsewhere, what that relationship looks like.
That's a big unknown. Not only do you have to consider that, too, but let's assume that the Senate stays Republican, and then she's going to have to articulate that with Mitch McConnell in the Senate as well, too, and try and strike a balance between all of them. If that's what the administration wants, as her being their chief negotiator in all of this, in addition to talking to the Chinese, in addition to talking to the Europeans, in addition to talking to the Japanese as well, too. So it's going to be something we don't know. We really don't know where she falls down on all of this. She's really not had to do that in any of her previous jobs. Doesn't mean she can't do it. It's just a giant unknown at this point.
Perception is everything at this point then, Jim. There's so much we don't know, but you know the stories start to get told and the consensus builds and people start to get a firmer grip of those stories and they start to trade on them. And I wonder what kind of stories we're going to hear that will develop and maybe be reinforced in the months to come, Jim. One of the trades right now is a weaker dollar story. They take the news of the last 24 hours, they plug it into that trade and say more fuel for it. Does that resonate with you, Jim?
Yeah, I think so. I think that the short term, over the next several weeks, is that they're looking at closer cooperation between the Fed and the Treasury, as I've even termed it, almost a merger between the two of them, resulting in easier money, resulting in possibly a reversal of the Mnuchin Trump CARES Act, taking the money back, sending it back. And that has been cheered by risk markets as we move forward from here. OK, I get that. But that's not the only thing that the Treasury Secretary does. And beyond, after that initial euphoric trade is over, then we're going to have to figure out what else she stands for and where else she's going to go.
Jim Bianco of Bianco Research. Jim, a lot of unknowns there. Great to catch up. Enjoy Thanksgiving, sir. A happy Thanksgiving to you and the family. In the FX market, the dollar just turning positive. That dollar weakness trade, I know a lot of you have got it on. Kit Jukes of SocGen looking for 127 on euro dollar, back end of 2021. It's been a difficult one to develop in the last couple of months, in G10 at least. The more broader BBDXY, much, much weaker on that story, largely because of the Asia influence over in China, and EM as well, with the Mexican peso in the mix. But in the here and now, dollar weakness to start the day, but as the day has progressed, as this session has grown older, that dollar has got a little bit stronger. Let's get to the market desk and get some movers. 20 minutes out from the opening bell with futures still elevated. Here's Abigail.
Hi there, John. Well, we do certainly have a tailwind for stocks, global stocks and futures here in the U.S. Lots of different reasons, but let's keep it simple because there is reason to think that when we take a look at these movers, that a lot of it is the reopening rotation and the cyclical trade that we've seen. American Airlines, after gaining more than 8% yesterday, up another 4.5% on hopes that folks will be traveling more soon. Occidental Petroleum up nearly 9% today after gaining 22% over the last 3 days. That catch-up trade for the beaten down energy trade plus oil trading higher. The same deal for banks. Take a look at Wells Fargo, up 3.8%. The yield curve is steepening again, plus the Janet Yellen expected nomination and upgraded by Raymond James to outperform. And then finally, where is the money coming from? Well, Apple yesterday, John, had a really bad day, down about 3%, breaking technical levels. Today, a tiny bit. It will be interesting to see whether or not that can hang on, or if we continue to see the move into those cyclical sectors and names and out of big tech, John.
Abigail, thank you. Coming up on the programme, governors across the country tightening up restrictions, issuing executive orders to slow the spread ahead of the holidays. That conversation up next with Nuveen's Brian Nick. As we count you down to the opening bell, 18 minutes away from the open. Equity futures elevated on the S&P up 0.7%. The Russell just absolutely ripping over the last month, up another 1.85% in early trading. This is Bloomberg.
explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
There's a lot of concern in Hong Kong, and you can see the way actions, reactions, and further anxieties arise. I hope we can settle down to a new normal.
When you combine all those previous stimulus programs, $40 billion reached the people of New York City. All of those good investments are now wearing off, and people are running out of money. If there's not a stimulus, the state of New York is going to be in dire, dire shape, and unfortunately might have to pass on cuts to localities.
New York City Mayor Bill de Blasio warning of a potential layoff series without further action from Washington. Governors urging caution ahead of the Thanksgiving holiday with virus cases spiking across the country. LA County reporting record new cases on Monday, putting it on the brink of another lockdown. North Carolina issuing an executive order extending mask mandates, closing indoor bar service and limiting occupancy in restaurants and stores. Michael McKee of Bloomberg joins us right now for more. Mike, more restrictions into Thanksgiving.
It's kind of funny, John. Wall Street seems happy this morning. They're looking ahead to a vaccinated world. But the warnings from policymakers are we've got several months of pain ahead, and we're getting that validated by the data. 59.2 million cases of COVID worldwide, and that's 1.4 million deaths. Here in the U.S., 12.4 million cases now, almost 260,000 deaths. And at the current rate of increase, we'll hit 300,000 by the end of the year, the virus running unchecked. So policymakers are taking action. You mentioned Los Angeles, a 5-day average of more than 4,500 cases a day. And they said last week that's enough to bring on a lockdown. So that is likely coming there. New York has put limits on restaurants and bars in some areas, and the city does face that big budget shortfall. You heard what the mayor said about New York being in dire, dire shape. Hong Kong shutting bars, nightclubs, and bathhouses from Thursday until at least December 2nd. And cases are climbing in Japan. The government there trying to decide whether it needs to close or limit stores and restaurants. We should also note, since I'm the eco guy, Germany's IFO index of business confidence fell a lot more than expected today. Predictions are that country may see a recession in the first quarter. One bit of good news, bad news, and this is maybe good news for you, John, since you're in London. The Prime Minister, Boris Johnson, confirming he's going to lift the lockdown orders there and replace it with a tiered system of restrictions in different regions. England is going to chop its quarantine time for arrivals as well from high-risk countries if they take a test. On the bad side, don't expect a spike in passengers. The International Air Transport Association says the airlines around the world are going to lose $39 billion next year, more than double the forecast in June. That's on top of losing about $120 billion in the current 12 months, which is up 40% from the prior outlook. Together, the loss is 5 times what the airlines accumulated during the 2008-2009 recession. I'll just close by noting the World Health Organization says we're going to have to be putting up with this pandemic and taking steps to avoid getting the COVID virus well through next year.
I'll pretend I didn't hear the last bit. Mike, you're more than just the eco guy. You know you're more than that to me. Michael McKee joining us on the economy and a whole lot more. Newsweek's Brian Nick weighing in on the situation, the dilemma facing local governments throughout the pandemic, writing the following. Policymakers will be reluctant to force businesses to close, knowing they could be ordering a death sentence to their local economies. A gentle rotation into cyclicals still makes sense in a world more likely to normalise next year. Brian joins us now for more. Brian, it's my question of the moment. What's normal?
I think normal is at least a return to former levels of revenue for a lot of these companies that are in industries that just can't function in the presence of the virus. So travel, leisure, hospitality, these are areas that, we can't pull forward the effects of the vaccine. We're pulling forward good news in terms of the market pricing in the vaccine for next year, but we can't actually pull forward the effects. So people are still largely not getting on airplanes, not staying in hotels to the same extent that they were. And I think that the bigger risk in the near term is for businesses that can function during the pandemic, but simply aren't going to be able to because the customers aren't showing up because they're concerned about getting sick. So those businesses are, we're not taking care of those businesses. That's what I was referring to when I said it could be a death sentence to order these businesses to lock down. So my sense is we're going to go forward here in the United States without widespread mandatory business closures because you simply can't ask a business to close if there's no support from the government to help them reopen when the time comes.
That's the problem right now on the policy front. So, Brian, let's think about it. If you want to maintain that cyclical tilt, that's your call. Where do you want to lean? What's the regional bias there? Is it still the United States or is it more towards Europe, which has gone through the lockdown process and is starting to reopen now with vaccinations set to start on a similar time frame?
Yeah, I think over a short time period, I think Europe does, make some sense. It's underperformed all year, mainly because it doesn't have that large tech sector that the U.S. does. But if that's not the sector that's going to be in vogue next year as we kind of look forward to a more normal economy that has a wider and broader participation from more different types of companies and those companies' stock, I think it can make sense to look at Europe. Certainly, we're looking at areas like real estate in Europe. I think Japan also is getting a look, and broader Asia from our equity strategists, because these are areas that, again, haven't had to deal with as much in terms of the virus. They still obviously have that contagion effect from economies that are weaker across the world. But as they get more tied in, for example, with China and that broader region in some of these trade deals, I think that makes more sense to look, moving forward as companies that are relatively more insulated from the pandemic, at least for the time being.
Brian, we've got to do two things on a program like this. You've got to work out what the trajectory for economic data looks like, and then you've got to work out how investors will respond to that. It was interesting last week, retail sales downside surprise, jobless claims the wrong kind of upside surprise. Then yesterday, US PMIs from market, really tidy, really decent, really solid. How are you going to navigate that story in the months to come when many people do anticipate that won't be the story? The PMIs from yesterday will not be extrapolated out through year end, that we could see some weakness into Q1.
I think that's right. And while the PMIs are something that the markets look at, I'd much rather look at the hard economic data, which is showing us that the U.S. economy is slowing down, I think creaking a little bit under the weight of the virus. But what's interesting really about the PMIs is the divergence between the countries and the areas of the world that have reinstituted some kind of lockdowns. PMIs are extraordinarily sensitive to lockdowns. They're less sensitive to the virus, which is now worse in the U.S. So as long as the businesses stay open, even if their virus is sort of spreading uncontrollably, it seems like the PMIs do okay. I'm not sure that's going to be true of retail sales, perhaps not consumer confidence, and perhaps not the labor market, which is going to depend very much on whether people are willing to come to work and whether businesses are willing to hire new people. So I look every week at these continuing claims data. I'm going to be looking tomorrow at the income and spending data from October. That'll give us a bit of a hint on how the fourth quarter started. Most of the October data looks okay. I'm more concerned about the November, December, January data. I suspect we're going to get one or two negative payroll prints in the next couple of months.
Given where we're priced right now, are you comfortable sitting here in cyclicals through the prospect of a couple of negative payrolls prints, Brian?
Yes, because we are balanced, and we're talking about a relatively short period of time. We're in a dark tunnel. We still think there's a bright light at the end of that tunnel. So as long as our time frame is not 2 or 3 months, we have a 6 to 9 to 12-month time frame. I do think this trade comes good, and I think it does. It's also you're sitting in areas of the market that are obviously have done less well and are less attractive or more attractively valued. So you have some sense that you eventually get paid to be in these positions when the economy is able to reopen. But the next couple of months are going to be bumpy. That's why we're pretty balanced. We don't have a cyclical tilt. We've just been adding to cyclicals, basically taking off our underweight.
Brian, great to catch up, sir. My best to you and the team ahead of Thanksgiving. A happy Thanksgiving to you. Brian Nick of Nuveen. Coming up on this programme, the analyst action you need to know. That conversation just around the corner. And later, UBS's Laura Kane joining us at the opening bell, making a case to rotate into the laggards and a conversation about new energy and old energy after a huge rally in EVs in the last couple of days, for that matter, through the whole of this year. That's coming up shortly. This is Bloomberg.
Jawohl. Können Sie einmal noch ganz kurz zu uns kommen? Ganz kurz.
Davor stellen?
Five minutes away from the opening bout, it's Tuesday morning. Good morning to you all. Here's the state of things. A beautiful New York City with futures advancing about 30 points, up 0.75%. That's the story in the market. Here are your morning calls. A look at some of the analyst recommendations on Wall Street this morning. We begin first up with Raymond James upgrading Wells Fargo to outperform from underperform. $32 price target. The analysts seeing positive catalysts on the horizon with headwinds bottoming. That stock up by almost 4% in early trading. Your second call from Oppenheimer upgrading General Electric to outperform a $12 price target. The analysts writing that the pace of improvements is picking up with a turnaround gaining traction. We're up by a little more than 5% there. We're flying going into the open. And finally, Argus upgrading Target to a buy 205 price target. The analyst highlighting the retailer's growing relevance among shoppers after posting significantly stronger than expected comparable sales, up there by almost 1%. Up next on this programme is the era of big tech dominance coming to an end. UBS's Laura Kane joins us at the opening bell, making a case for going small and cyclical in 2021.
It's important for each side to understand the sensitivities of the other.
Former U.S. Secretary of State Henry Kissinger said the incoming Biden administration should move quickly to restore lines of
go higher. It got a little spooked by the idea that geopolitical tensions are rising.
A couple of weeks ago, Deutsche Bank and the research team thought about the idea of maybe taxing people more if they work from home. And then, as we understand it, Deutsche Bank, the executive team, the C-suite, weighing the possibility of allowing Deutsche Bank employees to work 2 days a week from home. I wonder what the research team now think about the prospect of that and paying higher taxes. Maybe we can ask them. The opening bell ringing in New York City. Equities advancing 27 points on the S&P 500, up 0.75%. Call it 0.8%. Outperformance clearly, though, in the small caps. The Russell up 1.4% going into the cash open. Switch up the board into the bond market we go. Let's take a little look, a sneak peek at Treasuries. 2s, 10s, 30s. Yields up on 10s and 30s just a little bit. The curve steeper just a little bit. Up a basis point on 10s to 0.8668%. And a dollar weakness story from earlier this morning. We give some of that up. Euro dollar 118.53. Just can't get through 119 and hold it. Through 119 yesterday. Back down to about 118.50. Where you do start to see some price action, get my words out, in a commodity market. Crude, WTI, post-pandemic shock highs on WTI at almost $44, up by 1.95%. They're the moves cross-asset. Let's get to the market desk and get you some movers and bring in Katie Greifeld. Hey, Katie.
Hi, John. Well, plenty of action this morning, and let's start with Tesla. It's up about 5% already today, and it's gained about 33% since it was announced that Tesla would be added to the S&P 500 later this year, and that's helped founder Elon Musk pass Bill Gates as the world's second wealthiest person. Now, going down the board, General Electric is up today, as well as the company's turnaround continues to pick up momentum. It announced a small acquisition last week after 2.5 years of selling assets, and that's earned an upgrade from Oppenheimer yesterday. Now, on the earnings front, Dix is a little bit lower today, 2%, and that's even though it reported this morning that comp sales rose a record 23.2%, but obviously the momentum is coming out of that stock. You also have Best Buy lower as well, even though it beat estimates across the board, but the stock is sinking after the company provided no future guidance on the upcoming holiday season. Now let's check in on the cyclical trade. Your reopening stocks are broadly higher this morning. United Airlines is leading travel stocks as that vaccine optimism continues to build. You also have AMC soaring up about 10% at the open, and that's after gaining 12% yesterday. Moving down, you have retailer Abercrombie & Fitch also sharply higher after beating earnings per share by a huge margin. Its EPS was 76 cents. That is, after estimates that it would be flat last quarter. And I'll note that the apparel retail index is at its highest level since February. Finally, we have action camera chip maker Ambarella up over 9%, nearly 10% after lifting its outlook, and perhaps another sign that consumers are getting ready to venture outside. Back to you, John.
Katie, thank you. Great work. Bloomberg's Catherine Greifeld there on a story in this equity market at the open. About 2-3 minutes into the session, let's peel it back a little bit. The Russell outperforming, the small caps up by about 1.3%. The sector composition of the move this morning, this Tuesday morning, we advance across the board pretty much every single sector on the S&P 500 in positive territory. The financials up by 1.6%. Steeper curve helping out that story this morning, though it hasn't needed the steeper curve over the last month, really. It's just been a massive rally into the cyclical trade, and the banks have been part of that, up almost 20% over the last month. But the huge move on the session on the month, energy, up by 2.8% this morning, and on the month, heading for its biggest monthly advance, quite possibly on record, getting a boost from the so-called new energy stocks as well. Tesla's relentless rally propelling its peers, with electric vehicle stocks surging as well. So it's the new energy, old energy story. Abigail Doolittle, both of those stories almost hand in hand, absolutely flying.
John, it's simply extraordinary, both, as you're mentioning, old energy and new energy really just taking off here in the month of November. A real FOMO-like feeling to the trading quality. Really surprising, actually, for old energy, not so much for new energy. Let's take a look at what we do have on the month for old energy. The S&P 500 Energy Index, as you were mentioning, up more than 30% this month, heading to its best month ever. Simply extraordinary, really on this reopening optimism. Oil, of course, up more than 20%, so trading higher in sympathy with oil. Now, yesterday, the energy sector up 7% on its own. The S&P 500, a little bit of a lift, but it's only 2.4% of a weighting, so that's why we don't have more of a lift. But names like Occidental, Devon Energy, Exxon, all taking off. As for new energy, let's take a look at an ETF, a new energy ETF on the year. A double at this point, up more than 102%. And we compare this to an S&P 500 global oil index, old energy down on the year by about 34%. It's clear where the bet is going. And the last 2 months have really been hot for new energy. A lot of this, particularly over the last few weeks, having to do with President-elect Joe Biden, the expectation that his administration will be friendly to new energy. Not surprisingly, John, it is helping out electric vehicle makers. A redhead just crossed the Bloomberg moments ago saying that Tesla's market cap is above half a trillion for the first time ever, or above 500 billion.
Wow.
So there you see it. Big gains for electric vehicle makers. New energy and old energy really taking off, John.
Abigail, thank you. What a run it's had. Old energy, new energy. One's got a secular tailwind behind it. The other one's got a headwind in front of it, but it's a catch-up trade. You've got to draw a distinction between the two. What is going on here? Laura Kane of UBS Wealth Management expecting the laggards to lead the way, fueled by a broadening recovery and vaccination progress. The team at UBS seeing the cyclical rotation continuing into 2021 and writing the following. We expect the more economically sensitive markets and sectors, many of which underperformed in 2020, to outperform in 2021. Our preferred areas include small and mid-cap, select financial and energy names, and the industrial and consumer discretionary sectors as well. Laura, I'm pleased to say, joins us now. Laura, can we just start on the energy, please? Laura, can you walk me through your thinking around the old energy story that we see in the energy players, oil, etc., and what we're seeing with the EVs as well?
Yes. So, hi, Jonathan. First of all, thanks for having me on today. And I would say that this old energy, new energy story actually makes a lot of sense to us in terms of our outlook for 2021. So we've been calling 2021 a year of renewal for two reasons. One, we're going to be recovering from this pandemic, but secondarily, we've seen a number of transformative trends set in motion by this pandemic. And among those, I would highlight digitalization trends and also the shift toward a more sustainable economy. So when I think about this idea of old energy versus new energy, you have old energy exposed to the recovery from the pandemic. So we expect to see energy demand trends move in a positive direction as things like travel resume, and overall we see business and consumer activity picking up into 2021. And then shifting over to this idea of transformative trends in the secular side of things, we do see this momentum around a more sustainable economy. We have a positive view on green technologies that are exposed to areas like clean energy, EV, and even energy efficiency trends. And I would highlight the Biden administration, yes, as an incremental positive, but we've also seen a lot of positive indicators coming from around the globe. So many countries have announced more aggressive emission targets in 2020. And also we've seen the EU put in place some pretty sizable green spending plans as they recover from the pandemic as well. So putting it all together, this movement that we're seeing across both old and new energy actually makes sense in the context of some of the trends we see for next year.
Laura, do they operate on different time horizons, though? Just as far as new energy, old energy is concerned. I mean, I'm trying to work out whether the old energy story is just a catch-up trade that loses some steam going into 21.
Yeah, so I would say that the old energy is more of a catch-up trade. You're right. Right now, we are actually neutral on the energy sector in that 6 to 12-month view. I think that there is still some risk to the downside. So we're going to see this ongoing narrative of vaccine versus virus play out, especially in the very near term. So there is certainly some risk to that story. But looking out to mid-2021, we have about a $50 price target on oil. So we do think that the energy markets are going to continue to come into balance as we get into the middle of next year. And then in terms of some of the more secular trends around, clean energy, new energy, yes, that is a longer term time horizon, but I think we are going to see, given some of the more near-term catalysts on the policy front, we are going to see some movement in those areas. We're already seeing it. And I would add to improving economics. That's a more long-term trend. As clean energy becomes cheaper, as battery technology improves, those are some of the long-term catalysts that I would expect to see in more of that new energy domain.
Laura, that's the long time frame the secular growth story that people have just piled into over the last 12 months, and they expect it to continue as well. One thing that's been left for dead over the last few years has been the FTSE, the UK. And I keep coming across notes, Laura, suggesting that UK equities have got some serious catch-up to do from here. Does that resonate with you, Laura?
Indeed, it does. So we do have a most preferred view on UK equities. You're right. It's the catch-up potential. It's the extraordinarily cheap valuations on a relative basis. We do see a lot of room for improvement. Also, with investments in the UK equities, you are getting that exposure to the global recovery. You're also getting exposure to the recovery in energy prices. So there's a lot of positive undercurrents there at some pretty undemanding valuations. So we do have a positive view on UK equities, despite the overhang, of course, from the Brexit uncertainty.
Laura, fantastic to catch up with you. Come back soon. I'd love to talk more. Laura Kane there of UBS on this story. Morgan Stanley looking for 17% upside for the FTSE 100 through 2021 versus just 10% upside for the MSCI Europe. The bullish notes around the FTSE, not the UK, I should be specific, the FTSE 100, the market in the UK, really piling up on my screen over the last couple of days. I want to head back to the market desk and get stateside with Abigail. Hey, Abigail.
Hi there, John. Well, we really have a bullish bid for some of the equity indexes here in the U.S., the S&P 500 and the Russell 2000 in particular, that small cap index hitting yet another record high, a string of them after not having one since 2018. On the other hand, you have the tech-heavy NASDAQ down just slightly. So let's break it down. Clearly, the rotation trade is back in business, staying in business, actually. We have the airlines and the cruise line operators higher on hopes that the economy is going to improve. Folks will be back out there traveling as the vaccine gets into the system. We also have those new energy movers. Fuel cell, take a look at that, up 13%. Plug power had been higher earlier, up 1%. But it's not just the new energy. It is also the old energy, along with banks. That part of the cyclical rotations in play. Wells Fargo, one of the top stocks on the day. This, of course, as the yield curve continues to steepen. JP Morgan is another big winner for banks. And then Devon and Apache, these energy stocks just continue to soar. As we were talking about, the energy sector headed toward its best month ever. Really, that's the degree of the catch-up trade. And then tech, however, John, Apple, NVIDIA, and Zoom, those stocks are lower. That is where the money is coming out of.
What a run that energy trade has had over the last month. Abigail, thank you. Awesome work as always. Abigail Doolittle there at the market desk. Coming up, we've had about 45 minutes of happy talk. Let's talk about defaults sending shockwaves across China's credit markets. That conversation up shortly with Mike Kontopoulos of RB Advisors. From London and New York, this is Bloomberg.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
China's one of the few economies that will grow this year. So while maybe the longer term remains quite a challenge for them, there certainly are opportunities there. There are some, we think, interesting opportunities there in China, both from a growth perspective as well as in fixed income.
Risk appetite fueling a rebound in emerging market equities, touching a fresh record high and heading for their biggest monthly advance since 2016. I want to bring in Bloomberg International Economics and Policy correspondent Mike McKee for more. Mike, that's the equity story. There's also some interesting things happening with credit, specifically in China.
Yeah, let's start with emerging markets in general. Damian Sassower and our EM team putting together an outlook for 2021 that's relatively positive for emerging markets in general because they say creditors are going to be able to look past the pandemic and start to see an increase in the fundamentals, and the reduced policy uncertainty should support growth there. Risk premiums are going to compress as currency volatility subsides, and there's going to be that always and ever-present search for incremental carry going offshore. China, though, different question. A reality check there after years of ramping up on corporate debt. Corporate debt defaults hit 100 billion yuan for the third consecutive year. A surge in missed repayment obligations the past 2 weeks, driving onshore delinquencies to $15.8 billion, according to Bloomberg data. The offshore figure, $8.1 billion. Investors are running scared now in the world's second largest credit market. Among the most notable losers you can see there, state-owned companies. Investors have been concerned about whether or not the government is going to let them default. They haven't missed debt payments, and all four are rated AAA by Chinese domestic rating firms. But a surprise default by a state-owned Chinese coal producer last month cast doubt on the guarantees that have long underpinned the idea that you could just buy into the government-backed borrowers. Crackdown on unregulated lending that the government put in place, shadow banking, and tighter rules on asset management, making it harder to borrow there as corporate debt to GDP surged to a record 160% at the end of 2017 and still rising, John.
We learned the hard way a long time ago, didn't we? They're AAA until they're not.
They're not.
Mike, great to catch up, as always. Mike Contopoulos of RB Advisors saying China debt defaults are healthy. He says the following: debt defaults will be part of the move to free markets as the government lets bad debts fail. This is a healthy, if not painful, way to delever. This has been an ongoing issue and will likely continue to be one as long as you have a transition occurring in China's economy. Mike joins us now over the phone. Mike, great to catch up, sir. So no need to worry about contagion coming from some of these names.
Well, thanks for having me on, John. I think, as we sit back and think about emerging markets broadly, I'm glad that you separate China from the rest of broader EM, because they really are two very different stories at the moment. In China, as Mike mentioned, you have this transition to free markets and the lack of a backstop from the government that you've probably had in the past. And quite frankly, I think that is incredibly healthy, right? The government doesn't want to tolerate bad actors. Remember, too, up into this month, the number of defaults of SOEs was pretty consistent with past years. But what we had started to see was that deal docs were pretty egregious, and Vice Premier Li said, listen, enough is enough. And I think that's near-term pain for probably long-term gain.
So you've got to separate the China credit story from EM credit. That I understand, Mike. But for many people, they've used the EM trade as a derivative as a stronger China economy. Are you saying there should be a little bit more nuance than that?
I do think there should be more nuances. Think about broader EM at the moment. We've had defaults in Argentina. We've had defaults in Ecuador. We've seen Lebanon default. We've seen South Africa downgraded. These are all major economies that are seeing either defaults or downgrades occur, regardless of what's going on with China, regardless of support from the Chinese economy over the last several years. They haven't been able to stave off defaults and downgrades in other areas of emerging markets. Think about it from the coronavirus crisis that we're seeing today. China has a much better handle on COVID than the rest of EM and arguably even developed countries like the United States. And so as we think about sort of differentiating between China and the broader emerging market universe, I think you have to acknowledge that, yes, in the past, what has been good for China has been good for EM. And in the future, that also may be the case. But for the time being, we're not seeing that really flow through.
Mike, I want to finish on this, looking out to next year. Almost the end of November. Naturally, we've already established a pretty sizable consensus on the outlook for 2021. Vaccinations start. Global synchronized growth starts to come through. That starts to bleed into the equity market. International outperforms. You get a weaker dollar in the mix as well. Mike, are you comfortable with how strong that consensus is right now?
Yeah, I mean, I think there is something to be said about the consensus trade. I think, near term, you certainly are probably going to see bouts of weakness followed by bouts of strength. I think, in the rates market, what we've seen is, generally speaking, the rates market look through to further growth, similar to what equities are doing at the moment with small caps and sort of the rotation trade into value. I don't think we're in the clear, though. And as an investor, I still think you should be balanced. At RBA, we currently manage a pretty balanced portfolio across both fixed income and equities. With a tilt towards value, I feel like that's the right approach as we go into 2021 and hopefully a further recovery and vaccine for everybody in the world.
Mike, come back soon. Potentially before year-end. I'd love to talk US credit with you for a little bit longer. Mike Contopoulos there of RB Advisors on the situation. Send my best to the team for Thanksgiving as well, please. Let's get back to the market desk. 22 minutes into the session. Equities doing what equities do. Over the last couple of weeks, equities advance. Here's Abigail.
John, well, it certainly is risk on, especially sector-wise. I would argue that the sector composition is more risk on in the S&P 500s. Let's call it 0.6% gain. So if we take a look at the sectors, most of the sectors, 10 of the 11 S&P 500 sectors are higher. The one sector that is not higher, tech. So that money is coming out of the Apples and the Nvidias of the world as it goes into energy, financials, industrials, materials. This is exactly what's been happening over the last few days, weeks, and even over the last 2 months. John, you and I over the last several months, and you with all of your many guests have been talking about the cyclical trade. Can it take hold? On a monthly basis, it has very much taken hold, even on a quarterly basis. The top sectors for the S&P 500 this month, take a look at energy, financials, industrials, materials, all sharply higher. Energy, in fact, on the true month, up about 35%, heading, as you know, to its best month ever. That catch-up trade, investors want in on those beaten-down sectors, not reflected in the S&P 500 overall because of the lower weightings, but nonetheless, huge gains, very impressive.
It continues. Abigail, thank you. Coming up on this program, the market-moving events you need to know in our trading diary. That's next. This is Bloomberg.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
I'm certain that we will be able to bring our debt levels down and avoid what you could call a debt crisis because we're focused and we've been open enough by telling the nation that we have too much debt.
You're used to this story now. Stocks up. Cyclicals outperforming, small caps on top. Let's get you the trading diary. What you need to be watching this week. Let's start with US consumer confidence coming at the top of the hour. St. Louis Fed President Jim Bullard speaking at 11 a.m. Eastern. President-elect Joe Biden announcing another round of cabinet nominees at 1 p.m. this afternoon. Plus, we get the FOMC minutes on Wednesday. And finally, US markets closing Thursday for the Thanksgiving holiday. I'll catch up with you Friday and tomorrow. For our audience worldwide, this was the countdown to the Open. 26 minutes into the session, we advance. Catch me on Twitter at Ferro TV to continue the conversation. This is Bloomberg TV.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
p.m. in London, 10 a.m. over in New York. We're 30 minutes into the trading day in the United States. From London,
I'm Guy Johnson, my co-host in New York, Alex Steele. Welcome, everybody, to Bloomberg Markets. Alex, the story continues. Small caps outperforming.
Small caps, another record when you take a look at the Russell 2000. Cyclicals also getting a pretty big boost. The dollar is a little bit lighter, yields pushing a little bit higher, and commodities like copper near a 6-year high, crude the highest level since March. I call it transition time because it was a double whammy for markets yesterday, potentially Janet Yellen becoming Treasury Secretary, as well as finally the transition being allowed to take place for President-elect Biden, and that kind of the twofer here for the market cyclical rally here, Guy.
Absolutely. Well, as you say, President-elect Joe Biden plans, we understand, to nominate the former Fed chair, Janet Yellen, as his Treasury Secretary. That's according to people familiar with the matter. Investors appear to be welcoming the choice. Let's look at what it means for Washington's partisan battles. Joining us now, Bloomberg's Chief Content Officer, Marty Schenker. Marty, in many people's book, this is an inspired choice. It ticks so many boxes. Just your sense of what this means for the way that Washington is now going to operate.
Well, I mean, I wouldn't describe it as necessarily inspired. It is an inspiringly safe choice because she is so well known on both sides of the aisle. I think she'll have a relatively easy time getting confirmed. And she's a traditionalist in many ways. She's been at the Fed, she's been in the White House, and she is a great believer in consensus, and I think that's what you're going to need for the incoming Treasury Secretary.
Marty, nonetheless, I mean, it's the first woman Treasury Secretary. She was the first woman to lead the Fed. This is definitely, in that respect, a bolder choice. However, I guess my question is, how do the progressives feel about her?
Well, I think they're very supportive. There is reporting out there that Elizabeth Warren was the person who recommended Janet Yellen to Joe Biden. She has spoken quite forcefully on the issues of income inequality and on the glass ceiling for women. So she actually does have a considerable amount of support among the progressives in the Democratic Party.
Marty, you describe her as a safe pair of hands. So let's just explore that for a moment. Is there a line of argument that says the reason why Yellen is being put into this position is because the Biden administration recognizes that the U.S. economy still faces significant risks, and as a result of which Yellen, who knows how the plumbing works and knows how Washington works, is able, therefore, to navigate that were we to witness another crisis in the U.S. economy? Is she being put in because of that?
I don't know necessarily she's being put in because of it, but it is, you make a great point. No one really knows what the world is going to look like in 3 months' time. If this resurgence in the virus gets worse, if shutdowns become greater, if the economy slows significantly. Janet Yellen has worked through economic crises, both in the White House and at the Fed, so she knows what the policy tools are and what to do. And I think you can't underestimate her ability to work with the Fed, since she was there and she knows Jerome Powell very well, so they can work together should there be an economic downturn. And I think that's why you're seeing the market react so positively to her appointment.
Marty, thanks so much. It is always wonderful to catch up with you. Marty Schenker joining us, Chief Content Officer for Bloomberg. Also, what got the markets excited is the fiscal and the monetary working more closely hand in hand. That's something that Janet Yellen spoke about earlier on Bloomberg Television just last month.
I believe while the pandemic is still seriously affecting the economy, we need to continue extraordinary fiscal support. But even beyond that, I think it will be necessary. But a good side of low interest rates is that it reduces the interest burden of the debt. And I think it makes it possible, and it's not a short-run phenomenon, short rates. It's something that's going to probably be with us for many years to come, and we can afford to have more debt than we used to think was sustainable.
Well, joining us now from Washington is Anthony Coley, Corner Office Strategies founder. That's a political consultancy, and also former Deputy Assistant to Treasury Secretary under the Obama administration. Anthony, help us understand A market participant is going to say, great, cool, monetary fiscal policy working together. The other side of it comes from Terry Haynes of Pangea Policy saying, touting Yellen's nomination as a watershed in rebalancing the fiscal and monetary policy decisional process is wishful thinking, not grounded in Washington reality. Help us square these two.
Well, let me start by the watershed comment. I agree with that commentator in the sense that it is watershed in the sense that this is a history-making pick. There are only two departments, Treasury and Defense, that have never been helmed by a woman or a person of color. And so Joe Biden is putting together a team that looks like America. My hope is that all of society, including business, will take a cue from what he is doing and accelerate efforts to put in place qualified people of color and women in positions of influence. Now, to what's happening here in Washington, you know, this job is not a walk in the park by any stretch of the imagination. It is the pace of the Federal Reserve. Of the Treasury Department is completely different from that of any central bank. And then the politics of the moment, and I think this gets to your question, is on a completely different planet. This is a world, Washington working on Capitol Hill and going up against people like Mitch McConnell. It's going to require a different set of muscles. She is uniquely suited for this moment, given her understood role in finding consensus at the Federal Reserve. So I think it's watershed in the sense that she is exactly what the country needs at this moment, at a time when 70 million people voted for Joe Biden's opponent. He won decisively, but what this moment is calling for is people in positions of authority who can work with the other side, who can work to build consensus. That's what the moment calls for, and I think that's what makes her such an inspired choice.
Just in terms of her ability to get a deal done and get it over the line on stimulus, Anthony, she is clearly expected to deliver more stimulus than the market was initially looking for. That seems to be the sense in the market today. My question is, how do you think she'll do in dealing with Mitch McConnell? If you put these two people in a room, do you think that she's capable of changing minds? How embedded are the two sides at this point? I'm just kind of wondering if the market's getting a little ahead of itself.
Well, the political dynamics have, of course, changed. One of the things we haven't heard from Republicans over the last 4 years is this focus on the deficit. I suspect that once Joe Biden takes the oath of office, the deficit hawks are going to come back out on the Republican side. And that could, complicate efforts to get another stimulus. I agree with what Janet Yellen and what Jerome Powell and others have said. In this moment that we're in right now, we're about 5 weeks away from the end of the year, when a number of safety net stimulus payments are going to expire. The data says that additional fiscal and monetary policy is needed. It's my hope that Mitch McConnell and others on the other side of the aisle will listen to their constituents and put together a robust package. I suspect this package, whenever it occurs, will not be as big as Nancy Pelosi and others have suggested is needed, but I do think it will happen.
Something that we've heard Janet Yellen talk a lot about are things like automatic stabilizers to some extent, a carbon tax she's been very vocal on. She's labeled as kind of like an Uber dove and all of that. How do those things translate into running Treasury?
Yeah, I think the biggest issue that she's going to face is this issue of inequality, structural inequality, including wealth inequality. It's my hope that at the end of her tenure, that she will be able to point to specific economic issues that can significantly change the fate of millions of working Americans, both Black and white. I will note for the record that tomorrow is the 6-month anniversary of the murder of George Floyd. And I think we were all hardened by the protests, the demonstrations from all people of color, black and white, how they all joined together to protest this heinous act back in May. And then we saw a number of statements from business leaders. We're at this moment now, and I think this is a challenge that Janet Yellen will have. We're at this moment now where people in the country are expecting specific measures to make their lives better from elected officials. That's a challenge that is not just unique to Janet Yellen, but it's unique to all of us in public life and in business and quite frankly, society.
And on that point, we will leave it. Anthony, thank you very much indeed. Anthony Coley, Cornerstone Office strategist, founder and former Deputy Assistant Treasury Secretary. Thank you very much indeed. What have we got coming up for you? We're going to have more on the market implications of a Yellen Treasury. Art Hogan, National Securities Chief Market Strategist, is going to be joining us. That's next. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me. I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Let's check in on the Bloomberg First Word News. I'm Rishika Gupta. Bloomberg has crunched the numbers to determine the best and worst places to be in the coronavirus era. We looked at where the virus had been handled most effectively with the least amount of disruption. Our COVID-19 Taiwan, South Korea and Finland. The bottom 5 include Czech Republic, Belgium, Peru, Argentina and Mexico. British Prime Minister Boris Johnson has confirmed that England's national lockdown will end next week. It will be replaced by a tougher system of regional She's been criticized from both the right and the left over how she dealt with President Trump's judicial nominees. Illinois Senator Dick Durbin says he will seek to replace Feinstein as the ranking Democrat on the committee. David Dinkins, who broke barriers as New York City's first African-American mayor, has died. Dinkins had a calm manner, a dramatic shift from both Wife Joyce died last month at the This is Bloomberg, Guy.
Deliver more of the same?
I think the expectation is that this is someone that we know, and we know that she's very good at she speaks the Fed language, right? So
is pricing in, though, a lot of stimulus, or in some
bind itself to the fact that the next stimulus package will likely be and tied to the getting the budget reconciled. And I think that after that, as we head into the spring, and hopefully that, there's something that we're able to kick in the first quarter. But if, as things sort of work their way into the spring and we see the
Do you think there's an expectation in the market that Powell continues as Fed chair? It was interesting because only a few weeks for Powell. Are we looking the wrong way here?
You know what? I don't think you've got an incoming administration that would like to make any big changes. We know what we have with Jay Powell. He's done a fantastic job of staying out in front of this. He's been the most vocal of anybody during this pandemic as to what the economy needs to recover. And clearly, appears to be the Winston Churchill of this time for us. And clearly, I think that at this point in time and where we are in the recovery, I'd be shocked to see a change at the chairmanship of the Fed.
So no change, though, but I'm wondering in terms of, say, dollar policy or just implicit understanding of the dollar, is it going to be back to a stronger dollar world now?
Well, it's easy enough, I think, to say that we're in a strong dollar policy world, but it's harder to sort of orchestrate that in the market environment, right? So if we are to look at, the things that would drive strength in the dollar, part of that would be the need for a harbor of safety in a global economy that is doing worse. And if next year brings better global economic activity, that safety bid probably comes out of the dollar. Secondly, the amount of stimulus we're probably baking in to the value of the dollar versus a basket of currencies, likely has to moderate back a bit. And I think that, towards the sort of beginning of next year, we'll start to contemplate, wait, we're not getting that massive fiscal stimulus that we had talked about and contemplated in September and October. So likely that is a counterbalance for that. But in general, I think when we look at the dollar, it's related to monetary policy. Monetary policy is likely to be easy for a long period of time. So to the extent that, we're going to have a dollar that's probably in a range that we have seen, unfortunately, over the last 6 weeks, and that's likely lower than where we had been at the beginning of this year.
Art, how much further has the vaccine trade got to run?
Well, I would tell you this. it's interesting. There's 3 Mondays in a row with consecutive good news on the vaccine front and, quietly some better news on therapeutics, but that's juxtaposed with the increasing caseloads. And I think that at some point in time, when we've seen this happen 3 weeks in a row, where that starts to take hold and we realize that, yes, while that's good news and likely good news for all of us in the first half of next year, the bad news is we're living through the path of the virus getting worse before it gets better. And I think that settles into markets. And I think some of those sectors that have actually outperformed in this sort of vaccine euphoria, travel and leisure in particular, and perhaps some electronic vehicle bid, probably comes out of the market for a bit, and we'll probably have some mean reversion back to where things were settling in sort of end of October, because I think some of the November moves that we've seen, especially in travel and leisure, have gotten ahead of themselves. I certainly think the economically sensitive cyclicals like the industrials, materials, and financials can continue apace, but I certainly think there are other sectors that have gotten ahead of themselves.
All right, so would you be selling the rips then, or is this like a time to buy puts, or is this just time to buy something like big tech when you have these days when small caps hit a record?
Yeah, it's amazing how quietly the Russell 2000 has outperformed the S&P 500, and not just in the month of November, and it's a 2x beat, but over the last 30 days. So this has been a trade, while we're talking about it a lot over the last 2 days, it's been with us for the last 30 days. And I think that you need to rationalize what it is that you're looking at. And if you're buying the Russell 2000 right now in small caps in general, because you expect better economic activity in 21, I think there's some logic to that. But if you're jumping onto that trade right now and saying, the best thing to buy are cruise ships and airlines, then I think that you've gotten ahead of what will likely be the recovery in some of that discretionary consumer activity. So to me, we would rather have you balance your portfolio with technology on one side in a barbell approach and economically sensitive cyclicals, but focus more on things like energy, industrials, materials, and financials, and not as much on that, the resurgence of travel and leisure. And I think that's where we're probably the most exposed to overvaluation right now.
Hey, Art, really good to catch up with you. Always love your perspective. Art Hogan of National Securities. Happy Thanksgiving, by the way. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Chinese capital market, as you know, is nascent, is just developing, and so we think there's an opportunity to build out that. But that's not all. We're also focused on continuing to build our presence in the Greater Bay Area. It's been a good business for us.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Live from New York, I'm Alex Steele with Guy Johnson in London. This is Bloomberg Market. So here's a story that caught our eye today. For some, it's happy holidays. For others, not so much. So Amazon, Guy, apparently is handing out hiring bonuses of up to $3,000. They want to have enough people to get through the holiday shopping season. But then on the other side, you get workers who are not getting that money. And you know what they're getting? Vouchers. And I'm talking like $10 for a Thanksgiving turkey voucher.
Yeah, and this is kind of a really difficult choice, isn't it? You want to try and attract people into the company. At the same time, you're probably taking your eye off the ball when you're not managing the people that you've already got, assuming that they will stick with you during this crucial period. It's going to be an ongoing theme. It's interesting that we are hearing increasing talk of unionization at Amazon facilities. That's just going to change the dynamic. Organized labor is going to be a big part, potentially, of the post-crisis world. It was interesting to see that we saw that California ruling when it came to the gig economy. But nevertheless, you are certainly hearing greater and greater calls of unionization in places like Amazon.
Or does the fact that you could make an argument it's somewhat of a monopoly mean that any unionization won't have the same kind of impact that it might have 30 to 40, 50 years ago? What will also be interesting for me is that they're making the argument that you need to pay this $3,000 signing bonus because of COVID, right? The cases are ramping up. You need to draw the workers in. But they did pay workers an extra $2 an hour in the middle of COVID back in the spring. So you wonder if that's going to come on board. If it doesn't, that's not going to look very good.
Yeah. We're about to have a labour market economist who's going to be running the Treasury. It's going to be interesting to see
Great point.
Ultimately how the labour market changes as a result of that. I think you want to look at places like this to maybe get an idea of what's going on and how far policy can reach in to the workplace, maybe to change and even up the playing field. Alex, we're going to talk more about what's happening with Thanksgiving. The holidays are coming. We're going to stick with that holiday theme next. We're going to speak to the CEO of a company that tracks transactions, card flights. Derek Webster is going to be joining us next. This is Bloomberg.
In our interconnected world, if people in low and middle income countries miss out on vaccines, the virus will continue to spread and the economic recovery globally will be delayed. Equitable access is in the national interest of each and every country.
But this also means if we have a vaccine, we should have a common approach to give a fair share to everyone so that the most vulnerable groups, the frontline workers and the healthcare workers, for example, are the ones who get the vaccine first.
We're donating another $70 million to fight COVID-19. $50 million of that will be for buying vaccine doses for low-income countries, and another $20 million will be for researching even further and new vaccines altogether.
Il nous faut nous assurer que les conditions réglementaires et politiques sont toutes réunies pour un accès le plus large et rapide possible à ces produits, tout en respectant les standards internationaux de qualité. C'est pourquoi la France propose que puisse être rapidement adoptée une charte d'ACTA qui réaffirme ces grands principes. Partager la connaissance, soutenir les systèmes de santé, avoir des produits rapidement accessibles et abordables.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From London, I'm Guy Johnson. Alex Steele's in New York. This is Bloomberg Markets. For a read on the consumer and where we are heading into the holiday season, let's turn our attention to Bloomberg's international economics and policy correspondent. Mike McKee, over to you.
Well, Guy, the question is, happy holidays or happy holidays? Retailers were enthusiastic about this holiday season after the drop in COVID cases this summer. They thought maybe people would be exhibiting some pent-up demand and sales would be good. You can see what they thought in this chart. There's a glut of container ships off the coast of Los Angeles, tons of stuff ordered by retailers coming into the country. You order in the summer and it gets here in time for holiday season. And so that's kind of what retailers were expecting to see happen. But now we have a COVID rebound. Stores, bars, restaurants closing again. And shall we say, analysts aren't sure whether the season will be naughty or nice. With apologies to Barry Ritholtz, these numbers I'm going to show you are generally made up, but they give you an idea of what people are thinking. The National Retail Federation tends to be bullish about their membership. They yesterday forecast a rather wide range for holiday sales during November and December, between 3.6 and 5.2% over 2019. Last year, they say sales rose 4%. So it will either be the weakest year since 2015 or the strongest since 2014. Independent analysts more pessimistic in their holiday outlook. PricewaterhouseCoopers sees sales unchanged, and Deloitte sees sales up just 1% to 1.5%. What are consumers themselves saying? Well, they are more pessimistic. The Conference Board's Consumer Confidence Index just posting a decline in confidence in both the present situation and expectations. And buying plans for cars, appliances are depressed as well. And for TV sets, below last year's levels. About the only thing I guess we can be sure of, Alex, is that the level of online versus in-store sales will tilt heavily towards buying by computer. And I want to mention, in case Santa Claus is listening, our producer, Jenna Strem, is hoping for a new phone this year.
Oh, that's right. You were just talking about that. That is true. All right. Bloomberg's Michael McKee, thank you very much. Well, joining us now for more is Derek Webster, CardFlight founder and CEO. So CardFlight tracks payment activity at over 70,000 small businesses that use their technology to accept and process payments. The company is also monitoring how the pandemic is changing consumer payment behaviors and is out with their latest report. Just help me understand what you notice in terms of the sensitivity of COVID cases and then corresponding spending.
So, Alex, we've certainly in the early first waves of COVID saw significant decreases in spending at small businesses across the board, across the country. But lately, in the past few months, we've seen much less sensitivity to closures, to spikes across the small businesses we serve. And I think, it goes to show that small businesses are changing how they operate, and consumers are certainly changing how they spend. But in general, I think consumers and small businesses alike are finding ways to move forward and to live through this.
Which areas have seen the biggest digital catch-up, Derek?
Certainly. Well, so many of I don't know if this is digital, but certainly a lot of the biggest growth categories we've seen have been a lot of services businesses. So on-site technical services, people are really investing in their homes as they're spending more times in them. So certainly, whether it be plumbers or general contractors or repair people, I think consumers with the means are investing in their homes and making those improvements, or in some cases trading up to larger homes for those that have it. Whereas some of the bigger declines have been certainly clothing and apparel organizations, private transportation type sectors.
Yep. Unless you're buying sweatpants, so there's that. But there's also some difficulty, Derek, understanding what's going to happen when we get this kind of fiscal stimulus at the end of the year and we don't get any more unemployment checks, et cetera. On the one hand, people say, look, they've saved a ton. It's going to be fine. Savings rate is high. They have money to spend. The other is that we're going to see a real crimp in spending for many, many people. Have you noticed any sort of shift in spending as we head towards that?
I think both are true on balance, but it's really a barbell. You have people that, where unemployment is high and there's pockets of that and consumption is down and just people don't have the means, they're certainly spending less. And then you have other people in the market who have been able to, consumers that have maintained their jobs, they've moved to a fully remote stage, their stock portfolios are up. So those consumers have high levels of confidence in their spending, and how they're going to navigate through this holiday season is going to be different. But in general, I think consumer spending for people with the means is going to stay strong.
Can I just come back to my previous question and ask it in a slightly better way? I can't remember the last time I used money. Genuinely, notes and coins. How many of small businesses have changed the way that they accept payments? I'm really wondering what the lasting effect of COVID is going to be on the way and the efficiency in which these small businesses operate.
Absolutely. And so there's two major trends there, and it's kind of, it's basically how the in-person payments are taking place and then whether an in-person payment is necessary at all. So in terms of how the in-person payment is taking place, we've seen significant growth in contactless tap to pay. So we're seeing, we're more than 200% up in terms of the rate of contactless tap to pay transactions versus pre-COVID levels. So increasingly consumers are looking for that symbol. They're looking to tap. They're not looking to hand over their credit card to a merchant for the transactions that still take place in person. And then we're also seeing for a lot of businesses where it's not truly necessary to make it a face-to-face payment. They're decoupling the payment from the transaction itself. So you might imagine a house call for a plumbing repair. Historically that plumber might have taken out their smartphone at the end of the visit and used a card reader dongle, and you would hand your credit card to them to settle up on the spot. Well, now increasingly you might be prepaying and making a deposit ahead of time, or you might be getting an invoice on a post-pay basis. I mean, we're seeing our card on file transactions are up 150%. Our invoice-based transactions are up 250%. So there's a theme here towards touch-free ways to pay, any way that's possible as, consumers and small business owners maybe trying to do business with one another, but, trying to avoid the physical contact.
I'm always aware that we should never waste a good crisis, and I'm always aware that we should look for the positives that come out of the kind of crises like the one we're experiencing at the moment. Small businesses are basically all about cash flow, and I'm wondering whether or not the small business sector becomes more robust if you are able to survive as a result of this crisis, because payment services are changing and accelerating, and therefore that cash flow is easier to manage almost on a sort of minute-by-minute basis.
Absolutely. And we saw certainly, throughout this year, we've seen plenty of times of small business owners reinventing themselves, reinventing how they do business. And one trend that we saw over the middle of the year was as sales rebounded very strongly in terms of total dollar sales in our merchants, the rate of active merchants was slower to rebound, meaning of the merchants carrying on and doing business, they were doing more transactions for more dollars on average. And so the businesses that have been able to modernize, that have been able to adapt how they do business are certainly doing stronger. And we've been seeing them capturing a lion's share of the commerce that is happening.
How competitive is that space? And then how does that affect small businesses? More competition, better for their margins? If it's not, I wonder, because a lot of companies wouldn't take credit cards for so long, this is like back in the day, because you had to pay the fee. So where's that conversation with contactless payments?
Yeah, so just to give one example, so food places, a category within food and beverage for us, we're seeing 50% higher sales than we were pre-COVID. And I'm not saying restaurants across the US are selling 50% more, but we've seen a real share shift as our technologies have much more around touch-free ways to pay and kind of the ways consumers want to pay and the way merchants want to collect payment. And so we've seen a real share shift away from some of the legacy technologies, whether that be cash or even just a traditional payment terminal that is hardwired to the wall. As restaurants want to move to curbside and takeout and delivery and pay at table business models, they want more flexible ways of taking that payment.
We're going to leave it there, Derek. Really interesting stuff. Thanks for taking some time to be with us today. Derek Webster, Cardflight founder and CEO. Coming up, tech regulation under a Biden presidency. We're going to discuss what it's going to look like with a tech entrepreneur who has called for the breakup of those tech giants. We're going to be talking to Scott Galloway, NYU Stern School of Business professor. That conversation coming up next. This is Bloomberg.
explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
What is at the moment what we see as scaled up worldwide, globally, beyond CureVac even, there will be enough capacity to really vaccinate the world, well, let's say until the end of next year.
Look at some of the It's time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. Goldman Sachs is planning a European stock trading platform in Paris. The aim is to make sure clients can still buy and sell shares, even if there is no post-Brexit agreement to allow dealing in London. Goldman has asked French authorities for permission to start in January. Amazon is giving out hiring bonuses of up to $3,000. That's to make sure it has enough people to get through the busy holiday shopping season. That's not helping morale amongst existing workers who recently got coupons for Thanksgiving turkeys as a thank you for their hard work. Amazon's handing out the big bonuses because it's finding that many people are reluctant to re-enter the workforce because of the coronavirus. Things will get worse for the airline industry before they get better. That's according to the International Air Transport Association. The trade group estimates that airlines will lose almost $39 billion next year, more than double the forecast in June. That's on top of a $118 billion deficit in the current 12 months. Airlines are hoping that the rollout of vaccines will lead to the lifting of travel restrictions. And that is your Business Flash. Alex Guy.
Rebecca, thank you very much indeed. So IATA is holding its AGM on a virtual basis. It's hoping to do later in the year it on a physical basis. But at the moment, we are starting to hear from Alexander Dujuniak, who we're going to talk to a little bit later on, and also from Carsten Spohr, who is the CEO of Lufthansa. And what they're addressing at the moment, Alex, is the issue of how airlines deal with vaccination. And this is going to be one of the real challenges that I think we're going to face is how do I go, once I've had a vaccine, to an airport and get on a plane and go somewhere else? What is the protocol and the process for making that happen? And Dujuniak is talking about the fact that it's too soon to speculate on airlines requiring vaccination. But we've really, at this point, largely failed to deliver a testing protocol that allows me to get on a plane and come and visit you in New York. In fact, it's turning out to be really, really hard. How are we going to make it work when it comes to vaccines? Because it's going to be really important for this sector to get back on its feet.
Well, I have two questions for you, Guy. One, who pays for it? Is it the airports, is it the airlines, or is it the passenger? And two, if we're going to have different vaccine distribution, what happens if New York thinks that the vaccine you're getting is inferior to the one I'm getting, or vice versa? Does it not count? Do we have to have, like, all countries accept all vaccines? Like, how does that process work?
Yep, I think there's going to be all kinds of questions that need to be answered, and I think it's going to be really, really tricky. And this is important because we're now getting to the point, and we were talking to Art Hogan about this a little earlier on, that these stocks are really rallying in the travel sector, and it was fascinating to see Carnival be able to go to the credit market the other day and raise cash unencumbered, i.e. be able to do it without having to put down ships as collateral. The market's getting really kind of far on this one and believing that we're going to be seeing kind of a light at the end of the tunnel, which is true. But I think you've got to get granular, and you've got to deal with the details about how this is actually going to work. JetBlue's CEO, Robin Hayes, is talking as well. He sees pent-up demand for international travel. Great. Robin sees that happening. But we've got to get over this line. We've got to understand how these processes are going to work before that actually takes place.
Well, you could be making the exact same case for small caps, for example, the Russell 2000 hitting yet another record high. It's a story overall on the market, Guy, right? Value gaining momentum over growth. I mentioned small caps also doing well. One question mark, though, is what happens to big tech? I mean, do you sell it or do you hold on to it? One broader issue could be the regulatory environment under a Biden government. Abigail Doolittle is digging in a little bit more to that. Hey, Abigail.
Hi there, Alex, and great question. So let's set it up first by taking a look at this huge rally, this extraordinary rally that you and Guy are talking about. Here is the small cap set of indices here, the Russell 2000, the Russell 2000 growth, and the Russell 2000 value. All-time highs. We have not seen all-time highs for these indexes in about 2 years until last week. So it's really a big catch-up trade, but you can really see beautiful gains over the last few months with the Russell 2000 gaining 28%. Investors want in on the reopening rotation, value or growth, and really the small cap indices here represent more domestically based companies. So again, a play on the reopening rotation, even if it's in the second half of next year around vaccine optimism. As for the technology, the money is coming out of big tech. If we take a look at some of the big tech movers over the last month or so, we are going to see declines in the likes of Apple, Microsoft, Nvidia, Intel. And one of the questions, as Alex was just mentioning, has to do with what will regulation look like under President-elect Joe Biden, his administration. So let's take a look at some of the points, because there could be some changes, including the idea that there's going to be comprehensive legislation to govern online, possible changes even to Section 230. That, of course, when Jack Dorsey and Mark Zuckerberg have testified before Congress around Section 230. On the other hand, it's expected that the advertising policy is likely to stay the same, that the new federal agency is unlikely. On the other hand, a risk here is the open door to competition. It could hinder growth and expansion, and all of this, Guy, before the possibility of higher taxes, because, of course, Biden's administration is expected to raise corporate taxes to 28%. Big tech, those are among the high tax companies, so that could even be another hit on top of regulation. So that could be another piece of the tech selling we've been seeing more recently, Guy.
Absolutely. You do wonder kind of how much of it's just a simple rotation and how much of it's based on regulation. As COVID starts to potentially disappear into the rearview mirror, do you rotate out and go into other spaces? Because tech certainly has had a good run. Let's talk more about what tech regulation could, though, look like under a Biden administration to try and get a sense of what could be happening next. Joining us now, Scott Galloway, NYU Stern School of Business professor. He's the author of Post-Corona, From Crisis to Opportunity, about what business, education and our country will look like after the pandemic. There's the book. Here's the man. Scott, thank you very much indeed for joining us. We really appreciate your time. This crisis, this pandemic, has certainly benefited tech. We've seen an acceleration in a whole range of areas, and tech has largely picked up the beneficiary and been the beneficiary of that. Do you think over the next 4 years, as we go through a Joe Biden administration, that we're going to see regulation and government starting to balance that out?
Yeah, something's going to happen, whether it's a modification to Section 230 or antitrust or both. But effectively, even just the shadow of the Biden-Harris administration has had a lot of impact. It's no accident that Facebook and Twitter have been much more disciplined about stopping the spread of misinformation. The analogy I would use is if the 17-year-olds of your high school children have had the mother of all ragers in your house and they found out that the parents are coming home early and they're trying to clean up their act. So it's already having an impact. We're absolutely going to see some form of legislation or additional scrutiny.
Well, Scott, what's interesting is that they all have different issues as the government would be looking at, right? I mean, Amazon, it's anti-competitive, right? Google, the same kind of thing. But with Apple, it's related to their app store. So they're all different. Is there going to be one blanket something that we're going to get from D.C., or will there be targeted legislation?
Yeah, that's the correct question. I would argue this will be slower and more deliberate. Instead of kind of large executive orders banning one company and then finding that that doesn't hold the test, the legal test of water, this will be slower, more deliberate. I think that you're right. So in the case of Apple, it'll be probably regulating the App Store. I think antitrust might happen across 3 of the 4. I think it's hard to figure out a way to break up Apple because its primary asset is, in fact, the brand. And you'll also see, I think, additional regulation. The thing to keep in mind when I was listening to your previous segment is that I believe that the market has already factored in the notion there'll be some sort of antitrust or regulation, and it's actually pushed these stocks up. I don't think it's going to be bad for their equities. If you look at companies typically after the breakup, shareholders do pretty well. I believe the most valuable company in the world in 2025 will be a recently spun AWS, which will be the largest, most profitable pure play cloud player. So I think the market knows something's coming and the market likes it.
Why is management resisting then? What is the advantage of staying large when ultimately these individual businesses have greater potential for growth and higher equity valuations were they to be separated? Why is there a belief within management of these businesses that the sum of the parts is worth hanging on to?
If you look at all of the stakeholders in a breakup, whether it's employees that have more opportunities, because there's now several companies who want them to work for them, whether it's job growth, whether it's M&A, whether it's VC venture capital funding, because there's more potential acquirers when these companies get broken up, whether it's the tax base, whether it's consumers that benefit from additional competition. Every stakeholder wins in a breakup except for one. And that is the CEO who wants to be on the iron throne of all of Westeros, just not one of the 7 realms. And typically in a 2-class shareholder company, the only stakeholder that has the decision is the person who controls the controlling shares. So, yeah, they essentially, a conglomerate provides diversification for the CEO, and it means he or she sits on a much bigger empire. But shareholders win, the tax base wins, and consumers win. But unfortunately, the person that gets to make the decision in these instances, because of dual-class shareholder companies, is the person that wants to remain on the iron throne of all the realms.
I love the Game of Thrones reference. You're always going to get me with that one. We just want to update you on some breaking news for you here. Pennsylvania has now certified election results showing a Biden victory, the latest state to do so. Michigan did yesterday as well. So Pennsylvania now certifying election results showing the Biden victory. After Michigan was certified, that's when you had the Trump camp saying that the transition process could begin. Scott, how quickly can something like this get done?
I don't think it'll be quick. I think it'll be slower and more deliberate. I think there will be, for example, President Trump's initial inclination that the Chinese should not have, their tech companies should not have unfettered access to our markets, and we basically have access to their markets just long enough for them to steal the IP of the company and prop up a local entrepreneur. There is some. His initial inclination was correct. And I think that, quite frankly, that'll be his most positive legacy, was saying that the current China-American relationship doesn't work. However, I think it'll be slower, more deliberate, and a law that's enforceable and covers all Chinese tech companies trying to do business in the United States. And perhaps, if you look at his most recent, if you look at his pick for secretary, if you look at his recent picks, you're going to see an administration that wants to go to battle with China hand in hand with allies in Europe, as opposed to trying to take these institutions on unilaterally, recognizing that greatness is in the agency of others. His Secretary of State will spend a lot of time trying to repair relationships and I think present a unified front to China. So it'll be slower, more deliberate, but in my opinion, it'll have more staying power and more actual effect.
Can I come back to the issue of the breakup? Do you think potential growth in the US economy will be higher if big tech was to be broken up?
You're absolutely right, but it's bigger than that. I believe the most oxygenating thing we could do for our economy, I believe long-term, the biggest boost, the biggest hormone, the biggest steroid, the biggest action we could take to ensure robust growth in our economy would be to massively increase the funding of the DOJ and the FTC and go through almost every large industry. I'm not just talking big tech, I'm talking big ag, I'm talking big pharma, and oxygenate the marketplace by breaking them up. What we've seen across the last 30 years is the DOJ and the FTC have been asleep. We need to return to our proud legacy of antitrust when a company becomes so big and so powerful that it begins performing infanticide on small companies and prematurely euthanizing big companies, which tend to be better employers and better taxpayers. It would be tremendously oxygenating for the economy in terms of job growth, innovation, new taxes, or new tax base. If we went through every industry where you've seen an incredible concentration of power across fewer and fewer companies and broke them up. Antitrust is oxygenating. It's not a punishment. It's reward, and it's something that liberates stakeholder value.
Scott, we're going to leave it there. Thank you very much indeed. Scott Galloway, NYU Stern School of Business professor. Interesting ideas. Let's turn our attention back to what is happening in the market. I'm just taking a quick look at what's happening with gold right now. This test of 1,800 seems really pivotal for the gold bulls right now. There does seem to be a lot of oxygen being taken out of this market. This rotation towards the cyclicals and values really hitting the gold price. As you can see, 1808 is where we are now, down another 2%. The European closes next. This is Bloomberg.
Once it goes into this plant, it's heated up very quickly to 600 or so degrees. It basically carbonises it, turns it into a carbon-rich material. Obviously kills all of the pathogens.
Our generation's biggest problem.
Climate change is happening.
There's a lot of concern in Hong Kong, and you can see the way actions, reactions, and further anxieties arise. I hope we can settle down to a new normal.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
From London, I'm Guy Johnson. Alex Steele is in New York. We're counting you down to the European close on Bloomberg Market. So what do you need to know out of Europe this hour? Well, the airline industry group IATA sees higher losses and now says carriers will need an additional $80 billion in government support to get them through the winter. The Director General, Alexander Dejuniak, will be joining us shortly. Well, I thought it was shortly. I think the press conference is running a little bit late. Bulking up the DAX, a sweeping overhaul is going to take place. Its biggest since its creation. The DAX will go from 30 to 40 stocks next year. And Deutsche Bank is considering allowing 40% of its workforce to work from home at least 2 days a week on a permanent basis. Apparently, the bank has already started cutting office space. Let's look at the markets, figure out what's going on. The rotation continues. We continue to watch this vaccine story ripple through the market. So the SOX 600 up by another 0.8%. Cyclicals are doing well. Over in the States, actually, the S&P is up even more, up by 1.2%. Euro dollar gaining a little bit of traction. The dollar is going down. Again, this is part and parcel of the Yellen trade, which now seems to be gaining a little bit of traction as well. It's going to be interesting to see how she works hand in hand with the Fed chair. We'll talk about that in just a moment. And within the last few minutes, well, crude went through 45. This is US crude, WTI crude. We're backing off that a little bit, but that 45 line in the sand is the highest level since March the 6th. It just gives you an idea of the turnaround we're seeing here. The big question, is it running too fast, Alex?
Yep, some analysts are starting to scratch their heads just a little bit, particularly if they look at the curve. Well, as Guy was just talking about, President-elect Joe Biden is set to announce his selection of former Fed Chair Janet Yellen as Treasury Secretary. Investors appear to welcome that choice. So for more on what markets are actually looking for, Michael McKee, Bloomberg International Economics and Policy Correspondent, maybe the busiest person at Bloomberg today right now. What about this appointment is giving confidence to the market specifically?
Well, Janet Yellen ticks the most important box for investors. She makes them money. Take a look at what happened when she was the Fed chair. Stocks compounded at a 12.6% annual rate and a price basis while she was the chair of the Fed from 2014 to 2018. And remember, when that happened, she was raising interest rates for the first time in 7 years by 150 basis points. So that's the most important thing. But there are other reasons why investors are hitting the like button. She's been a fixture in Washington for years, of course, well known, which means she's somewhat predictable, at least unlikely to swerve badly one way or another. She believes in regulation of the financial industry, but by and large is happy with Dodd-Frank, not some of the Trump rollbacks, but not proposing any other major new changes. And, of course, she understands monetary and fiscal policy. She can, the theory goes, work seamlessly with Fed Chair Jay Powell. After all, Yellen, largely a creature of the Fed, she spent most of her career there as a governor, the San Francisco Fed Bank president, vice chair, and chair. She was also head of the Council of Economic Advisors. I'm not sure this is all it's cracked up to be because the Fed has been working closely with Treasury, and it's not clear what else the Fed can do, but at least it seems to be reassuring to people on Wall Street.
I'm hearing a lot of safe pair of hands today, Mike. And that leads me to wonder, and I heard an old friend of mine talking about this earlier on, to wonder whether or not she is also being put into the role because the incoming Biden administration recognizes that we are really not out of the woods yet when it comes to this economic crisis and the ripples that are likely to flow from it. Is she being put in because she understands how to deal with a crisis?
It would seem that way, although at the Fed, it's a matter of deliberation, looking at all the options, looking at studies, and maybe not reacting to immediate crises like a drop in the markets or something. That's something she may have to learn, and we're not sure how she'll perform in that kind of role. But she does have experience in crisis fighting, at least from an economic standpoint, and the administration, the incoming administration, does know that it's going to have to get the economy going again. So I'm sure that they're looking at her to help with that.
All right, hang tight with us, Mike, for a second. Also joining us, Seema Shah, Principal Global Investors, a chief strategist. She joins us from London. Hey, Seema, do you buy the argument, like go buy small caps, go buy cyclicals, sell the dollar because Janet Yellen is going to be Treasury Secretary?
Look, I like the idea of small cap cyclicals, but not only because of Janet Yellen. I think there's a lot of reasons to like that space. Yellen is reassuring. I actually had an opportunity to speak to her in September, and she was very, very keen for fiscal stimulus to continue. So I think the market should be reassured by that. But I don't think that's the only thing which has got markets pretty happy at this stage.
So let's talk about the vaccine trade. It has run very quickly. How much more gas do you think it has in the tank?
I think it does. It certainly has some. You know, we've seen that each market reaction has been a little bit more muted, and that's partly because there's still so many question marks. Now, doubtless, though, the incoming data, the incoming news that we're receiving about the vaccines is undoubtedly it's positive. But, you know, we're still looking at least a couple of quarters before you're seeing mass distribution, not just past beyond the US and Europe, but, of course, emerging markets as well. Still a lot of questions. I think the most important point here is actually about vaccine acceptancy rates. How many people are really going to be willing to be in that first round of vaccine? So I think there are some hurdles along the way. I think it's very promising to know that we're still going to have the Fed, other central banks behind the markets. And of course, if you know that there's fiscal stimulus likely to come, that's an added bonus.
Mike, you were a political reporter for a very long time. Some people don't know that. If we're talking about fiscal stimulus, there is a conversation that's being had that, look, get something done now and get it small and then deal with everything later, versus wait until Biden comes in and then you get something a little bit bigger, which is really up for grabs. What's going to be most helpful for the economy at this point, knowing who the people in the cabinet are going to be?
Well, you know that both sides can agree on money for the unemployed. The amount is to be decided, but some sort of either stimulus checks or additional unemployment insurance could probably be approved. The big sticking point, money for states and cities, the Republicans don't want that. Democrats say without that, and we've heard Bill de Blasio, the New York City mayor, say yesterday, we're in dire shape here in this city. Without that, we're going to see more layoffs. So that's the kind of thing. Put a floor underneath it right now, going into the first quarter, given the rise in COVID cases slowing growth down now, and then try to negotiate something more. We'll have a better idea, obviously, when the Florida Senate races are over, how much they can accomplish.
Seema, can I come back to you and talk about what is happening globally on this trade? We've got a steady pair of hands potentially in Washington. We've got the vaccine story coming through. Europe has been a really big beneficiary of this. And I'm wondering where the most unloved parts of the market that you are now looking at are. You've, in the past, told this program that you think the UK, for instance, is a massive value trap. Are you starting to change your views as we start to think about the ways we are going to exit from this crisis?
Yeah, I actually think that in the short term, the FTSE 100 can actually do pretty well. You know, we're looking at maybe in the knee-jerk post-New Year time, once Brexit has hopefully actually been resolved, you'll see a bit of a pickup or a rise in sterling. But thereafter, I would expect that the reality of what's ahead of the UK starts to play out. You see sterling weaken. And as we know, most of the FTSE 100 is made up of international companies. They will benefit from a weaker sterling. And all these international companies, of course, also benefit from vaccine prospects. So I think this is more of a tactical position. I don't think from a structural long-term perspective, UK is a particularly attractive place. But at least, as I said, a tactical way, it's a little bit more attractive certainly than it was earlier this year.
So tactically also, Seema, I mean, is the euro a risk-on currency and the dollar a safe haven, which has traditionally been their roles? Is that still happening right now? And then if it's not, how does that inform your tactical but then medium-term view?
Yeah, so I don't think, I mean, I agree. Look, you know, our view is that the dollar is going to weaken a little bit further through 2021. And that's a global reflation play, right? Typically, the dollar is correlated asymmetrically with global growth. So where do you go? You know, where is your defensive play if you have any kind of concerns? Well, to us, actually, it's still technology, right? There's still, as I said, so many question marks about the vaccine. There's a lot of hurdles to get through. And every time that there is any fear in the market, either about the winter virus wave or just about the prospects for the vaccine, technology is the place that rallies. So actually, to us, we like cyclicals, we like small cap, we like emerging markets. But also, I think there is a place in your position for mega cap technology through all of this.
Just thinking ahead and what happens next, Europe, I'm curious as to your views on Europe. It seems as if the Europeans are ahead of the United States when it comes to what is happening with the virus, though I think we've probably got to get through Thanksgiving and Christmas to really understand what is happening here in terms of what the case counts are going to look like. But we're starting to wind down the kind of full lockdowns here in the UK. I think France is going to do it again tonight. We're going to hear from Emmanuel Macron. But we've then got this issue of we can't get our act together here in Europe on key areas like this new rescue fund. Just give us this kind of the view of Europe right now, kind of balancing these various factors out. Europe was seen as having its act together on the virus. It was seen as having made a big leap forward when it comes to funding and going forward with a joint funding structure. Does all of that still exist in terms of the case for investing in Europe?
I think it's there in the background. You know, I think there is a lot which is promising about Europe. You've mentioned a couple of them. The EU for its fiscal recovery fund. I think it will come through. Hungary and Poland, I think, will come round. That there will be some kind of agreement at some point. You also got the ECB. And of course, as you said, hopefully we're a little bit further ahead with the virus counts and we should start to see that fading out. So I think that there is something to be said. But, you know, Europe just doesn't seem to have the dynamism that the US has. You know, we think that Europe can do better next year, but that's partly because it was an underperformer this year. So there's a kind of a make-up trade there. And of course, you know, it's made up of a lot of value companies. It's one of the reasons it's underperformed this year. So if you do see a successful vaccine coming through, then I think there are opportunities in Europe. But again, I would think of it as a tactical play. I don't have that much hope from a more structural perspective for Europe.
All right, Seema, it's always wonderful to catch up with you. Seema Shah, Principal Global Investors, thanks a lot. Also, Bloomberg's Michael McKee, thank you as well. All right, coming up, investing in green energy. It's our conversation with the CEO of Italy's biggest utility company. The CEO of Enel will be joining us next. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Let's check in on the Bloomberg First Word News. I'm Ritika Gupta. President-elect Joe Biden and his team are beginning the formal transition process. After several weeks of inaction, the head of the General Services Administration acknowledged that Biden was the apparent winner of the election. So now the Biden team will delve into President Trump's coronavirus vaccine planning. They'll also assess the condition of federal agencies. Bloomberg has crunched the numbers to determine the best and worst places to be in the coronavirus era. We looked at where the virus has been handled most effectively with the least amount of disruption. Our COVID-19 resilience ranking has New Zealand as the best place, followed by Japan, Taiwan, South Korea, and Finland. The bottom 5 include the Czech Republic, Belgium, Peru, Argentina, and Mexico. The European Union and other donors are offering new funding for Afghanistan. A largely virtual pledging conference in Geneva drew representatives from more than 70 countries in the first such event in 4 years. The EU pledged $1.4 billion in assistance to Afghanistan over the next 4 years, but like many others, made its support conditional on the country's commitment to democracy, the rule of law, human rights, and gender equality. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Guy?
Ritika, thank you very much indeed. Let's talk about one European company that is making a big bet on green energy. Enel, Europe's biggest utility, has decided that it's going to invest $190 billion in the sector over the next 10 years. Earlier today, Alex and I talked to Enel's CEO. We started by asking him why the utility had decided that now is the moment to make such a big commitment.
We had to look 10 years down the road, which gives us a little bit of outlook on what in the energy world and where is this big transition driven by technology going, and where are we going with it? And what we saw as a wide open space for investment big case of renewables stronger than ever, and larger than before need of investment in networks that need to be resilient, flexible, and digitized in order to allow electricity to really take over the energy spectrum going forward. And I think that's where we got the courage, if you want to call it like that. But it's a very cool observation. This is where the world is going, where technology is driving us, where people are going themselves, and we better hurry and be there.
Francesco, how much of that is going to have to rely on M&A?
I think M&A is a part of it. In our case, we are going to be active in largely in the distribution, in regulated assets on the distribution of electricity side. Areas of the world this is possible are enlarging. We've just seen India opening up for the sector to be privatized. We have Latin America being in that mode at the moment. I think large parts of Europe will start to look at distribution assets being put on the block. So there's a big part of M&A in play in the regulated asset distribution asset part.
Let's talk on the disposal side of that coin. Open fiber is the obvious place that I need to go to here. You talked on the call this morning about wanting to monetize that asset. Can you give me an idea of the time frame? Does plan make it more imperative that you do monetize that asset? Where is the conversation with Macquarie at the moment in terms of the timeline?
I would say the conversation is at the very end, so there is not a time pressure at all. I mean, we are basically there. The issue is whether this is instrumental to the plan. Not really. I mean, it's a big opportunity, but in the context of the numbers you've just seen, it's just a tiny part. But certainly it is, if you want, a proof of the fact that in a limited amount of time, we're talking about roughly 4 years, create a lot of value if you manage properly the combination between needs of a society, technology availability, and your platforms. And this is something that we call the stewardship model. This is a way of attracting and crystallizing investment from third parties, giving them the ability to and the access to skills and capabilities that we have. So we think it's a great achievement, not only because of the value created, but also because of the proof that this is a model that we can replicate over and over other times.
So let's get back to the open fiber, though, question. The market is really wanting to know some more data. Previously, it was talked about the end of November, potentially for a sale. And I hear you that it's only, 2.65 billion euros, but there has been pressure from the Italian government to sell. Does that mean we can expect an announcement in the next week or so?
Announcement the next week. I mean, the announcement will be when we have finalized the deal, which is, like I said, question of weeks. I would say not next week, but question of weeks. So I will not give a deadline because it doesn't make any sense at this point. I think the government is happy to see that this venture, which is largely a government-driven project, has had this success, and that it can become a big instrument in further accelerating the digital transformation of the country on wholesale, the third-party access guaranteed for every operator. So it's a big change from a regulatory standpoint at European level.
That was NL CEO talking to us earlier today. Well, still ahead, we're going to talk more about the airline industry. We're going to speak with Alexander Dejuniak, IATA Director General. That's coming up over in the next 20 minutes. Stay with us for that. This is Bloomberg.
time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. I'm Ritika Gupta. U.S. home prices surged the most on record in the third quarter. According to the Federal Housing Finance Agency, prices jumped 3.1% over the previous 3 months. The housing market has been booming during the coronavirus pandemic. Record low mortgage rates are helping to fuel demand. Tiffany posted strong earnings in one of its last reports before being taken over by French luxury company LVMH. Third quarter profit at the jewelry chain was much better than expected, and comparable sales in China almost doubled. And Goldman Sachs is planning a European stock trading platform in Paris. The aim is to make sure clients can still buy and sell shares even if there is no post-Brexit agreement to allow dealing in London. Goldman has asked French authorities for permission to start in January. And that is your latest business flash. Alex?
All right, thanks so much, Ritika. So for more on Goldman Sachs' Paris plans, Bloomberg Wall Street correspondent Sonali Basak joins us now. Sonali, give this context. Is this a big deal? Put it on context for us.
The reason this is a big deal is because it shows just another behemoth that is moving some operations outside of London. And they actually quantified how much of an impact that would make on London trading. So Elizabeth Martin, the co-head of futures and equities electronic trading at the firm, told our colleagues that London would lose most of its trading volumes.
Oh.
So right now it has a third of all European share trading in London, and a lot of that might start to move away. So that's a big deal, as well as other concerns about talent moving away from London potentially over the longer term. Now, remember, nobody expects this shift to happen overnight. This has been happening for years, but it's becoming a lot more real to a lot more people.
Sonali, how much of the total volume that goes through London is EU volume, and how many people are we actually talking about moving here?
So it's not clear how many people we are talking about moving, but they did. Goldman, in particular, signed a 12-year lease for a new office in the French capital of Paris. So that could mean doubling its headcount in the city, according to our colleagues. That's a significant move. When I've talked to some of Goldman's competitors as well, Guy, there have been issues in luring talent in other cities across Europe. So, for example, a Goldman competitor who was building up their Frankfurt operations found that still a lot of their talent had to come from London. With that said, Paris is a very different story. There's a lot of wealth accumulating there, and a lot more investment banks that are not just focusing on trading, but also deal making as large French corporations decide to do more deals in the next era.
Oh, that's interesting. I was wondering about Frankfurt. So how does this shift with the whole work from home thing? I don't know if trading operations can actually do that, but we heard that Deutsche Bank might let 40% of its staff permanently work from home. How does this fit into the conversation?
So it fits into the conversation because what we're talking about now at Goldman is a dark pool. So a lot of this is electronic already. Goldman is one of the big firms that we know that is clamping down on in-person workforce and has been a leader in electronic workforces. Now you go over to Deutsche Bank, and the idea of having more people work from home will really help with their real estate footprint. It can cause a significant dent in their cost base as it pertains to real estate. There are still regulatory concerns about doing this, but it could cause a real dent and perhaps cause other people to shift as well.
Sonali, just in terms of how this is long-term going to change the risk profile, what kind of people are we talking about here? What kind of people are going to be working from home?
It's unclear yet, right? Because you see traders still wanting to come in, especially at a firm like Deutsche Bank, where they are trying to gain share at a trading operation that has been changing a lot. So that kind of push, that cultural push for traders to come into the office is still there. But you see a lot of investment bankers also still working from home because they can make calls from there.
Absolutely. Talking of the market, Sonali, thank you very much indeed. We'll talk more about the European close next. We've also got the Dow just backing off 30,000. Big line in the sand. This is Bloomberg. Stocks finishing the day here in Europe in terms of trading. 30 seconds to go till the end of regular trading. Then we'll get into the auction. But let's talk about the session that we've had. Gap higher first thing this morning, then quite a tight trading range for European equities. We've priced in the Yellen bounce this morning. We continue to price in the vaccine story, and the rotation that we're seeing within the market continues to be a positive one generally. Outperformance in the States, for instance, of the small caps. It's a similar narrative here in Europe. So that's the session. Gap higher, tight trading range. In terms of the individual markets around Europe, a relatively similar performance in terms of what we're seeing. As you can see, the big caps outperforming a little bit. So the FTSE, the DAX and the CAC 40 up by, well, the FTSE's outperforming a little bit today after some underperformance yesterday. But generally, we're up by 1.25%. Across most of Europe. In terms of the narrative that we're seeing in the individual stocks and some of the other asset classes that we're watching, we are certainly seeing a rotation, you could argue, that is continuing to favour some of those bigger stocks. Some of those smaller stocks. HelloFresh down by 7.53% today. Some downgrades coming through for that stock. Fresnillo, we talked about what's happening with the gold price. That is starting to impact some of the mining stocks. So you've seen that in Fresnillo today, but other mining stocks are actually doing relatively well. And Enel, we talked to the CEO a little bit ago in the show. A big commitment coming through in terms of where we're seeing the investment going from that company. The other thing I just want to talk about as well is what is happening with the DAX. And I also want to talk about the travel sector as well. So let's just dig into both of those two issues. The DAX is going through a wholesale change that has been announced today. I just want to deal with what is happening here because it's going to be significant, I think, particularly for passive investors. So basically, the DAX is getting a significant makeover. The effect of this is going to be really for passive money to increase its allocation, I think, probably to Germany. This is going to take effect in Q2 next year. So basically, this is the most sweeping overhaul since inception. Part of this is down to what is happening with Wirecard, but I think there is a broader narrative here as well. The membership is going to increase from 30 to 40. Now, you think about some of the companies that could potentially benefit from this. Airbus is one that stands out, and there have been a number of notes floating around today talking about the fact that Airbus could be a beneficiary. We've already got a listing in Paris. We could see the listing in Germany having a greater effect in terms of the way that passive flows are working. But there's a number of other companies as well. Munich Re could potentially be another beneficiary as well. What is interesting, given in light of what we're seeing at the moment, small caps, the mid-cap market, the MDAX is actually going to decrease from 60 to 50. And it's interesting because at the moment, we are seeing a rotation away from big caps to small caps. But actually, this kind of speaks to the exact opposite. So some big changes taking place within the DAX. They're not going to take effect yet. They'll take place next year. But certainly, I think this is going to have a significant impact when it comes to the passive flow of money here in Europe. The other thing I wanted to talk about as well is what is happening in the travel sector. We've obviously got Thanksgiving taking place in the United States. We're hearing a lot about what is happening with Christmas as well here in Europe. And we've also got this vaccine story to factor in. And I'm doing this as a kind of setup for our next guest. The travel sector over the last month is up by over 12%. The bulk of those gains actually coming within the last 2 weeks. Basically, every Monday morning now, it seems that we get vaccine news, Alex, and that has been really rippling strongly into this space. Some of these airline stocks, some of these travel stocks, Carnival stands out as well, have seen huge share price appreciations.
That's right, Guy. And to pivot on, you were talking about airlines losing a combined $157 billion in 2020 as well as 2021. That's according to International Air Transport Association. That forecast is only 60% more than IATA had predicted just back in June. Of course, the biggest concern is that the industry will run out of cash before the vaccine boost kicks in. Carriers have reserves to survive about 8.5 months. Joining us now with more, Alexander Dejuniak, IATA Director General and CEO. Alexander, it's great to have you here on this very important day. We had these important release numbers. What gets airlines over this hump? How much money do they need to do that, and can they get it?
You know, our estimate for the next 7 to 10 months in terms of cash injections from government by any means, excluding debt, because this industry is already too heavily indebted, is around $70 to $80 billion. That's what we need on top of what has been already injected in the industry. which has been around $160 billion from government. And I have to say that we are pretty grateful to government to have reacted so quickly and so strongly.
Alexander, good afternoon. What we have seen, and we just saw a share price chart of what has happened with the travel sector, is that share prices of many of the companies that are members of IATA have gone up really, really strongly over the last few days. Why should governments be putting up more money when the financial markets seem to be prepared to invest in this space again? Why shouldn't these airlines go to the markets, either on the credit side or on the equity side, and raise more?
Airlines will have their own financial strategy, but what we can say is that the need for cash in the coming 7 to 8 months is around $70 to $80 billion. And it's a strong need for cash because we are in a so difficult situation due to the drop in traffic, so a major drop in revenues. We will have lost by the end of 2021 a year of revenues. So something like more than $800 billion. So you can imagine the stress under which we are in terms of cash shortage. That the reason why we need additional government support. But a part of it could be provided by the market. But what we think is that the markets will not finance everything, all the needs that the industry requests to survive. That's the reason why we are asking for additional government support. And additionally, I think it's wise investment strategy, to comfort what they have already injected in the industry, to put the money for the industry to be ready to recover and to survive, and then they will be able probably to resell the shares they have acquired in our airlines, and so to make a better use of public money. And I think that's an important point.
But the market is now starting to see the light at the end of the tunnel. And I'm wondering whether the industry should be taking greater advantage of this. I understand that it is going to be a very deep and dark winter. I think we all see that. But nevertheless, the vaccine story does seem to be providing an idea of the timescale on which we are now operating. We now know how long the tunnel is. And as a result of which, I'm wondering how that changes the dynamic in terms of how the industry is going to seek to survive.
You must be aware that our hypothesis for next year are based on a vaccine available by mid-2021, which is not something insane, which is pretty reasonable, because you need to have a significant proportion of the population vaccinated for the countries to be comfortable to lift all travel restriction and do whatever they can to restart or to help to restart air traffic. So in the meantime, between now and the availability on the large scale of the vaccine, what we have proposed is to test systematically the passengers. And on that point, we have still to convince government. There is a movement. They are progressively, coming to that solution, but we could go faster. And the combination of test and vaccine plus an app that we are developing, certifying that everything is in order, done properly with good results, that can be transferred to government, etc. Is these three components will be the situation in which we are going to live probably in 2021 and 2022. And it will be the condition for a good and a strong restart of the industry. And it explains why the financial markets are pretty optimistic, because there is light at the end of the tunnel, but not immediately.
So I guess I just get really confused then as to how you get all governments in the world to all agree and certify test results and all agree and certify vaccinations to make that pitch feasible.
We are working, in two directions. First of all, we are working within the International Civil Aviation Organization with the contribution of WHO plus health authorities to establish, testing protocols, testing manual, implementation guidelines for governments when they will implement, systematic testing for passengers. So that is ready. It has been issued, and now we have to convince each state to adopt it. And secondly, we are working with 21 key states in aviation to adopt these measures, as we did in May to first restart the industry by implementing the measures you have perhaps experienced, wearing masks, temperature control, disinfection of aircraft, and 238 countries and territories have already adopted these measures that were issued in May. So what we are working now is to have the same number of government and territories adopting the guidelines we have issued on testing under the umbrella of ICAO. And it will be done, but it is recent technologies, and so we mustn't be surprised that because it's recent, it has been available since the beginning of October, so a few weeks ago, that governments needs time to be convinced.
How disappointed were you that we weren't able to reopen the North Atlantic using the testing protocols? Because it's been a real struggle to make that happen. And I'm wondering what lessons we can learn from the resistance that was felt on both the European side and on the US side to make that work. What can we learn from that we can apply to what happens when we get into the situation of dealing with vaccines?
It's probably that we have to communicate, to exchange more and more information, and to consolidate our case in terms of testing with the relevant information coming from the various experiments we have all over the world. We have experiments in Canada, in the US, in the Middle East, in Europe, in Asia. We are collecting data to show to governments that it is safe to reopen borders, to get rid of quarantine measures or travel restrictions, provided you implement a safe, serious, secure systematic testing system. And it will be done, but it needs conviction. Just remember that the technology on which it will be based, mainly, which is the antigen test, was not available before October. So it's pretty new. The sensitivity of the test, the reliability of the test, the speed, the cost, everything has just came up in the recent weeks. So it's not surprising that it takes time, and we must understand that governments have also this issue to deal with, which is difficult, which is new. And so they need a bit of time.
One final question. I talked to the French finance minister yesterday, Bruno Le Maire, and I asked him whether or not he could guarantee the survival of Air France KLM. And he told me that he could guarantee the survival of Air France. Now, you've got some experience in this space. Do you think that when you talk about government providing aid, that aid should be provided on a national basis to national flag carriers? And ultimately, does this undermine the aggregation, the creation of large pan-European carriers, as we've seen in the form of Air France, KLM, Lufthansa, and IAG?
First of all, many governments, almost all governments on this planet have heavily contributed to help their airline. And not only the national carrier or the flag carrier, but also they have implemented financial support for their carriers operating from their country with which were registered in their country. For the case of the Americans, for instance, when they implemented the wage subsidy program that has been available for all US-based companies. First of all. Secondly, we consider that we have asked government to intervene, to put together this financial package, but we haven't insisted or privileged any channel. We told them, you do whatever is needed by all companies registered on your territory. So with no particular stress on the national carrier or the flag or the historic airline. So the second point. And thirdly, You have seen that with the pan-European airlines that you have mentioned, in at least 2 cases, the national government in which this airline operate under the national brand name, they have devoted some funds to each subsidiary of this pan-European group. So it works. It works.
Okay. Alexander, on that note, thank you very much indeed. Alexander de Juniac, the IATA Director General and CEO. Quickly, where European stocks are closed, positive session. The cyclical rotation continues. The cable will deal with all of these issues. Some post-game analysis on Bloomberg Radio at the top of the hour. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Live from New York, I'm Alex Steele with Guy Johnson in London. This is the European Close on Bloomberg Markets. So face-to-face Brexit talks are expected to resume next week. That's after EU's Michel Barnier ends his precautionary quarantine. Now, in the meantime, negotiations have been taking place online. Joining us now from Brussels is Sir Jonathan Fall, Brunswick Group partner and chair of European Public Affairs. He is also a former British official at the European Commission. Sir Jonathan, good to get your perspective. I'm hearing lots of different terms thrown around. Skinny deal, transition deal, a deal that they can go back and revisit every few years. What are we going to get next week?
Well, what we have at the moment is a lot of speculation, a lot of rumor, not many hard facts. But there is clearly some movement For example, the European Parliament, which would have to ratify any agreement, has scheduled an emergency session on the 28th of December, which is a rather unusual time for parliaments to be convening. So there is, I think, some hope that a deal, skinny almost certainly, it will be perhaps the end of the beginning, but it certainly won't be the final comprehensive new relationship.
In terms of how that new relationship is going to work, this is going to be a deal that is likely to cover goods. Services, which make up the bulk of the UK economy, are not going to be included. And financial services are certainly not going to benefit much from this. What is your sense of what the final arrangement is likely to look like between the European Union and the City of London? I've talked to a number of officials over the last few weeks, both in government and on the regulatory side. They all seem incredibly frustrated that they don't have clarity at this point coming from the other side. When do you see that clarity emerging?
Well, I could understand the frustration. The focus has been on goods and services have been left to one side. There may be some general language about regulatory convergence and what to do about regulatory divergence, but I don't think there's going to be much more than that. So we will be left at the mercy of what's called the equivalence mechanism, whereby both sides will look at each other's rules and make a judgment about whether they're close enough to allow trade to continue. And to begin with, the rules will be very close because they're largely identical at the moment, but nobody quite knows what the mechanism will be to cope with divergence when it comes, as it inevitably will. I'm afraid we simply don't know.
So messier before it gets cleaner is basically what we're saying. If we get some kind of deal next week, as you were alluding to, what won't we know? What definitely won't be addressed that will still be question marks for businesses?
Well, we won't know the general rules about trade in financial services across the English Channel between continental Europe and the UK. We'll know something. We'll know a little bit more than we did, but we won't know what the final landing zone will be, and we might not know for some time, because what is clear is that this has been left to one side because it's difficult, and there are still considerable differences of view between the parties, and indeed within the parties. Within the United Kingdom, for example, there are clearly several views within the government about how close the UK should be to the European Union in terms of regulation. We don't know yet.
So, Jonathan, I remember when the life floor here in London, financial futures, basically closed overnight when the Bund contract moved from the UK to Germany and the trading of it. We were talking earlier on in this programme about Goldman Sachs opening up a dark pool trading platform for equities in Paris, and others have been doing the same thing. And I'm wondering about the speed of change and how quickly some of this activity could move from the UK to the continent. When it was the life floor, it basically happened almost overnight. It happened over a weekend. It happened really quickly. Could we see a similar thing happening here again with other areas of activity?
Well, we could, but I don't think we need to. Everybody has contingency plans. There have been some incremental moves. There have been no overnight, over weekend moves. A lot will depend on how the talks, which will have to continue next year in one way or another, will evolve. But the sense of frustration and the impatience with the uncertainty that all this has caused will continue, and people will react as they have been, and perhaps it may accelerate.
Do you get a sense that lack of information is deliberate? That this is deliberately creating an area of uncertainty in order to exacerbate the need for firms like Goldman Sachs to do exactly what they've announced today and move activity to the European Union? Is this something that is being done deliberately?
No, I don't think so. I mean, that sort of tactic may be in some people's minds, But above all, I think the reason for what is happening is that it has proved extremely difficult to get agreement on goods. Once agreement was reached on goods in the withdrawal agreement, it turned out to be extremely difficult to contemplate implementation of that agreement in the UK because of, amongst other things, because of the difficulty of implementing the arrangements for Northern Ireland. And everybody has been busy with goods and services have been neglected. Now, that can't last much longer. We all know the importance of services for the modern economy and for financial services in particular. And it is in a way surprising that the reaction hasn't been more than it has been in seeing these contingency plans being implemented. But the frustration is there, as we've said. The impatience is there. And once, if it happens, once an agreement is reached on goods, and perhaps the whole issue fades away a little bit from the front pages of the media, perhaps next year we will see quieter, more serene discussions taking place on services as well. But we've no reason to believe that they will be easy.
So, Jonathan, on that note, a difficult note, we will leave it. So, Jonathan Fall, Brunswick Group partner and chair of European Public Affairs. Alex.
All right, that does it for Guy and me here in New York as well as London. Coming up next on Balance of Power, Christina Romer, a former Council of Economic Advisors chair, will be joining Balance of Power on Bloomberg Television and Radio. Don't miss that. In the markets, it is off to the races here. The Dow over 30,000 doesn't mean anything. It's just a fancy round number. But you do the Russell 2000 hitting another record high and oil soaring. This is Bloomberg.
Well, the main instruments on board include a dual frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements we can actually have the superb measurements that we expect of sea level rise, but also the waves, the significant wave height, which is the top 1/3 of the waves if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters, which is not negligible.
I am David Weston, Bloomberg Television.
From Washington to our TV and radio audiences worldwide, I'm Kevin Cirilli.
And from New York, I'm Taylor Riggs. Welcome to Balance of Power, where the world of politics meets the world of business. And Kevin, we get straight to the world of business. The Dow, of course, hitting 30,000. I want to bring in Bloomberg's Abigail Doolittle. Abigail, we know the smart money likes the S&P because it's market cap instead of price weighted like the Dow, but still it's 30,000 and it's a round number.
It certainly is. Stocks are really off to the races here. You wouldn't know that we had this virus, the COVID-19, really surging and, of course, increasing restrictions. Traders really looking past the optimism of the second half of next year when hopefully the vaccine is really moving through the economy. So here we have the Dow sharply higher, above 30,000, as you talked about, for the first time ever. Doesn't really mean anything technically, but it's a big round number, psychologically important. Folks generally like that, and we see stocks climbing even more once the Dow did rise above 30,000. Right now up 1.7%. The Russell 2000, another all-time high, really leading the charge, up 2.1%. The S&P 500 up a solid 1.5%. And important, Taylor, the cyclical reopening rotation that we've had happening in recent weeks, usually, often it comes at the cost of tech, but that simply isn't happening today. The NASDAQ 100 today is up 1%. So this is really a Goldilocks cyclical rotation right now on the expectation of a normalizing economy. And, you know, I know that you and others have been talking about whether or not it's going to last because we've had these pockets of it on, off again throughout the year. Well, if we take a look at the sectors on the month, Taylor, it does suggest that this cyclical rotation is really very much on the way. Take a look at energy, up 30%, heading toward its best monthly performance ever. That is the FOMO-like buying we have around energy, but it's also for the other cyclical sectors such as industrials and financials. So we really have stocks off to the races in this holiday shortened week, Taylor.
And it's interesting, Abigail, as we talk about the reflation trade and the outlook for politics as well going forward. We're taking a look at bond yields, also up 3 basis points on the 10-year, 5 basis points on the 30-year. That goes into that cyclical theme that you were discussing. The outlook for bonds here with yields rising, part of the reflation trade?
Well, right now you can make the case that bonds are at the perfect Goldilocks level because you have bonds, the 10-year yield and specifically still in this year's range below 1%. So stock investors don't have to worry about yields going too far, too fast, which would, of course, bring into questions around valuation and discount rates and all sorts of other repricing of risk issues. But you also have bonds at the higher part of the range. So it brings in the specter, the idea that reflation, the perfect amount of reflation is right ahead. So long as the 10-year yield stays below 1%, it's a pretty healthy spot. It seems that's what stocks are telling us right now. Above 1%, above 1.25%, it could be a different story. But right now, bonds are a part of this, yes, reflation trade.
Our thank you there, as always, Bloomberg's Abigail Doolittle. I do, Kevin, want to go and bring in Christina Romer, University of California, Berkeley professor of economics and a formal Council of Economic Advisors chair. Great to have you, Professor. We've been talking about Yellen now as Treasury Secretary. What does she bring to the table?
Oh, well, it's great to be with you. And she brings so much. I was just listening to your description of what's happening to markets. And I know I'm feeling a lot calmer, a lot more confident this morning. And I'm guessing that they are too, in part because we're going to have a very good Treasury Secretary. So what she brings is obviously just this wealth of experience. Here's someone who has worked both in administrations, in the Federal Reserve, in the broader Federal Reserve system. So she really understands the economy. She knows all the players. She knows the international players. So that's just fantastic to bring that experience tied together with incredible smarts. And so that's incredibly valuable. I think the other thing she brings are the right values. So what does she care about? She cares about unemployment, about getting the virus under control, because she knows that's what's good for the economy and good for people. She's going to care about rebuilding our international economic relationships. She cares deeply about climate change, something that I think is one of the most existential threats to the world economy, and something that dovetails so incredibly well with President-elect Biden's focus on dealing with this long-run issue. At the same time, we're dealing with tremendous short-run issues.
You know, I remember when you were back in the Obama administration and covering the recommendations that you had given to the Obama administration about the needs for there to be, and he at the time was president-elect, for the need to be more fiscal stimulus. And I'm curious, we're facing a very similar debate right now where former Fed Chair Yellen, soon to be likely Treasury Secretary Yellen, has been out front appearing at the Bloomberg New Economy Forum and other events where she's been urging there to be more fiscal stimulus. Now, Leader McConnell, as you know, has said that he doesn't agree with that. So what advice can you give the incoming administration in order to try to get enough support for there to be additional fiscal stimulus?
So first, I certainly want to echo former Fed Chair Yellen. I don't know what to call her these days other than Janet, to say that absolutely the economy is in a tenuous spot with the virus surging, with some of the indicators starting to look a little shaky. This is exactly the time you need some help to the economy. We've got the prospect of a virus, of a vaccine, but it's going to be a while, and we've got to get through these next couple or several months. So I think that is going to be a priority. You know, I think if anyone can navigate this, I think Janet's likely to be able to do it because she's built good relationships with Congress, with members of the Senate from both parties. So I think she may be uniquely well situated to be able to navigate this. I think one of the things, especially if we want to get something fast, they're going to have to, of course, work with the Republicans, and that may be not getting everything that you want, but saying what can we do that's going to make a real difference in people's lives, in the economy, and might have bipartisan support because that's what we're going to need.
And to follow up on this, what can you tell us about how a Secretary Yellen would deal with the international component of her job, especially as it relates to chairing CFIUS, for example, and tariffs and sanctions? Because that, of course, has been increasingly a larger and larger part of the Secretary's portfolio in recent years, even before the Trump administration.
No, absolutely. And you know, a lot of our international relationships are in tatters. And so I think that is going to be even more of a job than normal. I think, you know, part of how she will approach this the way she does everything. Janet is a planner. She figures out what needs to be done. She games it out. She pushes her staff hard to come up with good policies and every possible line of the decision tree. So she will be out there. She will be, as soon as able, traveling to these international meetings, rebuilding our relationships. But of course, she's got them. She's been at G7 meetings for years because she was Fed chair. So she knows the players. They trust her. They know her. They respect her. And I think that will make it much easier to deal with the trade issues. And, you know, we're going to have the issue of international fiscal coordination. So one of the things that was done back in 2009 was for countries throughout the world to say, let's all fight this thing together. I can see her helping to lead a charge for something like that worldwide.
You know, on that theme of fiscal coordination, on the margin, how helpful is it that she seemingly has a good relationship with the Federal Reserve, given she just came from that role?
So it certainly can't hurt. You know, I think right now there's no issue. I mean, Secretary Powell has been as outspoken about the need for fiscal stimulus as Janet Yellen has been. So I think monetary policymakers understand that their tools are somewhat limited today, and they see the damage, they see the unemployment, and they want fiscal policymakers to help. So I think the fact that she will have good communication with Chair Powell is certainly valuable. But I think her main communication is going to have to be with Congress.
Okay, all right. Our thanks to Christina Romer. Happy Thanksgiving, the former chair of the White House Council of Economic Advisors in the Obama administration. And coming up, we get more on President-elect Biden's cabinet selections with Jim Messina, who ran the Obama-Biden presidential campaign. This is Balance of Power on Bloomberg TV and Radio.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Chinese capital market, as you know, is nascent, is just developing, and so we think there's an opportunity to build out that. But that's not all. We're also focused on continuing to build our presence in the Greater Bay Area. It's been a good business for us.
This is Balance of Power on Bloomberg Television and Radio. I'm Kevin Cirilli in Washington.
And I'm Taylor Riggs in New York. Let's now get to Mark Crumpton for the Bloomberg First Word News Update.
Taylor, Kevin, thank you. Pennsylvania's top elections officials have certified that Democrat Joe Biden's victory in the key battleground state. It's another significant blow to President Trump's efforts to overturn the election results. The certification is the official declaration that Mr. Biden won Pennsylvania and its 20 electoral college votes. Electors for the state will cast their votes for Mr. Biden when they meet on December 14th, unless a court intervenes. Some Senate Democrats are calling on YouTube to take down videos with what they call false and misleading information about the election. In the letter, the senators say because President Trump refuses to commit to a peaceful transition of power, quote, misinformation and manipulated media content on your platform may fuel civil unrest, end quote. YouTube prohibits videos that incite violence, but says it allows clips, quote, expressing views on the outcome of the election. The European Union and other donors are offering new funding for Afghanistan. A largely virtual pledging conference in Geneva drew representatives from more than 70 countries in the first such event in 4 years. The EU pledged $1.4 billion in assistance to Afghanistan over the next 4 years, but like many others, made its support conditional on the country's commitment to democracy, the rule of law, human rights, and gender equality. David Dinkins, who broke barriers as New York City's first African-American mayor, has died. Mr. Dinkins had a calm manner, a dramatic shift from both his predecessor Ed Koch and his successor Rudy Giuliani. Dinkins was doomed to a single term by a soaring murder rate, stubborn unemployment, and his mishandling of a riot in Brooklyn. Dinkins' wife Joyce died last month at the age of 89. David Dinkins was 93 years old. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Kevin?
Thank you, Mark. Pennsylvania's top election officials have officially certified President-elect Biden's victory in the Keystone State. Now, this deals another significant blow to President Trump's effort to overturn the election results and comes as the Biden cabinet is starting to take shape. For more insight, I want to welcome now Jim Messina, who is the former Obama-Biden campaign manager and former deputy chief of staff to President Obama. And former President Obama yesterday, Jim, speaking to the Washington Post and saying that he believes that the team that President-elect is establishing is going to be able to get us out of this pandemic. How do you think that Treasury Secretary Yellen and a State Department led by Tony Blinken will work together internationally in order to turn the corner with the pandemic?
Yeah, it's a great question. And so, when I was in the White House, I worked with all of these people who are getting these major jobs today. And the truth is, what you look and see is just competence. These people are incredibly good at what they do, and they are really well respected around the world. There isn't any world economic leader who doesn't know Janet Yellen on a first name basis. She's also able to bridge the ideological divide inside the Democratic Party. She's respected by both sides. Tony Blinken is one of the most competent people I've ever worked with. He knows every single foreign leader around the world, and in incredibly important coordination that's going to happen with agencies, with governments, with world leaders. These folks are going to walk in the room and know exactly what to do and be respected and not have to spend real time getting up to speed. And so that's why I think these picks are so smart, because the word competence just keeps coming back to me over and over and over.
So in the last segment, we spoke with Christina Romer, who, of course, was one of the chairs of the National Economic Advisors during the Obama administration. And one of the things that she did during the Obama transition was to advise that there'd be more fiscal stimulus. Well, flash forward 12 years later, and now we're having the same Washington debate about the need for more fiscal stimulus, something that former Fed Chair Yellen has been advocating for. You know the halls of Congress. You know what it takes to strike a deal with Leader McConnell. How can President Biden do that with more fiscal stimulus?
Well, I think Christina was exactly right in her comments to you, which is we're going to have to make a deal. And that means that neither side's going to get what they want. I was White House Deputy Chief of Staff when we cut the first deal on the economic stimulus bill in 2009. And the truth is, good deals have both sides, saying, "Ooh, I wish I would have got a little bit more." And, the other thing is we're going to need to have the business community and the world all on the same page, saying to both Democrats and Republicans, get this done. Don't play politics. I thought Jamie Dimon was exactly right last week when he said that both sides were acting a little childish and need to just get to the table and get this thing done. And I think that kind of spirit is what Biden's going to bring. When I was in the White House, we went to the vice president over and over again when we wanted to cut a deal, because he was the one who was respected and knew both sides and could get these things done. I think that's exactly what he's going to attempt to do in the White House as president. And I think the Republicans, not on everything, I'm not going to be Pollyannish about this. I don't think we're going to run and hold hands into the river. But I think on major things like a stimulus bill, like a budget bill, he's going to be able to get it done.
Is getting things done as it relates to stimulus just passing what we can agree on versus Nancy Pelosi's all or nothing approach, which then leaves us with nothing? Why can't we at least pass what we can agree on?
Well, I think the speaker has said that. The speaker said repeatedly that she wants to get a deal going forward. And I think, what Biden is good at is saying to both sides, hey, let's be reality here and get this done. And I saw him do it in the economic bill. There would be no Obamacare without Joe Biden, because he was the one who helped me get the final votes for that. And that's what Joe Biden is so good at. And that's why I think, given the team he's putting together, real kind of very smart, knowledgeable people like Janet Yellen, who, by the way, has been confirmed by a Republican Senate in the past, she's going to have the respect to walk into McConnell and say, look, let's put aside the politics. This is what we need to get done.
Jim, big picture here, just going forward. What is the mandate to govern, given that the second largest vote went to Trump and the biggest non-white vote since the 60s? What does that mean for the mandate to govern going forward?
That voters want both sides to work together. They unseated the first president, only the third president in 100 years, but they kept control of the Senate in the Republicans' hands. That is a very clear mandate to both parties to say, hey, let's get along here and get just the basic block and tackling of government, lower the temperature, enough with the politics. Let's just get some easy things done. And that's what the voters want. That's what America wants. And let's be honest, that's what America needs.
And quickly, just in the 30 seconds or so that we have left, I mean, we talked about Congress, but the governors increasingly right now, because of the issue of the pandemic and COVID cases across the country, red states, blue states increasing, the governors are going to play a crucial role here. How is that relationship going to work with the executive branch?
Boy, it's true. My college roommate is the governor of Montana, and he and I were talking the other night about this, and he was talking about how important this is. You know, not a Democrat, not a Republican, doesn't matter. The governors have to work very closely. And part of this is putting science first and putting politics aside and just saying, what are the things we got to get done? And that's what I'm really hopeful that Biden can do. Just put the science and the economics first and put the politics for later.
Thank you, as always, former Obama campaign manager Jim Messina. Great to have you. And Kevin, it's a big round number that we like to talk about, even though the Dow, of course, is a price-weighted, not market cap. It is Dow 30,000 for the first time ever, and that folds over into record highs that we continue to see on the S&P 500 and the cyclical trade, Russell 2000, also fresh record highs. This is Balance of Power on Bloomberg TV and radio.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
This is Balance of Power on Bloomberg Television and Radio. I'm Kevin Cirilli in Washington, D.C.
And I am Taylor Riggs in New York. Kevin, it is time for our Stock of the Hour. Fresh record highs across the indices, but we go and do a deep dive into some of the individual stocks, like marijuana stocks, also spiking today after the GSA approved a transition to a Biden government. And Machandra looking at what is next for the pod stocks.
Thanks, Taylor. Yeah, we're seeing some really double-digit pops for some of the biggest and best-known names within that sector, talking about the likes of Tilray, the likes of Sundial, the likes of Aurora as well. But if we bring up a Bloomberg terminal chart, we have two. That will show you that the industry as a whole also benefiting from this investor enthusiasm. What we should be able to show you is the MJ. That's the biggest pot ETF. And we're seeing the daily moves there up around about 6% today. And that mirroring what we saw in those first days after the election. And that's because investors really expecting a Biden presidency to be beneficial to that move towards greater legalization of cannabis. They've heard both Biden and Kamala Harris be more supportive of cannabis reform. And of course, we saw more of the states act positively in that direction at the time of the election. Investors really thinking they're going to get some action on a federal level. Taylor.
You know, Emma, it's interesting. Everything is higher, but you also take a look at Tilray in particular, increasing the cash flow with the debt swap. That seems to be the theme of the day. Debt is free. Everything is 0%. So why not?
Yeah, that's absolutely right. And really that being showing a bit of investor enthusiasm for that particular stock. As you mentioned there, we're seeing that debt converting about $124 million worth of debt stock into about 6 million shares for an existing bondholder. Also, as you mentioned there, helping to strengthen the balance sheet for Tilray and removing a big chunk of interest obligations. Jefferies today, Taylor, calling it a shrewd move.
Emma Chandra, thank you, as always, for joining us. We appreciate it. And stay with us because coming up next, the role of the U.S. on that global stage. We speak with Eurasia Group President Ian Bremmer about what President-elect Biden's team could tell us about his foreign policy priorities. This all comes, Kevin, as more headlines cross Nevada, certifying election results also showing a Biden victory. So that seems to be more clear through and through. This is Balance of Power on Bloomberg TV and radio.
Every era presents its own unique set of challenges and opportunities. Trade CME Group futures with Interactive Brokers at low cost and seize the moment. Start investing today at interactivebrokers.com.hk.
Jawohl. Können Sie einmal noch ganz kurz zu uns kommen? Ganz kurz.
Davor stellen? Ja.
Our generation's biggest problem.
Climate change.
cure rate even, there will be enough capacity to really vaccinate the world, well, let's say until the end of next year.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Balance of Power on Bloomberg Television and Radio. I'm Taylor Riggs here with Kevin Cirilli. Let's get on over to the First Word News, and we do that with Mark Crumpton.
Taylor, thank you. Although President Trump is finally calling on his agencies to cooperate in the formal transition process to a Biden administration, Mr. Trump is still not admitting he lost the election. He tweeted repeatedly today about election fraud, including a retweet that says, quote, "I concede nothing." The General Services Administration has acknowledged that Joe Biden was the apparent winner of the election. That gives him access to current agency officials, briefing books, and other resources. The president is due to hold a news conference any moment now. President-elect Biden reportedly will name Michelle Flournoy to be Secretary of Defense. NBC News says the announcement could come today. Flournoy was Undersecretary of Defense during the Obama administration. She would be the first woman to run the Pentagon. New York City will have vehicle checkpoints at key bridges and crossings and will strictly enforce the travel quarantine. The sheriff's office announced today it will conduct spot checks when out-of-state buses drop riders off at the curb. Test and tracing teams will be on the ground to direct individuals to testing sites and provide education on quarantine. Violations of self-quarantine will be enforced and may carry fines of up to $2,000. Princeton University says all undergraduates can get back to campus for the spring term that begins in February. The Ivy League school says it made the decision after establishing an on-campus lab and cultivating strong public health practices. But returning to campus doesn't mean an end to heavy restrictions. Parties and most other social gatherings will be prohibited. Masking and social distancing requirements will apply throughout campus. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you, Mark. Now, President-elect Biden is set to formally announce key foreign policy and national security appointments 1 p.m. Eastern. He is also expected to nominate his longtime advisor, Tony Blinken, as Secretary of State, marking a return to a foreign policy strategy focused on alliances. Joining us
Taylor,
now,
Taylor, we actually hear President Trump, and let's get to President Trump live at the White House.
Absolutely incredible. It's nothing like that has ever happened medically, and I think people are acknowledging that, and it's having a big effect. But the stock market's just broken 30,000. Never been broken, that number. That's a sacred number, 30,000. Nobody thought they'd ever see it. That's the 9th time since the beginning of 2020, and it's the 48th time that we've broken records during the Trump administration, and I just want to congratulate all the people within the administration that work so hard. And most importantly, I want to congratulate the people of our country, because there are no people like you. Thank you very much, everybody. Thank you.
Mr. President, why not concede for the good of the country?
Gosh, Kevin, I mean, you help me here. What is your key takeaway from that, short and sweet?
It was a short and sweet remarks in which the president just appeared momentarily inside of the Brady briefing room at what, according to our colleagues reporting, Taylor, was a last-minute press conference in which White House staffers were rushing to get into the Brady briefing room. That was a very brief public commentary from President Trump, Taylor, right there, and still no formal acknowledgement of what is going on, even as GSA has now signaled that the transition is going to move ahead. And the headline on the terminal captures it beautifully. Trump discusses stock market in a very short press briefing. Let's get to Ian Bremmer of the Eurasia Group, Eurasia Group President Ian Bremmer. I mean, your reaction to that very brief commentary from President Trump just moments ago.
He's not doing a lot of governing, right? I mean, coronavirus continues to be the most important story out there. You'd like, for at least until January 20th, you'd like the president to be out in front on it. That's not the case. And we haven't seen a concession from President Trump. In fact, he fired Christopher Krebs. I know that seems like a year ago, it was just a week ago. This is the man that's actually entrusted with ensuring election security, and he fired him for not upholding President Trump's own calls of election fraud, which are completely without merit. And so, look, ultimately, it doesn't matter to the outcome, but it does matter because he has an enormous megaphone, and a lot of people believe him. You have a large number of Trump supporters in the country that actually think the election was rigged. And that means that their willingness to believe in the institutions of the United States are deteriorating. It makes it a lot harder to govern, a lot harder to lead by example internationally. I mean, you think anyone's going to listen to the U.S. when we criticize other countries for their electoral irregularities? When we have a president that's actually said that the election's been stolen, it's a joke, right? So that is a problem. It is a problem that will resolve itself in the immediate sense, and the markets will be just fine with it. You saw it bouncing on the Yellen announcement for Treasury just yesterday. But the deep structural issues with the United States not having the kind of institutions that we used to, or that countries like Germany and Japan, the Nordics, Canada do, that's something we're going to be living with for quite a long time.
Ian, I asked this question yesterday, and I'm desperate for your thoughts. A lot of people thought that Trumpism and the thought of America First was in reaction to 8 years of Obama and trying to work with alliances and trying to be tough on China, but only doing it with alliances. Are we just going back to that? How is this time different?
I think there's a little bit of both. I think that Obama as president, with Biden as vice president, were much more multilateral in orientation. They wanted to work with allies, but they were also pretty reluctant to deploy American power. And I think Trump signaling with America First very clearly, much more unilateral, much more transactional in orientation, and much more willing to deploy American power. And by the way, if you look at the wins that Trump has gotten over his 4 years, whether it's with South Korea or the U.S.-Mexico-Canada agreement, or whether it's with allies on the China 5G front, or even driving the new peace deals happening in the Middle East, leaving aside the Palestinians, all of that was a unilateral America First approach. I think the wins that you saw under Obama, like the Iranian nuclear deal, for example, or constructive movement on climate, were largely multilateral deals where the Americans were working with allies and weren't driving its power by itself. But there's an enormous amount of distance between those two approaches. You'd like to believe that a Biden administration is not going to simply revert to the status quo ante of the Obama administration, but will actually find some lessons from some of Trump's successes as well. And I'll tell you that from my personal conversations with those that are in the new cabinet, they do recognize that some of the things that Trump did actually worked, and actually worked better than the old Obama approaches. And I think they are ready to learn from them as well. So I'm cautiously optimistic that we're going to head to a more constructive place here.
I want to pick up with something that you just said about 5G, because coming up, we're going to hear from the Undersecretary of Economic Affairs, Keith Kroc, who has just been able to secure the more than 50 now nations around the world that are adopting to their clean 5G network protocols and really going against the Chinese. And the UK yesterday saying that they could ban Huawei technologies as early as next calendar year. From your conversations based with individuals in the incoming administration as it relates to 5G and China, do you think that they will continue in that vein of trying to secure a clean 5G network for Western allies and not with the Chinese?
I believe that the Trump foreign policy on 5G, specifically in terms of Huawei, has been the most successful foreign policy they have implemented in their entire administration. As you mentioned, they've gotten a surprising number of allies signed up, and this didn't exist as a policy before Trump. And I know for a fact that the incoming Biden administration understands that success and wants to continue along those lines. But you asked me very specifically about continuing the clean network policy, and I want to be clear that I think that the Biden administration will not just be focused on the national security components, but will also be engaged much more with the American private sector to help ensure that the policies we implement actually don't hamstring our own private sector companies that are trying to develop globally. And that's a push and pull. It's like if you think about CFIUS, which looks to review investments from a national security perspective. It's not just about Homeland Security doing that review. You need the people from Commerce and Treasury also involved. You want to understand how it impacts American economic interests, not just national security interests. And I think that the Biden administration approach with China will be more blended in that regard.
Ian, are our allies willing to be tough on China?
Depends on the ally, right? I mean, they're much less willing if we're not doing anything. If I think about Europe, the Germans are more willing to be tough on China. The East Europeans, who are part of the so-called 17+1 with Beijing, they all joined Belt and Road. They're all getting a lot more money in an environment where there's not so much money to be had. I mean, you probably know that there is the announcement last week of the RCEP agreement. It's the largest multilateral trade deal in global history. The United States has no part of it. China's driving it. You know about Belt and Road. It is the largest framework for infrastructure investment globally. It's being driven by Beijing. The United States has no equivalent. So if you're asking American allies, would they rather join with an American architecture or a Chinese architecture, they would say an American architecture. If you say, would you rather join RCEP or nothing, then they'll choose RCEP. Would you rather Belt and Road investments or none? I mean, look, I will tell you right now, as an American, I would rather the Chinese develop ports in Sri Lanka than not have a port, because that port will lead to growth. I'd much rather if the port was driven by Americans, Europeans, Japanese, but that's not on offer. So unless we're going to start spending real money and doing real long-term strategy, and remember, the Trans-Pacific Partnership, which Trump spiked, but Obama couldn't get it done. It was his policy. They failed. Yeah. They failed. So if there is no American option, it's not clear to me what exactly we're asking our allies to do.
So many thoughts and perspectives. We're grateful always for your time. Ian Bremmer, Eurasia Group and G0 Media President. And coming up, we will speak with Congresswoman Haley Stevens of Michigan on whether Congress will come to a stimulus deal. We're still waiting. Clock is ticking. This is Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg Television and Radio. I'm Taylor Riggs in New York.
And I'm Kevin Cirilli in Washington, D.C. Joining us now is Congresswoman Haley Stevens, a Democrat of Michigan. And Congresswoman, give us the play-by-play. When are we going to get more fiscal relief?
Well, we need it, and we know we need it now. We're right now a few days before Thanksgiving, and certainly no one's being prepared to take a vote. But it's clear from our small businesses to our public schools to our state and local budgets that we need a relief package just as we needed one in early summer. And I'll tell you, you start to look at the spike in cases, and right now, in some ways, Kevin, it's all eyes on North Dakota, right? There's just an exorbitant rate of fatalities and cases, lines around the block. And I mention that because that's Republican leadership in that state that could really come to the table with Democratic leadership in the House to say, let's get a package done because our small businesses can't withstand this. Our job loss, it can't go on like this. We need to be able to buoy our economy and get through to the other side of this pandemic. It's in some ways very similar to where we were in the early days of this virus.
Well, to follow up on that precisely in terms of getting past the hard line and getting past where both sides are dug in, you've worked with Republicans before. You're much more of a centrist Democrat. In terms of another round of fiscal relief, do you think it's going to take Republicans in red states where the virus has surged in order to put pressure on compromise?
We want to see that. I think that there's a real opportunity for that. One of the other ongoing questions, Kevin, are the Georgia special elections. And I heard earlier today a thought posited on television. Hey, are we going to see Mitch McConnell not come to the table because of the special elections in Georgia, which in many respects is exactly the opposite of what the American people want, right? They want an end to the politicking. They want an end to the politics above everything and the deal to get done for the American worker, the American small business. I'll tell you, you're absolutely spot on. I've worked on both sides of the aisle. I worked in the Obama administration on the U.S. auto rescue. Little known fact that the Bush appointees came to the table with those of us in the Obama administration to get us through the first 100 days. That auto rescue team led by Steve Ratner was also comprised of Republicans, people who have gone on to run for office in the Republican Party, but yet we were a team united to save the U.S. auto industry. And now when we're looking at the balance of the American economy and getting deals done, we should be able to do this. I have withheld this, or I've withheld this notion that, you know, look, we don't need to get cynical. We just got to get to work. And so I'm maintaining those conversations. I've got good relationships with my colleagues. I'm not taking extreme viewpoints, and I'm continuing also to advocate for what we need here in Michigan, which is, my goodness, that support for our small businesses, Kevin.
So then why can't you, or what pressure have you put on Speaker Pelosi to work with Mnuchin and do a piecemeal approach versus an all or nothing approach, which leaves us with nothing?
Well, we certainly saw Mr. Mnuchin somewhat explode last week when he called on the Federal Reserve to return the dollars that had been allocated to the Federal Reserve to buoy our economy.
Those programs weren't being used.
During the CARES Act. Well, look, I've been very clear with my leadership. I don't think we need to get into the race to the bottom with the dollar figure. I think what we need is relief, and I've regularly taken to the House floor and spent the time listening, right? And spent the time listening. But right now in this environment, we're also removed from one another, which is also what's causing problems. So the letter writing campaigns that go on, obviously spending time with my constituents and reconfirming this. I work really closely with about a dozen or so of the mayors and township supervisors right here in my suburban district in Metro Detroit. Most of them, by and large, are on the other side of the aisle. So I take their viewpoints and bring them together and then share them with my House leadership. What is it? We need our fair share of federal funding. That's what we need. We don't need, and they say, hey, fiscal responsibility. I think that's really important. I call it return on spend, the return on the taxpayer dollar that's being spent, and we're keeping the heat on.
Yeah.
Certainly we wanted to get a deal done. The House has voted. We know that. We have the words from Mitch McConnell. We don't think it's time to act. Moving forward on a Supreme Court nominee, talking to my U.S. senators here in Michigan who are also frustrated.
We're grateful for your time, Congresswoman Haley Stevens, Democrat of Michigan. This is Bloomberg.
It is important for each side to understand the sensitivities of the other.
Former U.S. Secretary of State Henry Kissinger said the incoming Biden administration should move quickly to restore lines of communication with China that frayed during the Trump years, or risk a crisis that could escalate into military conflict.
Unless there is some basis for some cooperative action, the world will slide into a catastrophe comparable to World War I, with a technology that is even more difficult to control than the technology of the period then.
This is Balance of Power on Bloomberg Television and Radio. I'm Taylor Riggs in New York.
And I'm Kevin Cirilli in Washington. It's time for a Bloomberg exclusive. I spoke to Keith Krach, Undersecretary of State for Economic Affairs, and we discussed economic growth, energy, the environment, and much more.
Kevin, I think that, what began as a pilot in terms of the clean network, I think this is one of the things in terms of the Chinese Communist Party that's overwhelming success. And I think to hit on that thread of an alliance of democracies, uniting those democracies around the world based on democratic values, it turns the tables on the Chinese Communist Party. And if you look at where this can be extended to, that we're already doing, it's in areas of clean infrastructure. It's in areas of clean financing, clean minerals, clean supply chains, clean energy. So I think this is a magic formula that is timeless. And when this got announced, we announced it as a comprehensive approach to addressing the long-term threats of the Chinese Communist Party. And it's built on a coalition of trusted partners. And that's countries, companies, and civil society. So I think it's a winning formula.
I have two more questions for you. I remember traveling with Secretary Pompeo at the start of this year in Latin America, as well as throughout Jamaica as well. And it was not uncommon to see Huawei buildings and Huawei signs all throughout the downtowns. And so I guess, could we be looking at a significant shift in that as a result of this network, of the Clean Network Initiative, over the next couple of years, where maybe China doesn't have such a presence in their technological endeavors in countries that are so geographically close to the United States?
By the way, you're so right, and around the world, because if you look at what has happened, it has totally turned the tide on Huawei.
That was part of my interview with Keith Kroc, who is the Undersecretary of Economic Affairs at the State Department. And you can hear more of that interview cross-platform on the Bloomberg.
Look at you, cross-platform.
You know, Taylor, I try. Coming up, Balance of Power continues on Bloomberg Radio. And we are awaiting a speech from the Biden-Harris transition team, and we will have that as well. This is Balance of Power on Bloomberg TV and Radio.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
I'm Mark Crumpton with Bloomberg's First Word News. President Trump made a very brief appearance in the White House briefing room about half an hour ago. He hailed the Dow Jones Industrial Average passing the 30,000 mark, calling it a sacred number. Mr. Trump also said he was thrilled with progress toward developing vaccines for COVID-19. The president did not take questions and did not mention the election. Mr. Trump has refused to concede to President-elect Joe Biden, although the White House has given approval to begin the transition process. The Nevada Supreme Court has certified Joe Biden's victory in the state. It's the latest setback to President Trump's efforts to reverse the election's results. The state's governor will officially appoint the electors who will cast Nevada's 6 electoral college votes for Joe Biden, unless a court intervenes. Michigan made Mr. Biden's win there official on Monday. Georgia certified its results last week, and Pennsylvania followed earlier today. Arizona is set to certify its results on November 30th, and Wisconsin by December 1st. The head of the European Central Bank says prospects of a vaccine against the coronavirus raise confidence that unnecessary economic damage can be avoided. But speaking today, ECB President Christine Lagarde said there's no doubt the pandemic will have a long-term impact on the global economy.
It is clear that COVID-19 will cause lasting changes to our economies. It will not necessarily sap our economic potential if we act powerfully, but it will cause sectoral and societal shifts against which we have to guard and be prepared.
According to a new ECB report, governments and central banks face a tricky balance between shocking the economy if they end the pandemic support too soon and undermining it if they keep measures in place too long. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
It's 1 p.m. in New York, 6 p.m. in London, and 2 a.m. in Hong Kong. I'm Bonnie Quinn. Welcome to Bloomberg Markets. Here are the top stories on the Bloomberg and from around the world we're following. This hour, President-elect Joe Biden and VP-elect Kamala Harris are expected to name officially some choices for their incoming administration. We'll bring it to you live. Later this hour, Tom McGee, CEO of the International Council of Shopping Centres, joins on what this holiday retail season will look like for brick-and-mortar stores. Plus, as we begin the Thanksgiving holiday travel season, one estimate has airlines losing a combined $157 billion this and next year. We'll have details. But first, let's take a quick check of the markets. And since we hit Dow 30,000, we've only been going in one direction. The S&P 500 is up 1.6% now, led higher by Dollar Tree, interestingly. Best Buy is actually the worst performer, two retailers there on either side. The 10-year yield is moving around just a little bit up to above 88 basis points, a weaker dollar index and also a calmer VIX. President-elect Joe Biden then planning to nominate former Federal Reserve Chair Janet Yellen to serve as his Treasury Secretary, according to all reporting. We asked some guests about the pick.
She's obviously someone who knows Washington policy pretty well. Chair of the Council of Economic Advisors, chair of the Fed, and now Secretary of Treasury.
I'm hoping Janet Yellen takes a page from good Treasury secretaries like Jim Baker or Robert Rubin, even Alexander Hamilton, get a musical play named after her.
She would be inheriting this Treasury position at a really difficult time for anybody in that position. So we're far from over. These are sobering times for banks, for the markets generally, for individuals and corporations.
She's going to be much more subject to the political winds in Washington. And for all her esteemed accomplishments, I don't know that we know how well she can navigate those political waters, choppy as they may be.
The financial markets, banking, regulatory, these have never been her forte. Remember, she's a University of California, Berkeley trained labor economist. And I think that is where the greatest appeal is.
And we welcome now Jeremy Kress, former attorney in the Banking Regulation and Policy Group at the Fed Board of Governors, where he helped draft rules to implement the Dodd-Frank Act. He's currently assistant professor of business law at the University of Michigan. And we have our own Shonali Basak with us as well. So, Professor, Treasury has responsibility for all sorts of things, from issuing bonds to freezing assets for people on watch lists, potentially. But when it comes to the overlap between Treasury and the banking sector, what should we know?
Sure. So, I think the next Treasury Secretary has enormous challenges in front of him or her. The good news is that Janet Yellen is better equipped than nearly anybody to tackle those challenges. So in terms of, near-term priorities, I think
just specifically on the intersection between banking and Treasury as opposed to the SEC or other agencies.
Sure. So the Treasury Secretary occupies a really unique role in that he or she coordinates among all of the other regulatory agencies what their regulatory policies are likely to be. The Treasury Secretary chairs a body called the Financial Stability Oversight Council, or FSOC. That was set up by Congress in the Dodd-Frank Act in 2010.
Professor, we may have to jump in. I'm terribly sorry. We will return to you. It's going to be an interesting conversation, but we do need to get to the President-elect Joe Biden on cabinet choices.
To announce nominations and staff for critical foreign policy and national security positions in my administration. It's a team that will keep our country and our people safe and secure. And it's a team that reflects the fact that America is back, ready to lead the world, not retreat from it. Once again, sit at the head of the table. ready to confront our adversaries and not reject our allies, ready to stand up for our values. In fact, in calls from world leaders that I've had, about 18 of them or 20 so far, I'm not sure the exact number, in the week since we won the election, I've been struck by how much they're looking forward to the United States reasserting its historic role as a global leader, both in the Pacific as well as the Atlantic, all across the world. The team meets this moment, this team behind me. They embody my core beliefs that America is strongest when it works with its allies. Collectively, this team has secured some of the most defining national security and diplomatic achievements in recent memory, made possible through decades of experience working with our partners. That's how we truly keep America safe, without engaging in needless military conflicts and our adversaries in check and terrorists at bay. And that's how we counter terrorism and extremism, control this pandemic and future ones, deal with the climate crisis, nuclear proliferation, cyber threats and emerging technologies that spread authoritarianism, and so much more. And while this team has unmatched experience and accomplishments, they also reflect the idea that we cannot meet these challenges with old thinking and unchanged habits. For example, we're going to have the first woman lead the intelligence community, the first Latino and immigrant to lead the Department of Homeland Security, and a groundbreaking diplomat at the United Nations. We're going to have a principal on the National Security Council whose full-time job is to fight climate change. For the first time ever, that will occur. And my national security team will be coordinated by one of the youngest national security advisors in decades. Experience and leadership, fresh thinking and perspective, and an unrelenting belief in the promise of America. I've long said that America leads not only by the example of our power, but by the power of our example. And I'm proud to put forward this incredible team that will lead by example. As Secretary of State, I nominate Tony Blinken. He's one of the better prepared for this job. No one's better prepared, in my view. He will be the Secretary of State who previously served in top roles on Capitol Hill, in the White House, and in the State Department. He delivered for the American people in each place. For example, leading our diplomatic efforts in the fight against ISIS, strengthening America's alliance and positions in the Asia-Pacific, guiding our responses to the global refugee crisis with compassion and determination. And he will rebuild morale and trust in the State Department, where his career in government began. And he starts off with the kind of relationships around the world that many of his predecessors have had to build over the years. I know. I've seen him in action. Tony's been one of my closest and most trusted advisors. I know him and his family, immigrants and refugees, a Holocaust survivor, who taught him to never take for granted the very idea of America as a place of possibilities. Possibilities. Tony is ready on day one. As Secretary for Homeland Security, I nominate Alejandro Mayorkas. This is one of the hardest jobs in government, a gigantic agency. The DHS Secretary needs to keep us safe from threats at home and from abroad. And it's the job that plays a critical role in fixing our broken immigration system. After years of chaos, dysfunction, and absolute cruelty at DHS, I'm proud to nominate an experienced leader who has been hailed by both Democrats and Republicans. Ali, as he goes by, is a former U.S. attorney, former director of U.S. Citizenship and Immigration Services, and a former DHS deputy secretary. Helped implement DACA, prevented attacks on the homeland, enhanced our cybersecurity, helped communities recover from natural disaster, combated Ebola and Zika. And while DHS affects everyone, given its critical role in immigration matters, I'm proud that for the first time ever, the department will be led by an immigrant, a Latino, who knows that we are a nation of laws and values. And one more thing. Today's his birthday. Happy birthday, man. Happy birthday. He's 21. As a director of national intelligence, I nominate Avril Haines, the first woman ever to hold this post. To lead our intelligence community, I didn't pick a politician or a political figure. I picked a professional. She's eminently qualified. Former deputy director of the CIA, former deputy national security advisor to President Obama, and a fierce advocate for telling the truth and leveling with her decisions with the decision makers. Straight up. Nothing unnecessary. I know because I've worked with her for over a decade. Brilliant, humble, can talk literature and theoretical physics, fixing cars, flying planes, running a bookstore cafe, all in a single conversation because she's done all that. And above all, she gets word of a threat, if she gets word of a threat coming to our shores, like another pandemic or foreign interference in our elections, she will not stop raising alarms until the right people take action. People will be able to take her word because she always calls it as she sees it. I believe we are safer with Avril on the watch. I think she can make a great contribution. And as United States Ambassador to the United Nations, I nominate Linda Thomas Greenfield, a seasoned and distinguished diplomat with 35 years in the Foreign Service who never forgot where she came from, growing up in segregated Louisiana. The eldest of 8, her dad couldn't read or write, but she says he was the smartest person she knew. First in her family to graduate from high school, then college. The whole world literally ahead of her, as her dad and mom taught her to believe. Post in Switzerland, Pakistan, Kenya, the Gambia, Nigeria, Jamaica, Liberia, where she was known as the People's Ambassador. Willing to meet with anyone, an ambassador, a student, working people struggling to get by, and always treating them with the same level of dignity and respect. She was our top State Department official in charge of African policy during the Ebola crisis. She received overwhelming support from her fellow career Foreign Service officers. And she'll be a cabinet status because I want to hear her voice on all the major foreign policy discussions we have. And my national security advisor, I choose Jake Sullivan. He's once-in-a-generation intellect with experience and temperament for one of the toughest jobs in the world. When I was vice president, he served as my national security advisor. He was a top advisor to Secretary of State Clinton. He helped lead the early negotiations that led to the Iran nuclear deal. He helped broker the Gaza ceasefire in 2012, played a key role in Asian-Pacific rebalance in our administration. And in this campaign for the presidency, he served as one of my most trusted advisors on both foreign and domestic policy, including helped me develop our COVID-19 strategy. Jake understands my vision that economic security is national security, and it helps steer what I call a foreign policy for the middle class, for families like his growing up in Minnesota, where he was raised by parents who were educators and taught him the values of hard work, decency, service, and respect. What that means is to win the competition for the future, we need to keep us safe and secure and build back better than ever. We need to invest in our people, sharpen our innovative edge, unite the economic might of our democracies around the world to grow the middle class and reduce inequity, and do things like counter predatory trade practices that our competitors and our adversaries. And before I talk about the final person today, let me talk about this new position. For the first time ever, the United States will have a full-time climate leader who participate in ministerial-level meetings. And that's a fancy way of saying they'll have a seat at every table around the world. For the first time ever, there will be a principal on the National Security Council who can make sure climate change is on the agenda in the Situation Room. For the first time ever, we will have a presidential envoy on climate. He will be matched with high-level White House climate policy coordinator and policy-making structure to be announced in December. And that'll lead efforts here in the United States to combat the climate crisis, mobilize action to meet the existential threat that we face. Let me be clear. I don't for a minute underestimate the difficulties of meeting my bold commitments to fighting climate change. But at the same time, no one should underestimate for a minute my determination to do just that. And as for the man himself, if I had a former Secretary of State who helped negotiate the Paris Climate Accord, or a former presidential nominee, or a former leading senator, or the head of a major climate organization for the job, they would show my commitment to the United States and the whole world. The fact that I picked the one person who is all of these things speaks unambiguously to my commitment. The world will know that with one of my closest friends, John Kerry, he's speaking for America on one of the most pressing threats of our time. No one I trust more. To this team, I thank them for accepting this call to service. And for their families, I thank you all for your sacrifice. You know, we could not do this without you, in my view. Together, these public servants will restore America globally, its global leadership, and its moral leadership, and will ensure that our service members, diplomats, and intelligence professionals can do their job free of politics. They'll not only repair, they'll also reimagine American foreign policy and national security for the next generation. And they'll tell me what I need to know, not what I want to know, what I need to know. To the American people, this team will make us proud to be Americans. And as more states certify the results of this election, there's progress to wrap up our victory. You know, I'm pleased to have received the ascertainment from GSA to carry out a smooth and peaceful transition of power, so our teams can prepare to meet the challenges at hand, to control the pandemic, to build back better, and to protect the safety and security of the American people. And to the United States Senate, I hope these outstanding nominees received a prompt hearing and that we can work across the aisle in good faith to move forward for the country. Let's begin that work to heal and unite. To heal and unite America as well as the world. I want to thank you all. May God bless you. May God protect our troops. And now I turn this over, this new team, starting with our next Secretary of State, Tony Blinken. Get my mask here, Tony, so I don't get in trouble. And we're going to clean off the podium.
Good afternoon. Mr. President-elect, Vice President-elect Harris, thank you for your trust and your confidence. If confirmed by the United States Senate, I will do everything I can to earn it. Mr. President-elect, working for you, having you as a mentor and friend, has been the greatest privilege of my professional life. So many people have brought me to this day, from college classmates to bandmates, my colleagues in the Clinton and Obama administrations, in the Senate, and at the State Department. I thank them all, and I ask forgiveness for my insatiable appetite for bad puns. Mostly, I'd like to thank my family, sisters and sisters-in-law, brothers-in-law, nieces and nephews, my wonderful in-laws, the Ryans, and especially my wife, Evan Ryan, and our children, John and Lila. They are truly my greatest blessings. For my family, as for so many generations of Americans, America has literally been the last best hope on earth. My grandfather, Maurice Blinken, fled pogroms in Russia and made a new life in America. His son, my father, Donald Blinken, served in the United States Air Force during World War II, and then as a United States ambassador. He is my role model and my hero. His wife, Vera Blinken, fled communist Hungary as a young girl and helped future generations of refugees come to America. My mother, Judith Pizarre, builds bridges between America and the world through arts and culture. She is my greatest champion. And my late stepfather, Samuel Pizarro, he was one of 900 children in his school in Białystok, Poland, but the only one to survive the Holocaust after 4 years in concentration camps. At the end of the war, he made a break from a death march into the woods in Bavaria. From his hiding place, he heard a deep rumbling sound. It was a tank, but instead of the Iron Cross, he saw painted on its side a 5-pointed white star. He ran to the tank. The hatch opened. An African-American GI looked down at him. He got down on his knees and said the only 3 words that he knew in English that his mother had taught him before the war. God bless America. That's who we are. That's what America represents to the world, however imperfectly. Now, we have to proceed with equal measures of humility and confidence. Humility because, as the President-elect said, we can't solve all of the world's problems alone. We need to be working with other countries. We need their cooperation. We need their partnership. But also confidence, because America, at its best, still has a greater ability than any other country on earth to bring others together to meet the challenges of our time. And that's where the men and women of the State Department, Foreign Service officers, civil servants, that's where they come in. I've witnessed their passion, their energy, their courage up close. I've seen what they do to keep us safe, to make us more prosperous. I've seen them add luster to a word that deserves our respect, diplomacy. If confirmed, it will be the honor of my life to help guide them. And so thank you all, and may God bless America.
Antony Blinken there, the nominee for Secretary of State, and you can continue to watch the comments from the rest of the nominees, from President-elect Joe Biden, Alejandro Mayorkas, Avril Haines, Linda Thomas-Greenfield, Jake Sullivan, and a new position, Presidential Envoy on Climate, for John Kerry. That's on Live Go. We'll return now to Jeremy Kress, former attorney in the Banking and Regulation Policy Group at the Fed. Jeremy, obviously we didn't get the Treasury Secretary announcement today, but we are expecting it soon. We are expecting it to be Janet Yellen, and you were about to tell us the overlap between Treasury and the banking sector.
Sure. So the Treasury Department does not regulate banks directly. That's the province of other bank regulators like the Fed and the FDIC. However, I do think that this announcement, or the anticipated announcement of Yellen as Treasury Secretary, is meaningful for banks in 2 ways. The first is it is an endorsement of the approach that Janet Yellen and her colleagues at the Federal Reserve took toward implementing the Dodd-Frank Act during her time as vice chair of the Federal Reserve and then chair of the Federal Reserve from 2014 to 2018. So I think that perhaps we could read some tea leaves into the overall financial regulatory approach that the Biden administration is going to take toward banks from the Yellen appointment. And the second way that this is meaningful for banks is the Treasury Secretary chairs a body called the Financial Stability Oversight Council, or FSOC. FSOC is a council of regulators that was set up in the wake of the 2008 financial crisis. And as chair of the FSOC, the Treasury Secretary really plays a convening role to try to get all the financial regulators on the same page in addressing potential financial stability threat. And that, of course, includes banks.
So what about non-banks here, Jeremy? We know that she has taken some concerns about the shadow banking system. Can we expect more regulation there?
I would anticipate non-banks to be a major emphasis of the Biden administration, including the Treasury Department. You know, over the past year, we have seen stresses in the non-bank sector, just like we saw in 2008. And by non-banks, of course, I mean money market mutual funds, hedge funds, insurance companies, broker-dealers. The U.S. Regulatory system has never really had a satisfactory approach toward non-banks. FSOC being set up in 2010 was really Congress's attempt to regulate non-banks after 2008. But the Trump administration has really de-emphasized FSOC. And although they have made some noise about exploring regulation of the non-bank space, we really haven't seen it in practice. So I think that addressing those non-bank financial stability risks is likely to be a top priority of the Biden administration, and that is going to start with reviving FSOC's institutional capacity.
All right, Jeremy, unfortunately, we already have to leave it there. Much appreciate your patience. We did have to get the announcements, and we didn't get the Janet Yellen announcement yet, but it's apparently coming before long. And that, of course, is Jeremy Kress, former attorney in the Banking Regulation Policy Group at the Fed Board of Governors, and our Shonali Basak. And, of course, Shonali, we should remember that Janet Yellen, on her very last day in office, put the Wells Fargo cap in, so she knows these banks extraordinarily well.
Absolutely right.
Stay tuned. More next.
Every era presents its own unique set of challenges and opportunities. Trade CME Group futures with Interactive Brokers at low cost and seize the moment. Start investing today at interactivebrokers.com.hk.
In our interconnected world, if people in low and middle income countries miss out on vaccines, the virus will continue to spread and the economic recovery globally will be delayed. Equitable access is in the national interest of each and every country.
But this also means if we have a vaccine, we should have a common approach to give a fair share to everyone so that the most vulnerable groups, the frontline workers and the healthcare workers, for example, are the ones who get the vaccine first.
We're donating another $70 million to fight COVID-19. $50 million of that will be for buying vaccine doses for low-income countries, and another $20 million will be for researching even further and new vaccines altogether.
Il nous faut nous assurer que les conditions réglementaires et politiques sont toutes réunies pour un accès le plus large et rapide possible à ces produits, tout en respectant les standards internationaux de qualité. C'est pourquoi la France propose que puisse être rapidement adoptée une charte d'ACTA qui réaffirme ces grands principes. Partager la connaissance, soutenir les systèmes de santé, avoir des produits rapidement accessibles et abordables.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm Mark Crumpton with Bloomberg's First Word News. The Nevada Supreme Court has certified Joe Biden's victory in the state. It's the latest setback to President Trump's efforts to reverse the election's results. The state's governor will officially appoint the electors who will cast Nevada's 6 electoral college votes for Mr. Biden unless a court intervenes. Michigan made Biden's win there official on Monday. Georgia certified its results last week, and Pennsylvania followed earlier today. Arizona is set to certify its results on November 30th and Wisconsin by December 1st. The European Union and other donors are offering new funding for Afghanistan. A largely virtual pledging conference in Geneva drew representatives from more than 70 countries in the first such event in 4 years. The EU pledged $1.4 billion in assistance to Afghanistan over the next 4 years, but like many others, made its support conditional on the country's commitment to democracy, the rule of law, human rights, and gender equality. David Dinkins, who broke barriers as New York City's first African-American mayor, has died. Dinkins had a calm manner, a dramatic shift from both his predecessor, Ed Koch, and his successor, Rudy Giuliani. Mr. Dinkins was doomed to a single term by a soaring murder rate, stubborn unemployment, and his mishandling of a riot in Brooklyn. Dinkins' wife, Joyce, died last month at the age of 89. David Dinkins was 93. Bloomberg has crunched the numbers to determine the best and worst places to live in the coronavirus era. We looked at where the virus has been handled most effectively with the least amount of disruption. Our COVID-19 resilience ranking has New Zealand as the best place, followed by Japan, Taiwan, South Korea, and Finland. The bottom 5 include the Czech Republic, Belgium, Peru, Argentina, and Mexico. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Live from Toronto, I'm Amanda Lang. Welcome to Bloomberg Markets.
And from Bloomberg World Headquarters in New York, I'm Vonnie Quinn. We're now joined by both our Bloomberg and our BNN Bloomberg audiences. Here are the top stories we're following from around the world. Most important time of the year is here for retail. It's typically when retail finally gets into the black for the year, at the start of holiday shopping. But what will Black Friday look like during a pandemic? We'll discuss with Tom McGee, International Council Shopping Centres CEO. Record losses for airlines. We'll take a look at projections from IATA that show the industry losing a combined $157 billion between this year and next. The rotation into value. Is momentum stalling for growth? We'll discuss the potential for a new market leader. Amanda.
And Vonnie, we certainly are seeing markets with the reopening trade, perhaps we can call it that, back on. Techs are lagging a little bit, but they're not lagging as much as we've seen on some other days. But there certainly seems to be a rotation. We'll talk more about that. Broad-based advance, though, for that S&P 500 as the narrower gauge of the Dow crosses 30,000. We do have every subgroup of the S&P 500 moving higher. And notable, perhaps, that energy is the leader once again, almost 5% move higher for that group as the price of oil moves about 5% higher. So a big move into new territory, at least in the range oil's been trading in terms of West Texas since this pandemic and the summertime. And so that may well indicate some new optimism about where things go. Financials are going strongly higher. Wells Fargo, one to watch, up 8% today. Energy is a factor in Toronto, too. Of course, all eyes will be on this Christmas, this holiday shopping season, which really kicks off this week across the U.S. New restrictions and lockdowns have some worried about what this is going to look like and which retailers will weather it better. Tom McGee is with us now. He is the president and CEO of the International Council of Shopping Centres. And Tom, it's always good to check in with you. This feels like a very important moment, and it's one, of course, where we have a mixed picture across the U.S. in terms of what's open and what's not, and the restrictions on shopping. What's the overall level of optimism you think is out there about how this season will do?
I think we have a fair level of optimism that the holiday season overall will be a solid one. Our forecast is for 1.9% growth. This is clearly a much different holiday season than anything we've experienced in the past, for sure. While Black Friday has always been and continues to be an important day, even this year, this is a very different holiday season. It's a much longer holiday season. People started shopping a lot earlier. Quite frankly, a lot more people are buying things online. That places, pressure on the logistics channel. So people are going to want to shop earlier to make sure they get their packages in time to the extent that they ship them. And then you're going to see, an acceleration of what we've been experiencing over the last 8 to 9 months, which is this convergence of the physical and digital world. A lot of retailers, a Walmart, a Target, a Best Buy, et cetera, that have a robust digital channel will encourage their customers to go to the store and pick those items up, whether that's curbside or in stores. So you'll see that convergence continue to take place. A lot of uncertainty, however, this shopping season, as you rightfully point out, clearly the spikes in the coronavirus cases, and then, quite frankly, just the uncertainty around government support and stimulus for not just businesses, but for individuals as well.
So, Tom, most big chains are staying closed on Thanksgiving itself. Last year, 38 million people went into stores on Thanksgiving Day. Will that alone impact the numbers?
I think a lot of outside of the pandemic, a lot of retailers made a decision to close on Thanksgiving just to give their employees a chance to celebrate the holiday. Clearly that'll have some impact, but the bigger impact is obviously the impact of the virus and the pandemic. That's clearly going. We're not going to see the big crowds, and nor do we want to see the kinds of big crowds that we've had in the past in stores and in shopping centers. There's obviously restrictions upon size, crowd sizes, et cetera. So I think what you will see is people going out shopping, but careful diligence towards safety requirements. I think those retailers and centers that do a really good job of making safety first and foremost very observant and transparent to customers will do the best, because people want to feel safe if they make the journey out to a store. And shoppers are going to be much more efficient, and they have been over the course of the pandemic. If you're going to a store, you know what you want, you execute that transaction, and then you leave. And so you won't see the kinds of window shopping and lingering in shopping centers that you have in the past.
One thing that's causing a fair amount of controversy is, however well-intended, this notion of what is an essential service, what can remain open and what can't. And we're seeing this play out in Canada. Big boxes win because they have groceries, but then they're selling a whole bunch of stuff for retailers that are otherwise closed. What's the best way, do you think, for policymakers to think about essential versus non-essential?
Well, I think first, I think retail in general has done a really good job of being respectful and diligent in implementing the social distancing requirements and other safety requirements, including encouraging and requiring, in many cases, customers to wear masks. And certainly the social pressures around customers to want their fellow customers to wear masks is pretty significant. So our belief is that we'd like to see retail in general stay open, but a strong requirement to maintain public health and safety. I think that this is by far the most important time of the year for this industry, and this is an industry that has been at the epicenter of the crisis, and so. The shutdown now would have some pretty significant consequences, particularly for small businesses. I will say, I think it's unfortunate that the government has not stepped up yet to provide more COVID relief. I think it's essential that they do. And quite frankly, yesterday, the day before, this should have been done already. Yeah. But as we enter into the end of this calendar year, it is absolutely essential the government step up, because there are so many businesses, not just in our industry, but in general, but particularly small businesses, small retailers, small restaurants that rely upon the government and are really rely upon the government to step up right now.
Yes.
Like they should.
Tom, you have still forecast positive gains year over year, and maybe some of that will be on food more than other things. But just the shopping centre itself, do you anticipate seeing some of them go away by year's end?
No, not by years. And look, there is certainly a lot of pressure upon the industry, and that's why I think government support is so important. But I don't anticipate any type of significant alteration in mix by the end of this year. I think going into next year, if we have a continuation of the crisis at this level without government support, I do worry about the health of the industry, and that we will have vacant shopping centers and tenants around the country. That's why I think it's so important for the government to act. But I don't think anything will happen in the next couple of weeks now.
All right, Tom, thank you, and good luck on Black Friday and the environs. You have a lot of work to do on those days. International Council of Shopping Centres CEO Tom McGee. Coming up, we take a look at the global airline industry. It's also heading for one of its worst years on record. This is Bloomberg.
Well, the main instruments on board include a dual frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise, but also the waves, the significant wave height, which is a third of the waves if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters, which is not negligible.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
I'm certain that we will be able to bring our debt levels down and avoid what you could call a debt crisis because we're focused and we've been open enough by telling the nation that we have too much debt.
The airline industry across the globe headed for its worst 2 years on record. Today, the International Air Transport Association estimating carriers will lose a combined $157 billion in 2020 and 2021. Now, that's almost 60% more than what it had forecast in June. We spoke earlier with Alexandre de Juniac, IATA Director General and CEO. Let's have a listen.
Our estimate for the next 7 to 10 months in terms of cash injections from government by any means, excluding debt, because this industry is already too heavily indebted, is around $70 to $80 billion. That's what we need on top of what has been already injected in the industry, which has been around $160 billion from government. And I have to say that we are pretty grateful to governments to have reacted so quickly and so strongly.
What we have seen, and we just saw a share price chart of what has happened with the travel sector, is that share prices of many of the companies that are members of IATA have gone up really, really strongly over the last few days. Why should governments be putting up more money when the financial markets seem to be prepared to invest in this space again? Why shouldn't these airlines go to the markets, either on the credit side or on the equity side, and raise more?
Airlines will have their own financial strategy, but what we can say is that the need for cash in the coming 7 to 8 months is around $70 to $80 billion. And it's a strong need for cash because we are in a so difficult situation due to the drop in traffic, so a major drop in revenues. We will have lost by the end of 2021 a year of revenues, so something like more than $800 billion. So you can imagine the stress under which we are in terms of cash shortage. That the reason why we need additional government support. But a part of it could be provided by the market. But what we think is that the markets will not finance everything, all the needs that the industry requests to survive. That's the reason why we're asking for additional government support. And additionally, I think it's wise investment strategy to comfort what they have already injected in the industry, to put the money for the industry to be ready to recover and to survive, and then they will be able probably to resell the shares they have acquired in our airlines, and so to make a better use of public money. And I think that's an important point.
But the market is now starting to see the light at the end of the tunnel. And I'm wondering whether the industry should be taking greater advantage of this. I understand that it is going to be a very deep and dark winter. I think we all see that. But nevertheless, the vaccine story does seem to be providing an idea of the timescale on which we are now operating. We now know how long the tunnel is. And as a result of which, I'm wondering how that changes the dynamic in terms of how the industry is going to seek to survive.
You know, you must be aware that our hypothesis for next year are based on a vaccine available by mid-2021, which is not something insane, which is pretty reasonable, because you need to have a significant proportion of the population vaccinated for the countries to be comfortable to lift all travel restriction and do whatever they can to restart or to help to restart air traffic.
That was IATA's Alexandre de Juniac talking with our Guy Johnson. I want to bring in Bloomberg's aviation and transportation reporter, Christopher Jasper, with us. And I want to actually start with what Guy was getting at, because he makes an excellent point, Christopher. Arguably, the stocks are starting to show that there are believers out there. Should governments be putting more money into these companies, or should they now be left to market forces and devices if they can?
Well, I think in terms of believers, they're mostly factoring in the reality of the bailout funding that the major carriers have already received, and the fact that they're likely to carry on getting that. Governments have really already decided that major airlines can't be allowed to fail and will get funding at a certain level, at least going forward. Combined with the fact that the vaccine is on its way, I think that what Alexandre de Juniac said at the end of the interview there is very important, though, and that's the notion that just because vaccines are being rolled out next month and beyond doesn't mean that the air transport market is suddenly going to revive. We've seen, certainly since the start of the pandemic, that nation states have adopted extremely rigid rules about who can fly, about levels of infection, and the fear in the industry is that those rules will be applied way into next year in terms of who's had testing and how many people have been vaccinated in a given population. So there is no expectation of a quick rebound, and the reality is, according to IATA, that the industry won't turn cash positive until the fourth quarter of next year, so a year from now, essentially. So plenty more pain to come in terms of losses accrued over the winter.
Yeah, I mean, Christopher...
And hoping... Sorry.
Well, I was just going to say, distressed investors are licking their chops literally over the airlines and wondering if it's time to get in now or even wait a little longer. And airline chiefs themselves are terrified. Stocks are down 40% apiece since the beginning of the pandemic. So, you know, how many are we going to see going into bankruptcy, no matter what the forecasts say?
Yeah, it depends how you measure it. I have to say about 50 have gone so far this year. IBA, a consultant, says 42 or so have either failed or filed for bankruptcy protection. They see the figure rising to 70 at least through the end of the winter, and basically say that carriers are just desperate to get through to Easter, when traffic traditionally revives, and if that can be twinned with effective rollout of the vaccine in major economies, then they will be well on the road to recovery. But we can certainly expect victims before that point. It's a case of battling through the next 6 months and hoping to be there on the other side.
Christopher Jasper, great to have your input on this. Christopher Jasper, Bloomberg reporter on aviation. And coming up next, we have been watching a rotation into value. It continues. We'll explore further with a look at the data. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back. There is a lot of talk when it comes to the stock markets these days about the rotation in leadership. It's been a long-standing leadership, of course, when we look back historically, as Bloomberg's Cameron Kreis notes today. So when the rotation truly comes, it could be a big shift. Cameron is with us now. Great to have you with us, Cameron. And your column on the Bloomberg is wonderful because it actually walks through with a lot of data looking at this sort of historical issue here, which is sort of the small cap versus big tech. Just walk us through the thesis and why you think this could actually be a pivotal moment.
Well, it's quite interesting because obviously small caps have underperformed against large caps generally, and the NASDAQ composite or NASDAQ 100 specifically for many, many years. But ultimately, that's really just the same trade, I think, as the famous or infamous growth versus value trade, where the NASDAQ, the large caps, are the growth vector, and small caps are the value vector. And we've seen a massive outperformance really over the last 15 years of the growth large cap NDX vector versus the small cap value vector. But what's interesting is obviously we kind of peaked there at the beginning of September and have pulled back since then about 16-17% on the NASDAQ versus the Russell 2000. And 16-17% seems pretty like a reasonable correction. What's interesting, if you go back and look at through the annals of time, the NASDAQ 100 started in 1985. There have been 9 corrections of at least 15%. 8 of those corrections sort of topped out at like 18.5%. So we're kind of right close to the area where if this is going to stop, it should stop real soon. The lone exception to that, of course, was the popping of the dot-com bubble early in this century, which saw a pullback of 70% for the NASDAQ versus the Russell 2000. So I think it's a really interesting technical juncture that we're at here.
Real quick, Cameron, because we're already out of time, but the massive size of the gains for growth, we're surely not going to see that all reverse and value be the beneficiary of all of that, are we?
No, I don't think we're going to go back to where we were necessarily in say 10 or 15 years ago, because a lot of these growth stocks are underpinned by earnings a lot more than they were 20 years or so ago. That being said, there's nothing to say that we can't see a couple of years at least of outperformance of some of these small cap value names, particularly in the context of a sort of a normalization and an eventual reopening as the vaccine permits us to sort of look beyond COVID.
Lots of value managers out there cheering you on, Cameron. Thank you. And if you want to read his story, definitely find it on the Bloomberg by Cameron Kreis there. From myself in New York and Amanda Lang in Toronto. See you tomorrow. This is Bloomberg.
Every era presents its own unique set of challenges and opportunities.
Trade CME Group futures with Interactive Brokers at low cost and seize the moment. Start investing today at interactivebrokers.com.hk.
Once it goes into this plant, it's heated up very quickly to 600 or so degrees. It basically carbonizes it, turns it into a carbon-rich material. Obviously kills all of the pathogens.
Chinese capital market, as you know, is nascent, is just developing, and so we think there's an opportunity to build out that. But that's not all. We're also focused on continuing to build our presence in the Greater Bay Area. It's been a good business for us.
To give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
I'm Mark Crumpton with Bloomberg's First Word News. Saying America is back, President-elect Joe Biden announced several key cabinet positions today. He introduced the team of foreign policy experts he plans to nominate to his administration, led by Antony Blinken as Secretary of State. Mr. Biden has promised to seek unilateral approaches to problems like climate change, the coronavirus pandemic, and arms control. He said his team is looking forward to the United States reasserting its role as a world leader. President Trump made a very brief appearance in the White House briefing room today. He hailed the Dow Industrials passing the 30,000 mark, calling it a sacred number. Mr. Trump also said he was thrilled with progress toward developing vaccines for COVID-19. The president did not take questions and did not mention the election. Mr. Trump has refused to concede to Mr. Biden, although the White House has given approval to begin the transition process. Some Senate Democrats are calling on YouTube to take down videos with what they call false and misleading information about the election. In a letter, the senators say because President Trump refuses to commit to a peaceful transfer of power, quote, misinformation and manipulated media content on your platform may fuel civil unrest, end quote. YouTube prohibits videos that incite violence, but says it allows clips expressing views on the outcome of the election. New York City will have vehicle checkpoints at key bridges and crossings and will strictly enforce the travel quarantine. The sheriff's office announced today it will conduct spot checks when out-of-state buses drop riders off at the curb. Test and tracing teams will be on the ground to direct individuals to testing sites and provide education on quarantine. Violations of self-quarantine may be enforced and may carry fines of up to $2,000. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
2 p.m. in New York, it's 7 p.m. in London, live from Bloomberg's World Headquarters. This is Bloomberg Markets The Close. I'm Caroline Hyde.
And I'm Taylor Riggs. From Main Bostic is off today.
And he misses a sacred day. President Trump tries to claim some sort of victory as the Dow rallies to a record level of 30,000. But of course, it's actually on the potential transition, smooth transition, and formal start of the Biden administration that has investors cheering. Oil tops $45 a barrel for the first time since March, sending energy companies higher. Bitcoin back above 19,000 for the first time since 2017. Meanwhile, we're back for more. Janet Yellen set to shatter another glass ceiling as Joe Biden's Treasury Secretary. What the pairing of her and Chair Powell could mean for the recovery's road ahead. And uncertain American consumers. Confidence falling for a 3-month low now as views on the business climate and outlook for jobs dim. But it's not enough to spoil Best Buy's results, what it could all mean for Black Friday. All that, so much more coming up. But Taylor, first and foremost, let's look at these markets. Let's look at these record highs, at these numbers that have never been seen. A sacred number, 30,000, 31, 85 right now, up 1.5%. The Russell 2000 also at a record high, 1.86%, maybe slightly less sacred though. But we overall see the movement into risk assets, the movement into the reopening trade as we see talk, of course, of the Biden administration now being able to formally move over and be able to hit the ground running come January. It would seem the Treasury curve is steepening up some 2 points. That as we see talk of Janet Yellen taking over as the Treasury Secretary. More fiscal stimulus is the hope that the markets are baking in. Meanwhile, Bitcoin, check that out, up 4.6%.
Caroline, you talk about all the positives. I'm a classic New Yorker. I'm just going to go right to the negatives today. For that, we're going to start with gold. Take a look at this terminal here. Gold, of course, breaking the level of 1850. So quickly then falling below 1800 as well. And it's just above that 200-day moving average. So Matt Maley over at Miller Tabak saying that 200-day moving average had a lot of support in March. Make sure to watch that level as you get further weakness in gold today. You're also getting weakness in the dollar, Caroline. Typically, we do the DXY, the math is a little bit better. But for these purposes, I wanted to do DXY. Remember, yesterday we found very good support at 92, falling again today as well, rolling over just a little bit. Again, looking at that 92 level. So, Caroline, today for me, it's all about those key support levels.
Oh, such a downer, Taylor. We need to keep ourselves balanced. And for more analysis now, let's get the take of global investment strategist Simeon Hyman with ProShares, who joins us from Demarest, New Jersey. Great to have you with us. And Simeon, are you as buoyant as the rest of the market is? Hopes that we'll get fiscal spending, hopes of the administration becoming clear. Is it just about certainty that's helping drive the cyclical trade?
More or less as buoyant. So the vaccine is the biggest and most important news. Second to that, a divided government. Equities have always liked gridlock. You tell me what the rules were last year and don't change them, and that's what equity markets like. So, if Georgia holds up and the Senate's in Republican hands and we have a divided government, that's a good sign. Of course, today is a little bit of relief rally with respect to a smoother transition. So that anxiety is being put in the rearview mirror. But I think the choice that's been put out there, which is it's either growth or value, is a little bit of a false one. From our perspective, the better rotation might be to what we like to focus on as quality. One way to get there are consistent dividend growers. That quality basket, that stuff's as cheap as value, much higher much higher fundamentals, better balance sheets, better credit ratings. And the S&P 500 dividend aristocrats, as an example, consistent dividend payers, they've outperformed not just the S&P, but value too, since this rotation began early in September.
Interesting as we talk about that rotation. We're also looking at the rotation outside of equities as well, with the 10-year and the 30-year getting an additional lift. How do higher yields, if you think that's coming, fold into some of the equity analysis?
The higher yields are almost for sure coming. Now, I think with regards to equities, from these levels, that has historically been a pretty good thing, because until you get substantially higher up there, we're talking high single digits, a increase in interest rates and treasury rates is usually indicia of a recovering and strengthening economy that will be good for equities earnings will come through. So if you see the 10-year go from 80 bips to even 150 bips, that's probably pretty consistent with still a pretty decent equity market.
Simeon, of course, you are global investment strategist. So how much, as Taylor was pointing out, the dollar on the downward trajectory, are you seeing opportunities abroad at the moment, particularly as, well, hopefully the global reopening is what we're looking for?
For sure. I mean, look, both developed and emerging markets are cheap. You always have to be careful with saying they're cheap because they're always cheap. Yeah, as an example, Europe has traded at an average 30% price to book discount, but we're at about 50% right now. So things are cheap. And indeed, it appears that at least a modest decline in the dollar is at hand. What I would suggest is, listen, if people just got to, let's call it benchmark weights in their portfolios to international assets, that's probably not a bad idea. And remember, if you look at the world equity markets, something like 25 or 30% are developed international, about 10% are emerging. It's probably a good bet that most of the people watching are well below that. So without even going to the overweight camp, just get back to neutral, if you will, is probably not a bad idea.
How do you think about gold at this point?
The gold trade is certainly related to the inflation trade. So there is a chance, and you talked a lot about fiscal stimulus, and there's a long history of fiscal stimulus taking a little too long and almost exacerbating the business cycle. I think we have so much excess capacity from this very unique pandemic that, the odds of some sort of hyperinflation scenario is incredibly unlikely. But, back to what's likely to happen, even a 50 or 75 basis point increase in say, the 10-year yield in the U.S. would seem very, very possible in the next 3 or 4 quarters. And that's one of the reasons that the dollar will likely be a little weak, and that people are heading over to gold as a safe haven. Frankly, I think if you're really worried about the dollar, why don't you just hedge it outright as a more straightforward alternative? But you certainly can't argue with the logic that some of the gold folks are talking about right now.
You can't argue with the logic of what we've seen in terms of unquestionable trends. Simeon, I know you've kept an eye on e-commerce versus bricks and mortar, important on a day like today where we get Best Buy and, of course, when we look ahead towards Black Friday.
Yeah, tons of news this week. We've got Black Friday coming. There are a number of things that we can talk about here. I think as you think about this rotation, one of the things that we're suggesting is don't completely abandon that growth sleeve of your portfolio, but perhaps focus on growth opportunities where there's a real secular and enduring trend. We think for sure that e-commerce fits that bill. I'll start with just what's really surprising to many people. The e-commerce report came out last week. I have no idea why the U.S. Census Bureau does it, but that's who puts it out. 14% of all retail was online. I think if you ask people, they would think it's 50, 60, 70, 80. But it's growing 30 or 40% annually, so much faster than brick and mortar, even notwithstanding the pandemic. So I think it's an incessant trend that's accelerating, but it's got a long way to go. Mm-hmm. With respect to the holiday season as it emerges, a couple of things that are interesting to think about. First, there was a very interesting announcement yesterday. Ahold announced the intended acquisition of Fresh Direct. If you're in New York, you've seen the trucks all over the place. I would argue that tells us two things. Number one, absolutely an indication of the dramatic acceleration of grocery penetration, part of that pandemic acceleration, but it's also an indication that brick and mortar folks have trouble doing it themselves. And those Best Buy earnings today, 173% increase in online sales. Guess what? Stock is down, their margins shrank. It's tough for the legacy players.
So many ideas. Always great to have them. Simeon Hyman, Global Investment Strategist at ProShares. Thank you as always. And this comes as we talk about that reopening trade. French President Emmanuel Macron talking about how the lockdown might ease gradually from Saturday. So from December 15th, the lockdown can be ended, that they have passed sort of that second big peak that they have seen, looking now for further reopening. This is Bloomberg.
Every era presents its own unique set of challenges and opportunities. Trade CME Group futures with interactive brokers at low cost and seize the moment. Start investing today at interactivebrokers.com.hk.
Further economic data this morning, this time consumer confidence in Caroline, frankly, doesn't look good. A big drop to 96.1. That's below estimates and down from a 100.9 level last month. Perhaps more scary, Caroline, the present situation and expectations also falling.
Yeah, that's one to really dig into. In fact, Lynn Franco, the Senior Director of Economics Indicators at the Conference Board, wrote in their release today, heading into 2021, consumers do not foresee the economy nor the labour market gaining strength. The resurgence of COVID-19 is further increasing uncertainty and exacerbating concerns about the outlook. Well, let's dig into the data and let's dig into perhaps what this hope that we see of a vaccine and hope of fiscal stimulus will mean for all of this. Conference Board's chief economist, Dana Peterson. Wonderful to have you with us, Dana. And I mean, it strikes me as pessimism in the short term really rearing its head. What do you think? It's obviously the COVID crisis. But do you think it's necessary? Do you think it will remain as we start to see this hope for a vaccine?
Well, certainly when we look at the data, consumer confidence is still pretty well below what we saw back in February. And indeed, we did see a drop on the latest reading. But I think once people feel more confident that there's going to be a vaccine, and more so that they'll have access to this vaccine, that there could spark an increase in demand and consequently consumer confidence. But again, that's going to depend very heavily upon when people can actually get their hands on that vaccine.
Talk to us a little bit about not only the numbers that we got, but the present situation slipping, as well as expectation declining as well. How do you think about expectations going forward declining?
Well, certainly it makes sense when we look at the data. So initial jobless claims at the time of the survey, and our survey ended on November 13th, initial jobless claims had been up a little bit, were rising. Even though the unemployment rate had fallen, we still had about half of the jobs still unrecovered from the initial losses back during February. We also had coronavirus cases rising around the country, and indeed in some areas that thought that they had arrested the virus, certainly in the Northeast. And so when you tie those things together, many people were just not very excited. And certainly when you look at expectations, it was a downgrade in both business expectations for what businesses would do and also the labor market. And those two things are tied. When people feel that businesses are not going to do well, they translate that into what does it mean for me in terms of my job prospects? And so indeed, there was a sense of increased pessimism when we took this survey.
But Dana, now a few things have changed, and we're anticipating under the new administration a Labour-focused economist to come in, one that we know and very well, of course, Janet Yellen, likely to take the Treasury focus. Does that spell good news from your perspective in terms of the way the labour market trajectory might look? Because, of course, there might well be scarring in terms of the economic damage that we've seen from COVID.
Sure, and we would agree that, yes, there probably will be some scarring. There will be some folks who left the labor market permanently, either due to COVID, because they lost their jobs, or because they decide to retire early, thinking that, this is a quite dangerous virus. I don't want to get it. I can afford to retire or retires. And you will have people who will have their skills erode, certainly from being away from the labor market. But in addition to the vaccine, I think good news for the consumer would be if there's another round of fiscal stimulus. And certainly it seems that Congress, as well as the incoming administration, are both constructive in terms of passing another bill. The key is what's the size and whether that will include notable increases, or rather another round of direct payment checks to households, and also if the extended unemployment benefits at the federal level will be replaced after having fallen off back in the summer. So I think certainly if the labor market continues to improve, you have a vaccine plus additional fiscal stimulus, all those things bode well, certainly for the consumer heading into certainly in the next year, early in the next year.
In that consumer, it's really interesting on where consumers are planning to spend and what they're planning to spend money on. Notable is major appliances. I don't know how many more home upgrades I can do, Dana. I'm dying.
Well, we also noticed that in the survey that despite the bad news and the headline figures, people are still looking to buy cars and homes. So, if you buy a home, more often than not, you're going to have to replace that refrigerator. And the reason why people are looking to buy autos and homes is because interest rates are very low. Certainly people who are in the upper portion of the K-shaped recovery, there's pent-up demand among them. And also, when we think about people wanting to travel, they may not necessarily want to get on a plane, but they might want to buy a car and hop in and go on a short excursion. And so there's still quite a bit of demand for housing and also cars. And so we're actually not surprised by that. And we think that that's certainly good news heading into the holiday season.
Dana Peterson, Chief Economist at the Conference Board, thank you as always for joining. And coming up, President-elect Biden taps Janet Yellen to lead the U.S. Treasury. But as for Jay Powell, a new chief in the White House may not mean a new chair at the Fed. We discuss all of that next. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We know, of course, we get maybe Janet Yellen as Treasury Secretary, and this really means that you can go big on a stimulus. And here is a great chart that we have about showing lower than longer interest rates, expansionary government spending. These are all policies that she's looked at, all in hopes, of course, to get us that ever elusive 2% on inflation. Then, of course, what it means for the Fed and some of the stability that we continue to see within the Federal Reserve. For more, let's bring in Yelena Shulyatyeva, senior U.S. economist for Bloomberg Economics. Yelena, we've talked a lot about the changes within the Treasury Department. More stability continued. Jay Powell at the Fed?
I think so. I think it makes a lot of sense to just, renominate the current chair for the position. The term is not expiring until February 2022, but the decision the president will need to make will have to be made sometime next year, towards the end of the year, to just make sure there is enough time for the markets to process it. I think it does make sense to renominate the current chair, because you don't really change the horses in the middle of the stream. So, and the current chair has been praised from both sides of the aisle for excellent job during the crisis, like earlier this spring. So I think Janet Yellen and Jerome Powell will make an optimal pair to lead the economy out of the crisis next year. And I think, obviously both nominations are subject to confirmation by Senate, but I think both would make quite a smooth confirmation process going forward.
And seeing once again perhaps some unity between fiscal and monetary policy as we see it sort of spike away from each other in that surprising move last week by Treasury Secretary Mnuchin not extending some of those programs despite Powell's wishes. Yelena,
theorize for us a little bit more, because many were thinking it might be Niall Brainard who was going to be coming over potentially from the Fed to the Treasury, but that hasn't happened. What does it mean by the people staying at the Fed?
Well, they'll just keep doing what they have been doing. They will be in whatever it takes mode. It made a lot of sense for Lael Brainard to stay at the Fed because simply because, you know, if she were to leave, then, the replacement would probably be not that much from the, dovish circle, and it could have been potentially, I should not say dangerous, but, slightly unnerving. I think now the current composition of the Fed is really strong people, strong economists, and other policymakers, which will again remain in whatever it takes mode next year. And remember, they will not only oversee the economy coming out of the crisis, but they will also oversee the policy becoming normalizing, and also, they will see the first increase in interest rates.
Yeah.
That's why I think continuity is really important.
And markets love a bit of continuity. Yelena, we thank you, Yelena Shaliacheva of Bloomberg's Economics. We now want to get a quick business flash headline. Let's take it over to Taylor.
And it's all about that reopening trade. But unfortunately, things are going to get worse for the airline industry before they get better. This is according to the International Air Transport Association. The trade group estimates that airlines will lose almost $39 billion next year. That's more than double the forecast in June. And that's on top of a $118 billion deficit in the current 12 months. Airlines are hoping that the rollout of vaccines will lead to the lifting of travel restrictions, don't we all? Goldman Sachs also planning a European stock trading platform in Paris. The aim is to make sure clients can still buy and sell shares even if there is no post-Brexit agreement to allow dealing in London. Goldman has asked French authorities for permission to start in January. And Caroline, what stood out to me is the Goldman Sachs head of electronic equities trading said that they think that London could lose most of the trading volumes in EU stocks. Right now, a third of those take place in London.
It really is becoming more and more painful situation. The post-Brexit reality for the UK, they thought that there'd be checks and balances in place for the financial industry. Such a money spinner for London, such a money spinner for the UK in general in terms of taxes, but it looks like they will lose most of it. Elizabeth Martin, once again, giving an interview to Bloomberg as she zips around London in her high-speed Mini as well.
Stocks are record highs. Meantime, this is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health.
we must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
I'm Mark Crumpton with Bloomberg's First Word News. Saying America is back, President-elect Joe Biden announced several key cabinet positions today. He introduced the team of foreign policy experts he plans to nominate to his administration, led by Antony Blinken as Secretary of State. Mr. Biden said his team is looking forward to the United States reasserting its role as a world leader.
And my national security team will be coordinated by one of the youngest national security advisors in decades. Experience and leadership, fresh thinking and perspective, and an unrelenting belief in the promise of America. I've long said that America leads not only by the example of our power, but by the power of our example. And I'm proud to put forward this incredible team that will lead by example.
One position Biden did not mention is Defense Secretary. Former Undersecretary of Defense for Policy, Michelle Flournoy, has been long discussed as a favorite for the job, but the Biden administration has not released a name. The head of the European Central Bank says prospects of a vaccine against the coronavirus raise confidence that unnecessary economic damage can be avoided. But speaking today, ECB President Christine Lagarde said there's no doubt the pandemic will have a long-term impact on the global economy.
It is clear that COVID-19 will cause lasting changes to our economies. It will not necessarily sap our economic potential if we act powerfully, but it will cause sectoral and societal shifts against which we have to guard and be prepared.
According to a new ECB report, governments and central banks face a tricky balance between shocking the economy if they end the pandemic support too soon and undermining it if they keep the measures in place too long. Princeton University says all undergraduates can come back to campus for the spring term that begins in February. The Ivy League schools said it made the decision after establishing an on-campus lab and cultivating strong public health practices. But returning to campus doesn't mean an end to heavy restrictions. Parties and most other social gatherings will be prohibited. Masking and social distancing requirements will apply throughout campus. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Bloomberg Markets, The Close. I'm Taylor Riggs.
And I'm Caroline Hyde. And it is 2:30 p.m., which means it's commodities close time. Let's have a quick look at how oil has been powering higher. This risk-on flavor, the fact that we are getting signs of this handover, this transition of power between, of course, the President Trump and President-elect Biden, gives hope to the market, gives hope for fiscal stimulus, gives hope to the oil market up more than 4 percentage points. We notably also see copper on the rise on the back of the same similar issues that we're seeing. And we're seeing copper closing on its highest price in 6 years at the moment. Check it out, $332. Gold futures, though, not catching a bid, down by 2 percentage points. The haven's out of vogue amid this sudden sense of clarity and some sort of progress. And I look at a slightly different one, cheddar. Going to have to talk a bit of cheese. While the cat's away, the mice will play, and Remain's out, and I thought I'd be looking at the 1.2% higher on cheddar at the moment. But actually, this is not a pretty picture for cheese prices. They've fallen 40% this month, Taylor. Apparently, it's all because we're not going out, we're not eating, we're not going to restaurants in the same way, and so down it plummets.
I'm about to lose this and just bust out in hysterical laughter. Let me try to get us back on track and go back to the markets. Caroline, take a look at shares of analog devices. They were down as much as 2%, but look at this climb all the way back up, just now breaking even. This is after we heard from the company with their fourth quarter results. Beat expectations, $1.53 billion in revenue, adjusted EPS of $1.44. Analysts also really liking the strong outlook. First quarter revenue guidance also $1.5 billion. RBI analyst Caroline saying that chip demand is recovering, and really it's the strength in 5G and data centers. That is the driver of growth going forward.
And one that's here to stay, I'm pretty sure. Let's get more on this. We've got an exclusive for you now, an interview with Analog Devices President and CEO Vincent Roche. Great to have you here with us, Vince. Thanks so much for your time. And, well, congratulations on the numbers. You say a broad-based recovery is underway and that you're going to expect to build on it in 2021. Has it surprised you, the recovery? What are you seeing in terms of that focus for 2021, and despite the lack of fiscal stimulus here in the US, for example?
Well, great to be with you, Caroline. So when I look at the business, we're very diversified as a company, of course. We're mainly a B2B company, but we supply everything. We supply chips in automotive, factory automation, healthcare, and of course, communications infrastructure. And the first half of our, let's say, fiscal 20, which finished at the end of October, was really about healthcare, data center, build-out, advanced communications, 5G. That has really persisted through the year. And in the second half of our fiscal year, with the increase, the confidence, that was registered in the PMIs, for example, we saw the factory automation business come back into action. And in the fourth quarter, of course, automotive came storming back. So, I think with GDPs getting back into positive growth territory again, my expectation is that the strength we're seeing now will carry into the new year. And I would expect that 21 will be a growth year for the semiconductor industry as well as ADI. And of course, semiconductors are the foundation for the entire information industry. That reflects as well, I think, on the positive outlook for that industry as a whole.
Yeah, on that outlook for returning to growth levels, are we back at pre-pandemic levels? When will we get back to pre-pandemic levels? I'm thinking really the consumer-focused segments like automotive, for example.
Well, our fourth quarter actually registered, the auto industry has been suffering with declining SAAR for several quarters now. But we actually saw in our fourth quarter our revenues reach in the automotive sector pre-COVID levels. So I think there's a couple of things happening. Obviously, we're beginning to tame the pandemic. Confidence is emerging in the economy. And, I think as well, the usage of cars will probably see a decline. The use of cars will increase. We'll see a decline in the use of public transportation. And a couple of countries in Asia actually registered all-time record sales in September. So I think some of it's catch-up and some of it is a change perhaps in behavior.
Yeah.
We'll also see, I think, the surge of electric vehicles.
Yeah.
In the next several years. It's still a very, very small part of the overall automotive sector, but that is likely to see an enormous exponential increase, I think, over the next 5 to 10 years.
And how are you set up for that? Because, I'm looking at Tesla, $500 billion valuation. EVs are what we've been discussing all week, and a large part, the moon music is getting better here in the US because of the new administration. But electric vehicles, how much of it's going to be in part of your business?
Yeah, well, today we have a leading position in the manufacturing, design and manufacturing of very, very precise battery management control systems. So battery management that enable us to sense right down to, thousands of a volt and to enable the battery to move megawatts of power in a very short period of time in a very controlled way. That is the trend. So the solutions we're providing and have been providing now for many, many years, these battery management technologies, they are the foundation of the power plant of the electric vehicle. So it's a relatively small part of ADI today, but my sense is it will grow to perhaps several percentage points of our revenue over a 10-year period.
Is 5G, from your business perspective, all it's cracked up to be?
Well, I think 5G is in the very early stages of deployment. We've seen an upsurge in 5G over the last year and a half or thereabouts. It's still very much a technology that is targeted at the consumer. What we will see over the next kind of 3 years, mission critical applications like healthcare, like factory automation, are going to see the deployment of 5G technologies in these, what we call deterministic communications applications. So I think it's a big deal. It's very, very early stages. And I believe in 2021, we'll see what has really been a Chinese and Asian deployment of 5G over the last couple of years will move into America, and we'll begin to see the emergence of 5G in earnest in this region here.
Vince, I remember the first time you came on with us earlier this year was when you were announcing the Maxim deal. Any more M&A we can get excited about?
Well, look, we're in the process of, we've gotten the approval of shareholders. The Department of Justice in America has approved our deal. We're now in the throes of getting approval in the EU and China. So the foreseeable future for us is about getting this deal closed and integrating Maxim as fast as we can and making it a very critical part of ADI's future.
We wish you well with that. Amazing that you've been in the business now since 1988. I'm pleased to say that you're with us today, CEO, Analog Devices President Vince Roche. Great to have some time with you. Now, let's have a quick look at what else is coming up, because there's a lot to like about Dollar Tree, apparently. Why Wall Street was particularly impressed with the discount store's third quarter results. It's our stock of the hour. That's next. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor.